All right. Good morning, everyone, and welcome to the 5ers Live Trading Room. I hope you're having a fantastic Tuesday morning or Tuesday maybe afternoon if you're in Australia. We got Henry in the comments. What time is it? What time is it in Australia right now? I want to know. Let me know, guys, in the comment section. Let me know where you're from and what time of the day is it where you live. I want to see, like, because we start this and I'm like, good morning. I grab a cup of coffee and I'm all good morning. But what if most of you are not? What if it's not morning? What if it's not morning? You know, it would be very weird to say good morning, but I don't care. Good morning, Henry. We got Russia 11. Oh, we're in the same time zone. Bangladesh 2:37. Okay, so I'm just gonna say good life. Yeah, good life to you all. Right. So what are we going to do today? Well, I got some exciting news. I'm in profit. This is exciting news. Let me just pull up TradingView here right away, and we'll jump into the charts. We got right here. This is we're looking at USD CAD. So we got USD CAD right here running very, very nicely. So this has been a trade that I'm sure you guys might be tired of me talking about, but it's a trade that I've been watching since this the beginning of this summer. It's around, maybe even back, we started looking at it in May or in May when it broke down, and then this summer when it kind of started to had that range on top of that range. Remember, we looked at 3-day and the weekly and how we saw a very clear shift in market structure here for USD CAD. It's now breaking out very nicely, and I'm going to switch over to my MetaTrader. I got the MetaTrader here to the right of me, and we can go in and kind of look at how I'm gonna change stop losses on this one. We had it long on gold. You can see on history right here, we got a couple of good, we got a very nice trade here on gold. Unfortunately, I had the EA taking a position on gold right on the market open on Monday. Which was obviously not the best idea. Lost $300 on that one. And then on the manual trade from yesterday, made $700 on that one. And then the EA got caught on a Euro JPY long. And that position did not have a stop loss. And if we look at that position, it entered me in a long. Basically, by the way, look at that trade right there. Bought this one right there, all the way up. Boom, sold it right here. So the EA entered the trade right here around the 11th of September, the 13th of September, and then closed it right here on the 8th of October. Really good trade. But they didn't enter a long trade right here. And that trade was entered without a stop loss. And obviously looking at the gap down here and the downside pressure that we're seeing on Euro JPY and the potential strength coming in from on the yen pairs, or actually on the yen, Japanese yen, because of the new prime minister. I haven't really looked at the details on this, but I think it's the first woman prime minister in Japan, and she's very pro. To put it very simply, what she's doing right now is good for the stock market, I believe, or not, whatever. It's good for the yen. Most likely we're going to see a reversal in the long-term trend that we've had on yen pairs. But that was not what I was supposed to be doing. We're going to look at USD CAD trade right here. As you can see on the trade history, you see I got a Euro CAD short here We're going to look at that one. But then all of these are the positions on USD CAD. So right now we're floating about $1,000 profit on USD CAD trade right here. And as you can see, I have entered quite a few positions on this one. Unfortunately, I took a short hedge on this one, as you guys might have remembered, and I forgot to close that one when it broke out. So I actually lost $400 on the hedge, which means I would be up about $1,500 on this trade, and it's on a 40K account. So it's 400, 800. That's between 4 and 5% in profit on this trade alone. Now I'm gonna be honest with you guys. This is probably, and by the way, we're gonna have LJ coming in shortly. This is probably one of the best trades I've taken this year. This together with the USD JPY trade. And I'm not sure if you guys remember that one, but we looked at USD. USD JPY a while back. That one was also like a 5% win. If this one hits TP up here, I think it might actually be a 10% win, which means that in only like 3 or 4 months, with only 2 trades, being the USD JPY trade and the USD CAD trade, that would have been between 10 and 15% in profit in trading for only 3 and 4 months. And that's my goal in trading. That's the way I want to be trading. But then if you look at my history, there's going to be so many more trades that I'm not really supposed to be taking, but I take them anyway, because we're all humans and we're stupid, right? That's what we do. I'm not stupid. I'm just less smart. Okay, let's put it there. We got very smart people, and then we have people like us, like myself, less smart, making more dumb decision basically. Right. So how are we going to manage this trade right now? Now, honestly, I feel like doing all of this on MetaTrader is just very confusing. But you can see I got 1, 2, 3, 4 positions, and what I've done here is I've the initial risk on this trade was 0.25% on the account. I'm now up to, I believe, like 1%. So at this current rate, I've started risking 0.25%, and I'm potentially going to win maybe up to 10% on this trade. And the way I've done that is I've averaged in to winning trade. I never average into losing trades. I always add to winners. I never add to losers. So you can see here that this position was the first one because we got a break and a retest. Okay, first position, that's a break and a retest. And then I saw strength coming up. No, actually, the first one was on a breakout. So first trade, breakout, enter a small position. Then it came down. Let me zoom in so you can see clear. So you had a breakout. I entered the first initial position right here. Then we had a retest of the breakout area. I entered more of that position. And then we had a break out of the above the previous high. So I entered a third position. And then we had another breakout above that high, and I entered a fourth position. Okay. And what I do is on every sign of strength, when I see that there's one more breakout, I add to the position, and at the same time I move my stop loss up. So I move the stop up, and the risk that I remove, I add it to the current position. So now what I want to do is I want to try to calculate does anyone know if there's any way to I'd like to easily calculate what the loss of the trade is currently. So the way I do this is then there's probably many better ways of doing this. But what I do basically is I go down where I have the stop losses here, and I try to move them in a way where they're not as close to each other, so that I can actually hover my mouse above it. Now, this might be a really, really inefficient way of doing it, but you got to use whatever you have, right? And someone in the comment might have a better solution for me. But right now, what I want to do is I want to hover my mouse over the first one, and we got a minus 378. And then on this one below, we got minus 29. So let's say minus 30. And then we got minus 95. And this one is minus 233. Or let's do 34. This is a really good question from my co-suck. Let's bring that up. How do you manage to swing trade? How do you manage to swing trade on the prop account given the daily loss limit, etc.? So I do not swing trade on a high stakes account. Okay, so the high stakes account, they have a trailing stop loss of, I believe, 5%. So if you hit, which means basically, if my USD CAD trade goes up 5% in unrealized profit and then goes back down to entry, I'm going to hit the daily loss on the hypergrowth account, on the high stakes account, and I will lose the account. Hypergrowth has a fixed daily drawdown, which resets once a day at midnight, I believe. And so if you're up 5% unrealized at midnight, and then throughout the next day you go down 3% in profit, then yes, you are going to hit the daily loss on that account, but it's only going to be a daily pause. It's only going to pause the account for 4 hours, so you're not going to lose the account. But you have to pay attention to that, right? So the way I pay attention to that is doing the exact thing that I'm doing right now. So I go through the positions. Obviously I have all the stop loss in the right area, but to make sure that I calculate the loss on this, I have to first um, make some space between the stop loss and then hover my mouse above it so I can actually see how much am I going to lose on all of these positions. Then I bring up the calculator. I'm sure someone maybe LJ could do this in his head, but I am not a.
Right.
Up, LJ? How's it going?
Going well. Sorry about that, guys. Had to move the car. Had to park ages away and walk all the way back. Absolutely no parks at the minute. So, how are we doing? What are we talking about?
So
What have I
right now I'm
missed?
just calculating what my total loss on this position would be if we go down and hit all the stop losses here. So I just calculated all of this together, and the total loss of all the stop losses combined is a minus 737. So I'm just going to put it at 800 to make it simple, because 800 would be 2% on the account. So I want to bring this down to 400. I want to bring this down to 1% on the account. And the issue with this one as well is, I'm up all of this, and if price moves down 3% on this position, then I will hit my daily drawdown. So basically, what I'm looking at here is, okay, so we got 0.26 slots, 0.23, 50. So that is those together. I'm just thinking out loud here, but if I
Are we
put
just calculating for the open trades, not for the orders as
just
well?
for these are all the open trades. There's no limit orders
Just
here.
open.
Yeah. So I'm just looking at
Yeah,
so, okay, so
I was
that's
just seeing your other orders
right. Oh,
down
right.
there.
Yeah. No, just
Yeah,
these
yeah,
ones.
yeah.
So I got, okay. So that's the middle line between that. So that is a 50 lot. And then that would be a 1 lot. So that would be a 1 lot,
We're
and
doing
that
it
would
now.
be a 50 lot. I'm trying to see what my average entry is. So 1 lot, 50 lot, it would be around somewhere around that level. So my average entry would be somewhere around here. Is what I'm thinking.
Do you not have the total loss indicator?
No.
for MT5. It's on. There's a 5ers one that they made themselves. It's on the dashboard, in fact.
All right, I gotta look that up.
Yeah.
But now, for now, I'm just trying to figure out where my average entry is, and I think my average entry is around here, which means if I go down to that level right here, that means I will lose $1,000 in floating profit, which is going to be about 2.5%, which means I'm safe for the daily loss. And I also, if I move my stop losses up here, that means I reduce my risk from 2% to 1%.
Mhm.
And looking at this as this is the daily, I probably want to look at perhaps exiting the trade if we break down. So for now, I'm just going to move my stop losses up here to make sure I'm safe from the daily loss, and I'm also securing this trade for a 1% loss instead of a 2% loss. So now I'm also looking at USD CAD here from the perspective of the 4-hour. What's the likelihood? What I'm thinking here is like, what's the likelihood of going down, taking out that low, and then continuing higher? We're hitting a resistance right here. I'm gonna not be greedy here and make sure I got my TP below those wicks. Because now that the trade is actually running in my favor and everything is starting to look pretty good, I need to think about the profit. But this is obviously the bigger issue with trading prop firms. Like if this on my private account, I don't have to care about this. I just enter the trade and I let it run and I move my stops up, and I don't really care about how much I'm losing on a day-to-day basis. So what are you thinking on USD CAD?
USD CAD. Sorry, I was replying to Mike before. Let me look at USD CAD. Also, Mike, if you're in the background, if you're listening at all, Sharonda here was asking about the lot size calculator. I know Mike has a very good one. There's other stuff like magic keys, that kind of thing that you can use, and you get there's a physical version which you can actually do. Otherwise, they have a. It comes with the terminal version, or you can buy just the terminal version. It does cost something. Same with the one that Mike has, which is quite extensive as well. I forget what it's called though.
I use this one, the position size calculated from Earn Forex. This is perfect. It has everything that I need.
Yeah,
you just put in
that one's free.
Yeah, this one is free. You just put in TP stop loss, and you can do everything from this one. That's the one. That's the one I'm using.
Nice. Yeah, because there are heaps of free ones as well. Obviously, some of the paid ones have more extensive tools built into them. Obviously, that's why they're paid.
Yeah.
But yeah.
So what would you do? What would you do in a situation like this? Because right now I am considering the account size and everything. I'm up a good amount on this one, and I haven't taken any profits on this. So what I'm thinking is maybe it's time to actually close one of these positions. Just take some profits and make sure that if price just absolutely dumps and start going against me, I would have at least have gotten out with let's say if I close this one, for example, I would have made about 1% on the trade, even if price comes down and takes me out. And I think there's that's something that I'm really lacking in my trading, and I'm very good at. I'm almost a little bit too good in keeping my positions open and not exiting too early. So what I see a lot of times is price maybe it gets rejected here, and then I'm like, okay, I see price go all the way down here to it gets rejected here, and then it goes all the way down to my stop loss, and I haven't made anything on it.
Also, yeah, I will say, Rahul, I've seen these, so I'll jump to them shortly as well. As far as dollar CAD, Jonatan, I can see. So basically, my scope for this is up to about 141.40. Right? Where are your topside TPs? I can't quite, at least on the stream, see the.
Yeah, that's around
141,
145, 141.50, I believe. Let's see, where's the TB? Yeah, so
141.50. Yeah, okay.
45.
45. Yeah, so
Yeah.
45. That's roughly what I'm seeing as well. It's like the one of the swing lows from that higher cluster of price action that we had.
Exactly. That's where everything kind of accelerated, and I want to see price get back and kind of test that area.
Yeah, so I can definitely see that. I also see that potentially we do get a bit of a rotation, dollar coming back down.
Yeah.
However, I'm seeing it very mixed across different assets. So things like euro dollar, we're still printing lower. There could be a bit more to go, but I also feel like we're starting to stall out a little bit. So when I look at dollar CAD, I'd say very much, yes, we're still running higher. When I look at the dollar complex overall across other markets, I can see potential reversal. Same with pound dollars starting to stall out, and we might get some kind of retracement. Dollar yen, like we spoke about, there's increased pricing for closing this gap that all of a sudden has come out of nowhere, like very aggressively. However, you've got this weird mix of risk-off stuff going on right now and pre-positioning for risk-off. Same deal how we've seen Aussie dollar come back down, right? After Friday's kerfuffle and yesterday's sort of digestion of that, we've seen the indices come off today. So NASDAQ has fallen further. I was looking to hold this trade to right down here. This is on the NAS. We're looking at 4 hour right now. If we go down to 15, I'll give you guys a clearer picture. But I have since exited this up here, right? Once we didn't sort of punch through that low. Because I'm also seeing, we seem in a weird transitionary period right now. There's sort of printing of both sides of some risk on, risk off type elements and a lot of a very like uncertainty kind of period. So if we purely look at dollar CAD,
sorry, I gotta jump off. I got a traders interview, so I gotta jump off. Pedro will be here, I believe, in about maybe 30 minutes or so. But I just want to before I leave, I was going to say I did close one of the positions on USD CAD because I remember I had I've had this conversation with myself over and over again. Like you have to take profits when the market gives you a good run, and you got to pay yourself for the work. And this is also the so I've taken 1% profit on this trade. I'm moving my stop loss up slightly. So at least I'll make some money, or I'll make, I'll either make 1% or I'll make 5%, which is much better than going up on like 9% unrealized and then down to -1,
That's what I was going to say, because basically, final summary is that I can see very much US dollar CAD is still running hot. So I would stay in it. And my suggestion was going to be just take some chips off the board, let the rest run.
Yeah, I think that's most of the time the best thing to do, and I'm trying to learn to do that because as I said, a lot of times I've seen I'm giving back too much unrealized profit, and then you look back and you're like, well, just because you have a TP doesn't mean price has to go to that level before it reverses. So you kind of have to be a little bit more active with following price. Anyway, I'll get back in the live stream later. I'm gonna do a quick traders interview, and I'll see you guys in a few hours.
Easy peasy. All right, see you, man.
Take care.
Ciao.
See you.
Ciao, ciao. All right, guys. I'll come back to your stuff now, Rahul. First of all, you guys give me 10 seconds. I got to turn my aircon on because it's very hot here. So. All right, we're back. Here we are. Okay, Rahul. So you bought Aussie dollar. So what I will say is Aussie dollar has come down to today's sort of extension of price. So the support level S3, typically you only make a move at the extremes to about the S3. S4, S5, etc. is, some kind of outsized day, something adverse has to come into the market. So we are at general support right here. What I will say that I don't like is the fact that we have drifted off so hard in sort of preemptive risk-off moves. There's also been a bunch of pricing for downside risk in options right now. I was looking at buying Aussie dollar myself here. So I will say that. But just like I was saying before to Jonatan before he left, we seem to be in a kind of a confused transition period right now across a number of assets where the market's got a bit of indecision and not entirely sure what direction we want to drive. So assuming you got in somewhere around these prices, I would just lean on this bottom. But if we start breaking further, I would be cautious on re-entering longs. I'd probably let this sort of play out until you get a stronger support candle, a stronger base. So we're actually not that far from the dip low from Friday, right? So I'd want to see a deeper retracement if we do break that to come down to. So right now, you might be good for a small retracement from here. I wouldn't say there's going to be heaps in it, however. So I would potentially look at another asset, unless you're trying to scalp it right now. Go through dollar franc. We can go through dollar franc as well. Let me just catch up on all the comments. Now that gold has reached 4,200, I think there will be a big pause. We'll definitely take a good look at gold as well. Updates on pound Aussie. In fact, we can definitely have a look at that. That's where your stop loss is currently break even. Yeah, that's what I'd be going with. I don't like the downside pressure that we have. It's very ominous when we haven't had direct news or distinct reasoning for this coming off. It seems to be jitters around the China-Trump sort of confrontations and the whole rare earth mineral situation. Now, typically, Australia should actually gain from that. That's a benefit for Australia because obviously if they can't buy Chinese stuff, they're going to come to Australia. So the same deal we saw opening Monday after the announcements from close of markets on Friday with the Trump-China spat. All the rare earth mineral companies listed on the ASX in Australia rallied about 30%, right? So overall, that's good for Australia. The trouble is the Australian dollar per se gets wrapped up in the risk on, risk off moves. And just like we've seen from, if we go to the NASDAQ, we've come off further today. If you go to S&P, I've got S&P up here somewhere. We're in further off. It's now sort of trading sideways at the minute. This is not the futures, actually. Hang on. There we go. It's a bit better. You can see we've been coming off the same way. We've seen European stocks also coming off. So there's this underlying tone of risk off at the moment. Gold, massive run up. We had another one of these downdrafts like I've talked about. And what do you know? It's roughly $70 again. This one was a bit larger. We came from 41.78 or so. Eventually bottomed at 4,090. So same deal, I would say, with gold. We're still very bullish. Like each one of these downdrafts keep getting bought up. But I would say look for these types of patterns. We get these, bought up sessions to reach an eventual peak. We then see another candle. We drop about $70 an ounce or more. And then following that, you start building up again. Right now, other things to remember, we've still got the government shutdown in full swing. So there are underlying risk-off jitters through there. The market hasn't cared about it too much recently, but the longer it goes on, it does start to spur concern. Because we still don't have the payroll data, we need the inflation data, we need the other bits for the Fed. And so we've had a few signals from the Fed that regardless of not having this data, a number of the members are in favor of cuts still, so another 2 cuts. But obviously, Jerome Powell is the one that directs everything. So, longer this goes on, it gets more problematic. And also, if Trump actually starts to commit to the firing phase with government employees and starts to go through that, that actually hits GDP, obviously the employment data in general, and actually makes a difference to overall economic spending, because the government sector is actually quite massive, and he very much wants to gut it as much as he can. So, longing Brent, Henry. I haven't checked Brent since last week, so we did dip down below 60, didn't we? Not quite. It might have been West Texas. We're below 60. Look, I mean, I've spoken. Let's get rid of the pivot points. That's too much. Let's go out to 4 hour. I've definitely spoken about a number of times whenever we're down below this, around this 60 level, this is pretty much the floor. Given where we're moving right now, I would just be cautious. It depends on how wide your stops are. So I would definitely say buys somewhere around here are a good idea. If you want to hold it like for a carry type deal, get those swaps. But the question is just how deep is your stop from here? If you had something like that looking down at about 59.5, that's probably reasonable. Otherwise, I'd probably be waiting for a further dip closer to 60 itself. 60.5, maybe 61, just to give that extra coverage right now, because this momentum is still pretty strong. We're basically cracking those bottoms there. And very interesting, despite the Israel-Gaza stuff sort of settling out, which means we start to eliminate all of that risk coming from the Iran portion as well. So despite that, we're still seeing things come off. Obviously, that's part due to OPEC and such. Given that, I would probably want to see a bit more downside before actually buying up, right? This sort of secures oil supply with the Iran situation being slightly out of the game now. So hence negative for oil. I would wait for that. But it depends what your trade outlook is overall, Henry. So, morning, Akram. How we doing? Going strong? What are you trading, Akram? Let me know, by the way. We can definitely take a look at dollar yen. I don't know how to pronounce your name. Anthony. Sorry, bro. But so dollar yen. We've had this massive updraft. Obviously, we got the gap from Monday. Sorry, not from Monday. From the finance ministry last week after the announcement with the new potential Japanese prime minister. We've seen these moves up towards 153. The question was if we were going to push towards 154. That was kind of the top heads that we had. Since then, we've seen a slight pullback, and we've definitely seen more pricing of downside options pricing come in. So for the 25 delta risk reversals, the market is starting to price for a closure of this gap. So as far as dollar yen right now, your best bet is, risk reward wise, etc., would start to be looking for shorts, because that's what the institutional side is basically starting to look for, some sort of closure of this gap. And the yen calls, right, are coming right through. So yen calls are basically buy options for the yen. So hence dollar yen lower. So I would be very much in favor of shorting dollar yen and yen pairs in general right now. You can see we're coming up to a fair juncture for retracement, and then further shorts to be reinserted up here. You've got the cluster of the 50, 100, and 200 moving average coming in here. They're all starting to come lower. I would say lean on that with stops above the recent highs, and then look for a potential further downdraft from there. Yeah, sorry, bro. But yeah, so I'd definitely be in favor of downside for dollar yen overall. I think betting on the further upside right now is probably a bit risky. If we weren't seeing that options pricing, that would be different. But this is where institutional players are coming in and starting to flip to that. So briefly, we had pricing come out at basically break even, like net neutral, to put this all simple. That's the first time that it happened since 2022. And now, since then, we've very, very aggressively flipped the other way. So for further yen strength. And also amongst all the sort of risk-off undertones that we have right now, that's probably the way I would lean. Akram saying, right now, shorting BTC and ETH, bro. You're trading crypto now, Akram. Fair. From yesterday, looking for one more drop in set with my risk profile for both swing trades, holding it for longer. Interesting. Fair. So you're looking for this to further capitulate, you reckon? That is it is interesting after the sort of slight rally higher after the weekend's crypto madness that we had. We've definitely started to pull right back. And this is what I was saying earlier. We're seeing these underlying risk-off tones coming across the board, but we're not seeing it quite on every asset yet. But you're seeing a number of them starting to lay up for that. So this is starting to get me a little bit edgy and a bit concerned about next moves overall. EU, we can definitely have a look at EU. So if we zoom out on the 15, we had this relative channel prior through last week and everything. And each time we dipped outside, we went to pull right back in. And those were the extremes to be sold. We eventually got capped to the top of the channel here, rode it right down, came outside, came back in, back out, down to support, rallied back into the center point, and then we dropped right out of the channel back into the center point. And basically, we're just getting an overall sloping downward trend for euro dollar here. At this point, though, we're starting to come to a bit of support, right? I mean, we've had a total downdraft of almost 400 pips from the 119 highs. So right now, I'm actually looking for a slight bit of upside on euro dollar. I think this point is going to be the point to test, about 115.70. And I can definitely see us making a further run beyond that as well. We seem to be somewhat losing momentum in the downward trade for euro dollar, a bit capped out now. Seeing the same thing as a cross correlation for the pound. Obviously, today we had data come out for the employment data. So we've come right down, come to one of the old price supports. This goes all the way back. I'd have to zoom out. So that was from pretty sure this was off the daily prior from a way back level. One of my freehand levels I drew. But we've come back into this relative support. Right now, we seem to be finding somewhat of a base near term. And the same picture with dollar yen potentially taking another leg lower. I would see euro dollar, pound dollar likely have a little bit of upside from here. So go back down to 15. Particularly with this wick in the past hour or so, half an hour, these wicks starting to build off of here after the downdraft. It seems as though we are getting further buying pressure coming back into the moving averages and pretty much the 50% point of this drop here. All right, so that's what I'd be looking for next on euro dollar. Once we get to that midpoint, see how we rack there, and if we get a further drive right through up to these relative highs, or if it just fails at this point and wants to take another leg. But right now, we seem to have a bit more buying pressure coming in. Like I was saying before, a lot of markets seem to be in this weird indecision kind of point with underlying cross tones coming through. Trading as it's in distribution phase. One more drop, then longs. Lol, I was watching it in the weekend and had to make it worth the time. Fair enough. Did you trade it on the weekend at all, Akram? Because you can trade BTC on the weekend. So, morning, Ahmed. How we going? Hope you're doing well. Hoju, yeah, we can do pound yen. I would say pound yen's probably going to be pretty similar to dollar yen. Across the board, we're seeing this further tilt to yen strength, right? So that means downside for the yen crosses and the yen pairs. Euro yen, pound yen, dollar yen, the lot. You can see we've already made that large break. We had the recovery after the Friday's dip coming into Monday. We've then failed up here, come right off today, broken those lows, and we seem to be heading first initially from the open after last Monday, right? This is where the 200 moving average cluster and everything is going to be. So I'd see some kind of move like that, slight pause there, move up, then come down, close the gap. But overall, we seem very much on the short side for pound yen at the moment. Same with dollar yen and euro yen. Right now, as far as any retracement, if you're not already short, I'll be looking for this cluster through here. So about 200 spot 20, right? 202.20. Basically these tops where we found support there, rolled off from roughly where we closed that last Friday, just by Trump's announcements. Built off from there. We've now cracked through that. I would say that is probably your sort of peak point. And I'd be looking for shorts off of there, first to that 200 moving average, which is about 200.24. So you got about 200 pips on that. And then if you want to hold right the way down, right down to 199. But yeah, it looks as though the top side is kind of out of the question now. This area up here. Part of this big downdraft, obviously, today we had the pound data coming out. So same deal. We've seen pound dollar come right off. That's why pound yen has sort of pushed a bit quicker than, say, dollar yen, which is just generally wafting. And you've got euro yen as well. Also similar downdraft, but not quite as aggressive as the pound yen. Daisy of short gold. Oh, mate, I don't want you to burn your account. So yeah, gold. Gold is not something to short right now. We were talking about before. We're still getting the same repeated pattern of these downdrafts, then these big moves up. You get a downdraft, and then generally what we should see is another move up, and then come off. Right now, trying to step in the face of it, not great. I'm also not keen on longing gold overall, though. As you guys know, if you've been tuning in, I much prefer right now to find these. Probably need to clean this chart up. It's a bit dirty. Too many levels in here. But I prefer to find these tops, capture those big downdrafts, and then sort of wait for that. So similarly, like we had last night, I didn't capture that move. I went to bed earlier today, sorry. But overall, that's what I'd be waiting for. So either if we see some kind of, like from here, we've basically come into midpoint retracement. That'd be about the, I'm sure if you put a fib, this would be about 50. That's your 61.38 or so retrace point there. I could see us come back to here about that 38% and then look for us to build back off there, right? If we manage to crack through that and then you see this low break about 4,090, then you could consider shorts. But without that happening, I'd still be leaning on the long side for gold if you are trying to trade it. Although, like I said, I prefer to find those relative tops and then look for the big downdrafts from there. So, how we doing? How we doing, Rich? Going well? Oh, you changed it. Did you change your name back? Now you're Richard Butler 924. What happened? What's this? What are you doing? So yeah, probably on gold. 5 minute. Look for a move back to this 200. Lean off that, and then I'd be looking for another charge to the top side, 41.70. That would be my preferred status for gold right now. No idea. You didn't change it back. Okay, that's weird. Maybe it's just showing the registered name for some reason. Come to think of it, I think everyone's is. Maybe that's why. It's showing the @, not like what you change your, I don't know, what do you call it, your presented name, whatever, to. Akram saying, yeah, longed ETH in the weekend, caught some of that rally. Not all now, I'm turning to the dark side. Nice, fair. So you did capture some of the rally. Very good, man. Very good. Good to see. Yeah, YouTube seems to have glitched the names. So YouTube change likely. Yeah, possibly. Well, if it is a change and not a glitch, then they should change it back. Because otherwise you get everyone like, 1, 2, 3, 4, 6 underscore whatever, right, in their name. Gabriel, yeah, pound yen. So we did run over pound yen just before. I can roll that again. So let's zoom out a little bit. We'll go to half an hour so we can see the bigger picture. Oops. So what I was saying with pound yen, I think you've got somewhat of a retracement point up to about 202.20 or so. At that level, I'd start to look for further shorts. If we go out to a slightly further time frame, you can see very much we're in a downdraft now. We can also see that the options are pricing for further yen strength, right? So we're seeing a big tick up in options pricing for downside on dollar yen. Same with euro yen, pound yen, across the board. So after this failure come Monday to sustain these highs, and we've dropped off pretty heavily today, I'd probably be looking for short entries from here to come down. First point of call is about this 200.20. Reason for that being, zoom out here, that's roughly where the 200 moving average is coming through now on the 4 hour. That's also the point that we opened and gapped to last Monday. So that's going to be your first point of call, then probably a slight bounce from there, and then come down further and close the gap that we actually created on the Monday. So I would be looking for further downside right now. We really need to stick the momentum today and actually break further highs, or at least take another run towards the highs for this momentum to sustain. We haven't seen that on dollar yen either. It's basically been the same deal, drop below this gray line here, which is a 10 moving average. Then we've come back to retest it here. Zoom in a little. And it looks like we're going to fail and run through. So you guys can see all these other lines I've got drawn on here. This is from last week. Basically, this being the determination point. And from here, this sort of neutral cluster between this line and this head. And then from there, it was a question of, okay, can we break higher, see about 154? Or is this where we're going to fail at some point or stall out and then run back down, look to close that gap and potentially go lower? So where we're coming into now is starting to look like some good selling opportunities in dollar yen. You're going to get that cross flow through pound yen. We did also have the pound data come through today, so that's why we've seen extended weakness in the pound yen versus stuff like the dollar yen or euro yen as well. Yeah, YouTube docs everyone for sure. Yeah, I know. It's much better as Hans, isn't it? We need Hans Gunther back. I'm gonna put on some music as well, guys. What's a good track? I need some more tracks on here, to be honest. Trade wins? Is that a good one? Yeah, that's the usual. We'll go that one. That's good. Shami is saying, hey LJ, I've been working on improving psychology side of trading and recently forced myself to stick to trade one pair, BTC. But if I see a big move before my day starts, like today, you don't feel like trading at all. How to overcome that feeling? So if we're talking, first of all, when did your day start? Because that's always a question. But I would say, in terms of seeing a big move, often that means something's happening, right? So that's also opportunity. So if you're feeling like you don't want to trade the pair because of the moves, typically it's signaling that you are missing something as far as information. So it's signaling that you don't have 100% confidence in the direction of the market. So in that case, you are correct in sitting out, right? The way to overcome that is not to try and reject the feeling. It should be to get more informed, or try to inform yourself through observing the market, doing your analysis, finding out other macro information about what's happening in the crypto space in general, the current sentiment, and then building a thesis around that to back your ideas, right? So yeah, anytime you're feeling lack of confidence or cautious or fear or anything like that around the trade, it's typically because you're missing information, right? So, the same way that if you go and bake a cake, you're not going to be scared, right, or worried, because you know how to do it. If you're doing something you haven't done before, there's a slight element of fear or jitters or anxiety, because you've got not 100% degree of confidence that you can do it. But once you've done something a million times, you don't even think about it. It's automatic. So the same way in the market, if you're trying to go into a certain process and you've got that in the back of your head, it's probably because your brain is sensing that you don't really fully know. You've got some degree of lack of information. So the best idea would be to close the gap in that information. BTC is a hard one to do that, because a lot of the trading day to day is kind of random, right? BTC is a relatively new asset. It's become very large these days, right? But as far as day to day trading, it's very hard to lean on certain principles. You've got basic market structure, technical structure, but as far as the macro side of things, it's all very, very long term. So a little bit different to things like FX or stock markets, where you see certain moves occurring through the day because of certain actions or data or political statements or something else that has come through. Crypto is tough because you get whales in there moving money around, that kind of stuff. So Gabriel was saying, so if there is a rejection, potential short entry on pound yen around 202.20. Yeah, so 202.20 would be the first point of consideration. You might get a slight tick above that for another 10, 20 points, but your downside is looking to about 200 spot 20, and then potentially down to 199. So you've definitely got significantly larger downdraft potential than upside right now. That upside momentum is definitely failed. Akram, not flying solo today. Jonatan was here before, but had to go do
You're not alone
and stuff. And now Pedro's in. There we go.
You're never alone, LJ. Never
alone.
What's up?
Beautiful. How you doing, man?
Morning, everyone. All good, man. All good.
Yep.
Yeah, trying to figure it out now. The next moves in the market after Friday. So,
yeah.
We'll see what will happen. What is your take on that? Like, what do you think? Is it just a flash to scare the weak hands, or is it something that's going to sustain, especially when the indices and even crypto as well? I think we'll just talk about crypto as well just before.
Yeah. So coming in on Monday, it seemed as though everyone had sort of forgotten about it, waved it off, and said like, whatever. Price action today seems to say otherwise. What I was saying earlier on in the stream was there seems to be a bit of underlying nervousness in the market, and we're seeing a bit of deviation across various assets. So the same way we've seen the sort of further risk off downdraft in Aussie dollar, right? We've seen indices come off today as well.
Yep.
Further downtick through here. We've seen European indices do the same. We've seen, gold. Gold's kind of doing gold things, just running up. This chart looks terrible without zoomed out, but I need to clean that up later. Dollar yen. Also, we're starting to see, after that big drive up, we're starting to see some of that risk off coming back in. And we've seen massive pricing for downside options for dollar yen. So for yen strength, we've also seen that uptick for further downside in Aussie dollar as well. So there seems to be a lot of underlying risk off currents coming in. So I think the market is relatively chill right now, but there's definitely an underlying nervousness that is creeping further in. We've still got the specter of the tariff stuff to kick off again after they seem to have chilled out, but it's very much still lying there. And we still have the government shutdown in full swing, of course. And so you're going to have disruptions with that further coming in. And particularly if Trump starts firing people in the government sector, that has its own effects. We're going to be missing data. We still don't have the NFP for the Fed. We're going to be missing things like CPI and all that if it keeps going on. So then that's when this stuff starts to become a problem. And just from a relative caution basis, the market will start to price that in at some level, especially once we've been at all-time highs. We've been pumping on, completely putting aside all these things for so long. So we're probably just due for that just naturally as well, overall.
Yeah, and as he's saying, that the Fed Chair is going to talk today, and today is going to include some Q&A, so there's going to be some more movement, or at least expecting volatility in there.
Very important, because some of the other Fed members recently have signaled they're still in favor of 2 cuts, despite potentially not having the data. Obviously, it always matters more what Powell actually says, because he still drives everything at the end of the day. He has very much like a gravitational pull on the Fed members, even though they make their own decisions.
Yeah,
like
he's still the main man. Yeah,
exactly.
He's still the one in charge. Of course, it matters more what he says. It's an interesting one, because I've been, even last week and since basically the government shut down, that I've been trying to sell US indices every single time at US Open, and that has been working nicely, except I think it was except Wednesday or Thursday, because the market was down. But anytime price has been close to the highs or all-time highs, as soon as the US Open starts, basically there was a selling opportunity. And in this case, it was mostly because of the government shutdown, and not even considering this new situation with China and Trump and tariffs, because that was as we know, the catalyst for the move on Friday. So there's still like that, just a new addition or a new issue, just to add into the fire of problems that again, it doesn't really make sense for the US indices to just continue to be at all-time highs, and maybe some recovery could be expected. So yes, yesterday maybe the move got a little bit of a reaction. I think I read even a post on X. It's an interesting account, to be honest, that they cover these macro events, and they basically, I think they analyzed like the last 10 tariff situations of Trump that kind of usually tends to tweet either it's Thursday or Friday night or kind of close to the market end, so it kind of creates scarcity in the market, and then over the weekend the other country kind of that has been targeted says maybe can kind of error correct a little bit, just go and follow the Trump's advice, and then by Sunday Trump just says okay, so we are kind of getting close to a deal or whatever. Then the other guy also from the US government also says something, and all of a sudden the market gaps to the opposite side on Monday morning, and that has been a pattern that we have seen several times this year with this threats or blackmail from Trump using the tariffs on Twitter posts.
I see like some other country pulls out a gun, and Trump comes out, pulls out like a rocket launcher, like an RPG. Exactly. And they're like, all right, chill. And then he puts away the RPG. It's like, okay, well,
it's always the timing, like it's always the timing where he does it. It's usually kind of more, it usually tends to be kind of close to Friday. I remember like even in March or something like that, it was almost 3 Fridays in a row where it was kind of always tweeting, and then there was scarcity, and then by Monday there was a big up to the upside, was literally always the rule. So basically that's the movement that we had yesterday, a little bit on US indices. But it was also bank holiday, so there was not really much trading activity. in there in the US yesterday. So today is going to be an interesting day to see which direction actually market is going to move after Friday. I think today is going to be the day. It's not yesterday. It was an off day. So it's going to be interesting to see if you're going to have actually a downside move or a correction, because we still have the gap to close it. I don't think we haven't filled the gap totally. There's still a little bit of space in there to close. So that's going to be interesting.
That's where I was originally holding this too. So I took this last night, held it overnight. We've come down further today, but I've closed this out here, basically out this stall point that we had with one of the prior resistance or support points. Say, just because I'm looking at other trades as well right now. So I still see the downside on here, but I would have liked to see a bit more momentum to sort of push through. So now that I've got some other trades, I took off on that. Sort of just one to one, pretty much.
It's good. It was a good move as well. Like even it was overnight, but well, you were awake. I most likely when there was that small move up and then down. That would be maybe.
No, I was asleep through this.
Yeah, okay.
Which is good. I had to stop, just high enough. Otherwise, would have got tapped out. But no, I was asleep through this period. So. This for me, I went to bed about about 6 a.m. my time, and then so I woke up at what about here? Over there.
Okay.
So
you go to bed at 6 a.m. your time. What are you doing?
Yeah. I trade through. End of late Asia. I sort of wake up. I start doing my early morning stuff. Then we get European Open, jump on stream like we are now, trade through that. We go to New York, trade through first half of New York. Then, London closes, price starts to slow down. Then I do sort of my wrap up for anything else I had to get done for the day. Then eventually go to bed. And then sleep for
you live in Australia, but you're following a routine of an European kind of...
Yeah, pretty much.
The time zone. Okay, just like because if you go to bed, if you are trading, basically waking up close to the Asian close, beginning of the London Open, that's like 6 a.m., 7 a.m. kind of in here in the UK. Yeah. So it's basically okay. So we are an Australian guy living based on European time zone, and
pretty much.
Okay, that's an interesting one.
Yeah. It always changes though, because sometimes I'll get to bed at like 3 a.m. get up at 10 in the morning. Other times it'll be I'm going to bed at about 7 a.m. my time, and then getting up at 12 midday or 1 p.m.
Why didn't you move to Europe, man?
Yeah, I know. I did. I'd have a much better time. I'd be able to just start here, finish here. Yeah. But the main trouble is like everyone else here, friends, family, partners, all that kind of stuff. Obviously, they're on completely different time spectrum. Yeah. So.
Yeah, I think you should start looking for a European country that you may like. That's maybe similar to Australia, if there's any, and just move. That'd be nice.
Dan was asking this before a second time. I think FX Blue is pretty good. I know Victor uses FX Blue. A lot of people use FX Blue.
I use FX Blue as well. Yeah.
There you go.
And it's free. Yeah, that one is actually free.
Yeah, and
you can customize many things in there.
So I run that FX Blue. That's the one.
There is just one issue with that. Is that pay attention to, if it is Forex. I don't think there's any issue, especially between even if you have your personal account on a broker or a different prop firms. Most likely the prices are going to be quite similar, and even the leverage is going to be quite similar. But if you're starting to look at gold or NASDAQ, pay attention to the difference of price levels between the masters and the other ones. Can be quite a big difference. So kind of you start getting filled in different kind of random places on your secondary accounts. If the feed is different, price feed is different. So just at least that's what I do. Kind of any gold trades or any indices, US indices trades, I kind of open manually on the accounts. Like I don't really copy paste a copy trade from the FX book. Because even in terms of margins, I think it kind of goes bananas. I think all of a sudden I'm risking like 10 times more in one account from the other. Yeah. Even if I try to adjust it. But yeah, FX it works nicely in terms of speed, execution, everything. It works nicely.
Indeed. There you go, FX Blue. It's the way to go. Yeah, insomnia. That's it. Just never sleep. I try to whenever I can, but often, it's like 2 or 3 hours a lot of days, and then I try and get.
What about weekend? What do you do over the weekend? Do you keep the same routine over the weekend? Yeah. I think it would be hard to just fix it. Like, what about now? Kind of a personal question. What about your partner? How does she deal with that schedule?
She's fine with that. Like often, if I'm still up, like she'll go to bed at like normal time at like 10:30, 11. Sometimes 12. Just because we're still up. But yeah, so she'll still have to run off normal times because she's got work and all that kind of thing, right? But yeah, no, it's generally fine. Then she wakes up, I say hi, say bye to her. I go to bed, she goes to work or whatever, So that's kind of how it works. So yeah.
Okay. Fair enough.
At least during the week, weekends different. So then we're on the same schedule. But yeah.
Okay. Because that's an important question as well. That matters.
So if you have a partner that understands, right? And they respect, working hard, doing all that stuff. I still very much make, all the time for her and everything. And that certainly takes priority, right? And then, with trading, you do have a degree of flexibility, so you can merge stuff together. So that's a benefit, I suppose. But yeah.
Yeah. We have here my Kohosuk. Would you mind sharing more info about the 20k bootcamp account and what it means? Pay the rest after you pass the challenge. So, first of all, I don't think we even are selling the 20k. I think 20k is just as a giveaway. But then you have the 100k and the 250k bootcamp account. And what it does is basically you just pay a fee upfront, kind of a smaller percentage of the fee, which is actually beneficial if you actually take into consideration the percentage of people that actually pass the challenges and get funded. Which means that if you don't get to that stage of getting funded and you lose the account on the challenges, you only pay that initial fee, right? For example, if you compare with the high stakes, you need to pay a bigger amount upfront, and you may lose it if you don't really get to the funded account. But with the bootcamp, you pay a smaller percentage, and you only pay the rest after you get into the funded account. So mostly outside. I don't want to say beginners, but for anyone that is maybe in the initial phase of their journey, bootcamp accounts can be quite helpful and useful because we are not going to be spending a lot initial phases just to try to get used to pass funded accounts, and then you pay upfront or pay the remaining when you get funded, but then you are one step away from getting payouts. So it's beneficial.
Yeah. So yeah, if you're still developing your trading, maybe you've started for a bit, but you're still early in the journey. It's a good way to get a low cost entry.
Yeah.
You only pay a portion of the fee at the beginning. Then once you get through the 3 stages, then you pay the final fee at the end, and then you go to funded, right? So it's a way that if you don't make it through each of the stages, you're not upfronting the full cost of a typical account and losing that money. You can just pay a portion, and then if you get through there, you pay the remainder on the back end. So yeah, it's a great entry option, especially if you're limited for funds or capital, that kind of stuff. And especially if you're not 100% confident that you're going to be able to knock it through, then yeah, great entry point.
Yeah, okay, you can do the map. The map. You can do the math as well on that one. Like if you, I don't know, if you need to, if you're going to fail three challenges to get funded on the fourth one. And this guys, if you're talking about, I think the 100K bootcamp, I think is $90, $95. The initial fee. So you are paying close to $300, while on the other one you'll be paying like $400. So you're already in $1,200 just upfront without maybe passing, and then you're just going to pass on the fourth one. So you pay another $400, another $100. So we are $400, and then you pay eventually $200 if you actually pass. So like the initial cost is definitely much less. It takes a little bit of an extra step because it's three phases and not just two. But at least it removes the burden of spending or investing a lot of money straight away into challenges when maybe you're not that confident yet on your trading.
What do we mean by funded account? So funded account is once you've gone through the evaluation stages. Yeah. So you basically proved your trading strategy and approach within the parameters and the risk sort of orientation. Then once you complete those 3 foundation stages in the bootcamp, you'll get funded, which means you're eligible for any profits from that point as a portion of your payout, right? So that's basically how that goes.
Yeah. What about the dollar, LJ? What do you make of the dollar now with this situation as well? Do you think it's going to work? What do you make of it?
I don't know. This is what I was saying before. I'm finding it not hard, but that's the wrong word. But very mixed, I guess, right now. There seems to be a degree of indecision across the market. Overall, I still see slight more downside for euro dollar, pound dollar, Aussie dollar. But I can also see that pressure to the downside is starting to flatten out and starting to abate. So I was talking about before, if we get a further push up through here to about 115.70 on euro dollar, that's going to be a test point. See if we can break through there and go to the highs from earlier. Or if we fail at that midsection and then take another leg, right? Aussie dollar's getting a large degree of risk-off flows coming in, just like I was talking about the pricing for options coming through there, and we've seen it massively come off today. Pound dollar, of course, we had the news earlier, so that's instigated that large drop. But we are coming down to some sort of critical sort of support levels, right? So if we push much further, you're kind of looking right down to about 131 or so on pound dollar. Same deal with the euro dollar. You break this leg, we're going down into 114s pretty healthily. That is going to take the Dixie right the way up to contest these prior highs and then push right on from there. So I'm basically trying to debate right now if we get another sort of retest of the high that was created, and then see if we get a failure at that point and then come off.
Yeah.
Or the question being, we just explode right through. Right now, it seems as though we've got a bit more momentum to come and test that. But once we get there, I'm going to be probably leaning on sell side for the dollar at that point. Particularly being that the dollar yen side of things, which is massively pushed up the Dixie, is starting to price for much lower levels. So options pricing is coming in for that downside move overall. So I'm looking at something like this for dollar yen right now.
Yeah, that will need the dollar to go down and the dollar the yen index to continue to move a bit more to the upside, which is holding to the upside yen index, to be honest. Yeah, just to finalize on the bootcamp versus maybe the other accounts, as Hans is saying it.
Just gonna grab some water.
Yeah, no problem. Yeah, just as Hans is mentioning in here, then you need to make the calculation or kind of not try to see which how much percentage you need to eventually to get funded, right? Because the bootcamp are 3 phases. 6% on each phase, so you get to 18% eventually to get funded, while the other ones it's only needed 13% to get funded, but at a higher cost initially, or at least upfront. So definitely take in consideration the phase of your journey where you are right now. If you're already used to past challenges, then maybe just skip the bootcamp and go to the high stakes, or even go to the hyper growth, which you get funded immediately straight away, just one phase. Otherwise, if you're still kind of in an early stage in your training, just getting used to it, bootcamp can be a good testing phase without much cost up front, which is a good idea. Just to share a little bit my other idea, I'm a bit more bullish as well. I think the correction we had on Friday, it was just to react to some of this structure. I think we can go eventually test the 100 mark. I think that can be one of the targets for this move, since this move that we have in here. But we may have a little bit of a reaction at this point. The way I look at it, I think price can be ranging in between these levels a little bit until it gets to 100 instead of just going in a straight line. So we could even retest yesterday's lows one more time until we get eventually to 100. So I'm still a bit bullish on the shorter time frame on the dollar, and eventually can resume the move to the downside, but that's maybe for the bigger picture at this point. And then on the euro, more of the same. I could see it going, maybe fake out this double low that we have at this point. Somehow I still like a little bit of a zone just underneath that level, but eventually we can just resume the move and eventually get closer in here to 140, whatever, 148, something like that. Somewhere around this level eventually we can go. But I'm going to be curious, just as LJ mentioned, what happens eventually after the euro may remove this double bottom, to see if there is liquidity coming in straight away, and we find some buys on the euro, even short on the dollar index, or the price just resumes literally and starts crashing all the way to maybe try to go closer to this level. But I'm still looking more of reversals as soon as you go here. The reality is that since last week, or basically since the beginning of October, we have been just in a bearish trend. Price has been just moving down. It's true that we have been oscillating a little bit, but it continues to create new lows, and it may need a little bit of a bigger correction before eventually we go again. Or even if the move is just go down from here and try to retest yesterday highs, that can also be a potential good trade opportunity. Maybe take today's highs and maybe eventually go close to this level, can potentially go also above it, right, to be honest. Looking at the Euro index is also ranging around this level, so that can eventually help as well for the euro to go to the upside. And I've been bearish on the Euro index until price got a little bit close to here. We did that on Friday, and we retested yesterday as well. And maybe somewhere around this level, maybe Euro index can find some bullishness. We can help euro dollar as well to move to the upside eventually. So that's another one. And then in terms of the yen, yes, for example, LJ mentioned that maybe looking for that big short on dollar yen. It could eventually happen, like the price actually and the yen index starts breaking and sustaining a little bit above this level. Maybe can even go and close that gap. We do have a strong level of support resistance close to the level where we are right now. So I'm going to be still going to be a little bit curious to see how price may react around here. But the reality is that price has been sustaining quite nicely. Even yesterday's or this morning move at around this level, it held quite nicely this structure, and it pushed higher again. So I'm going to be curious to see what will happen in here. If you're going to continue to push higher, then you continue to have those selling setups on Euro yen, Aussie yen, pound yen, and eventually dollar yen as well. I think dollar yen is the one that moved the least so far. Because of the dollar, like we had the dollar strength, so dollar yen is kind of lagging comparing with, as you can see here, dollar yen. Even though it did move to the downside a little bit, I don't think it's anything compared with Aussie yen, for example. Aussie yen basically already close to close the gap. We actually talked about that one, right? I think we have been talking about this 100 mark on the Aussie yen, and there you go. It literally sold off from there. Pound yen as well, a really big sell-off opportunity. That was another weekly higher time frame level, nice supply, and price just basically retesting the structure, which eventually can lead into closing the gap. But so far, good reaction from this previous resistance support. So we'll see if we're going to. I think we have been talking about potentially more downside on the pound yen. I think that was what we were talking about before I joined. Maybe we can resume if the pound also wants to continue to move to downside. That can also help this pound yen to move, and the euro yen as well just keeps on going. I still like the euro yen eventually from the top to look for another sell if we do get there. But it was another one that we talked about, which was almost retesting this previous level of support resistance from 40 years ago or 30 years ago, and price basically retested quite nicely
30 years ago.
like in 1980s or something like that. 78, whatever structure, but reality it worked quite nicely, to be honest. So you guys may laugh and think that it doesn't work, but reality the structure there is still somehow
that does, of course.
It works. I don't know who still has orders spinning from there, but of course.
Well, I guess people reestablish them, right? Because they say like, okay, that's we'll just pick this level, right?
Yeah. But the reality that was a good move. I still like the idea of shorting again, depending on price approach there. But for now, I think again the question now is: are you going to close these gaps or not?
It's sort of what I was saying with the overall direction for the dollar index. It's hard because there seems to be a number of pairs that are going to be moving kind of inverse. And the same thing with, like you were talking about, euro dollar. We're seeing this risk off stuff. It depends if that flows through as far as a re-escalation of the Trump-China stuff, because they did de-escalate as far as Trump throwing out the RPG, the bazooka. But China doing that, clearly they intend to do more of it. And especially the stuff that they put together was something that they've had. If you look at the framework, this is not like they didn't come up with this last week. They've been putting that together for like a year or more, even before Trump. And then after that, I think it was yesterday, they put out the further, what are they called? Like docking. What's it called when a ship comes into port? Docking fees, I guess. Whatever. No, there's another word, better word. But anyway, any US ships that are China built get no fees. US ships get fees, right? So they've still got a bunch of these bits and pieces going along. So I think that's where the market is seeing that. Yes, Trump's not going to do some crazy 100% thing, but very likely it is going to ratchet up in to some degree. Now, obviously, the thing as far as the Dixie, for instance, whenever we see the tariff stuff come through, euro dollar moves up. So it's dollar selling against the euro, but like it's dollar buying against like the Aussie dollar. And so you get these mixed picture.
Yeah, definitely. We saw the big sell-off on the Aussie as well, maybe because of the closeness with China, maybe that interaction in there, because everything else went up and the Aussie actually went down as soon as those tariffs were announced. On Friday.
That's where Aussie gets hard, because Aussie gets sold as that proxy for risk off and that counterpart for China, but arguably Australia, the country itself, actually benefits from this. So if they block rare earth minerals, like the other thing we saw as far as the stock market, like all the rare earth mineral companies, up like 30% on the day, right? I don't know if you heard me talking about that before, and that's what I was highlighting also, that there's a difference between the currency versus the Australian economy, and their benefit or otherwise, because Aussie dollar is used as that proxy window to China. So
Yeah, Aussie, I'm looking at around this 0.64 something to see if there's any reaction from these lows. Otherwise, it may continue to move a little bit further down. But I have another.
Yeah, I would say we start to find support. Yeah, somewhere in there.
To see if there's any kind of weakness. Even the Euro Aussie and Pound Aussie just went straight away to a potential target that I had. I didn't really manage to get filled. I was still looking a little bit on the Euro Aussie, a little bit further down. Never really got to that level, almost. And then all of a sudden, boom! It just made the move in that hour. It was crazy. And Friday was a crazy move. To be honest, someone is asking about NQ. NQ. Yeah. I think I would like to see kind of a retracement close to today's highs, and I think we could sell off again out of there. But this move was already quite good. We kind of closed or just already went a little bit below yesterday's open, and you do have the gap to fill. So again, I don't like at all to trade these kind of levels. That's why last week I was quite active trying. Last week I was active trading NASDAQ because it was always close to extremes, and that's kind of where I like to trade. As soon as it gets into this range, I don't really know how to trade it. It's not that I don't know, but the way I look at it, it's kind of a 50-50. If price wants to go up, it's kind of almost playing
messy.
Roulette. Yeah, if it plays roulette, we put red and black and whatever. It's a 50-50 chance. While at this situation, I can see it more of it's maybe 7 or 8 times in a row that is back, so I'm expecting now red because it just doesn't, like, just the probability, there's a high probability that price actually going to go to the opposite direction. Here is 50-50. If price wants to go here, okay. Price wants to come back in here, okay. If price wants to go back in here, can also do it. Even if price wants to eventually take the highs, can also do it, as well as and also even take the lows, which is actually managed to break some structure in here as well. It's kind of a 50-50. It's more intraday opportunities on NQ. I like today's stop that was created. If price wants to go there, maybe I can try to find a short at around the US Open. If price starts moving down, I'm not going to be looking for longs at this point. I'm going to be more looking for shorts, personally. But that's my nature as well. I like to short instead of going long.
Yeah, I agree. Like, I had that short. I basically exited roughly here earlier. For that reason, we're in like a weird. I would have liked to see this sort of drive further and harder, a bit quicker than it has. So I ended up jumping out of the trade. I definitely see the downside for it as well. What we had yesterday was options pricing for much lower. Today we're actually pricing higher up again. So I didn't like that at all. We, just like you were saying, we're in the kind of 50-50, toss a coin.
Yeah, it is.
Range. Yeah.
That's why we need the market to open and the market to start picking a direction to see what's next leg is going to be. Sometimes when you do have this kind of a move, I don't really use that approach, but I think we have those ABC kind of something like that. Almost price tends to make an equal distance. So maybe can have, if you do eventually go break to this low, maybe can have a similar kind of a move to the downside. Which will take us a little bit further down in here,
or potentially if we get a move up to the underside of that trend line that you've got there, so a slight further high from earlier, that then fails, and then we come right off, and it's sort of like a false break as though we're continuing to all-time highs, and then just capitulates.
And I like that. I think even again, both ways we could use this top that we created today. One of them, I think we eventually could actually make it work at the early stages on initial phase, and then you can use maybe this liquidity. It's going to be eventually created in here, and maybe we can try to go to close to that whatever trend line you have in there, and then you can maybe make the move. This could be something. This is something that I would entertain as a potential short opportunity close to the top. If you actually see a clear resistance level being created, eventually to sell off. Again, S&P was quite obvious, exactly what we mentioned here. It's kind of to try to create a little bit of a clear resistance in here, and then just literally do the opposite. That would be something I would entertain as a potential opportunity to look for a trade, and but we'll see. So we have the different things. We have the gap to close. We have maybe the today's stop to retest, and eventually the lows as well to go all the way. What about oil? Oil continues. Oil completely smashed at 58 now.
Yeah. After the Israel-Gaza truce, I guess. Yeah.
What do you see?
Eliminate the risk from Iran and that kind of situation there, right?
Mm-hmm.
And the greater, just bleeding out to larger Middle East, Saudi Arabia, Qatar, that kind of stuff. I still see this kind of 60 zone. I would see a bit more downside.
Mm-hmm.
But I think this 60 zone still holds as far as bottoming, right? We're looking in West Texas. So 60 on Brent, right?
Okay,
On
let's go to
Texas, it's like 57.
yeah, Brent is here.
Yeah. So
60. You're looking at his lows basically.
yeah, pretty much. So a further dip, but a slightly higher low. So from there, I think it's a good, particularly good swing trade, especially if you get positive swaps. Obviously, check, where you're trading, what swaps you get and stuff. But yeah, I think that's definitely seems to be the line in the sand right now. We're at pretty good oil supply, pretty healthy. It's pretty by the by as far as OPEC, everything else. I don't think we're not going to like massively rally off that point. I think we're likely just sort of range trade between that sort of 60 level and call it 65, 66, 67. For some time. Yeah, pretty much. So I would say even into the end of the year, we probably waft around in that area for the time being.
Yeah, it could make sense. I kind of agree. So I'm going to be looking for potential longs as price eventually moves a bit closer to those lows, and it starts showing indication that actually wants to turn as well.
I think Henry was looking for longs earlier on oil.
Yeah.
So
yeah, I'll be tracking that as well for sure. It made the move that I kind of mentioned 2 weeks ago, last week. It was that reaction, fake out or use a little bit of liquidity from here. So that initial move was done, but then it kind of needed to sustain above this level to potentially go back into this level, which never happened. We kind of topped in there, created a double top in there, and then price just sold off.
Came off.
In there. So it was it was more of a continuation move instead of doing this. For anyone that managed to catch any long in here, it still might kind of work. There was enough risk reward to be able to be profitable from this move, but then the move was still to the downside and now getting closer to these lows. In there, I think someone mentioned about dollar franc Swiss. Who was mentioning about dollar franc Swiss in here? Van Alvan. Dollar franc Swiss. I'm still. He said for shorts, Mike. Some thoughts on shorting dollar franc Swiss.
I think we're in for shorts, to be honest. I think similar framework to dollar yen right now. We've got that underlying risk tone. If I had a lean in the current condition for today, I would say downside potential.
This is your chart on dollar franc Swiss. Okay. So we have the trend line. What time frame are you? 15 minutes. Okay, 15 minutes. Okay.
Yeah. So I've got a bunch of other drawings on here from other times we've talked about it. So we're talking about this lower level here. This is a good buying area. Driving up, we've come back into relative resistance, right? So we met that level, come back off, pulled back into the support. We've driven up from there. Right now we're creating this, you got a bit of a trend line, basically a sort of triangular wedge falling through here. I would say given the underlying risks in the market right now, I would see further downside, most likely, before considering any further longs from there. So overall, I think we are starting to get into a period of dollar franc actually starting to rally. As I spoken about this in the past, they need to come up from here, establish some kind of gradual uptrend, and then ultimately make our way up through 80 and actually push on into the low mid 80s. that's ultimately what the Swiss National Bank actually wants. And they have signaled they will start to intervene if the price actually starts to drop back into these below 80, back into the 70s, right? And I wouldn't be surprised if at various points here, they've actually started to come into the market to try and build that structure. Given this week, though, given today, we probably have a bit more downside. I would be cautious in this breaking and running from here. So in the near term, I would see more downside risk to dollar franc before us actually turning higher overall.
Yeah, so that's when you said that it looks like more bearish. But then I agree with you on the higher time frame. I think you might be accumulating a bit more to the upside. We did manage also to break this trend line on the forward time frame since August until here. We may do have those selling opportunities just to maybe before accumulate to the upside again. We already have, of course, Friday already was a good move. Price already retested a little bit of this supply level that was created. We did manage to slowly break a little bit of this structure, so maybe we can go, who knows, back to this structure somewhere around here to go long again. We did manage to take slightly an important high for me. I was looking for sales, to be honest, a little bit higher, a little bit more into this structure here, and not exactly where price just dropped. Yeah, we may have, again, even when you look at dollar franc Swiss, and this is also important to mention when you're trying to trade these different FX pairs, it's just look at the way price moves. Like, so even if you are bullish or bearish in this situation in the higher time frame, there's almost opportunities to trade both directions all the way through, especially if you are intraday trader. Even in here, maybe there was an opportunity to buy and sell in between this move. Even in here, there's still kind of a little bit of a selling pressure. We have the move up, move down, price go up again, price goes down again. So depending on, regardless, in this case, if you're bullish or bearish in a higher time frame, intraday, it looks like there's opportunities to trade both directions, which for some style of trading that can be interesting. For others can be a bit frustrating if you would like just to see a bit more of a momentum or trending. So yeah, but I agree with you. I think higher time frame we may go slightly higher. Maybe at least try to target this top in here. But lower time frame we may trade maybe a little bit back to this level and something like that. Especially if dollar also helps. Yeah, sorry.
I was just going to say, it goes back to a similar thing with gold as well. So this whole sort of risk off moving to quality capital, that's what we've had for some time with the dollar franc. Despite, we've seen this massive downdraft, as you guys can see on the chart. That's despite the Swiss National Bank dropping rates to zero, doing everything they can to try and reverse the chart right there. Let me go out to...
show yours.
Yeah, I'll get a clean chart that doesn't have everything on it. So we've seen this massive strength in the franc coming off and off and off. Swiss National Bank has commented a number of times they don't like it. They said that sort of back through here in about May. We spoke about it ages ago with Mike on ABL, and they basically alerted the market that they are looking to intervene at certain points if the franc continues to appreciate. Despite them dropping rates even further, despite Trump putting the tariffs on the Swiss as well, the Swiss kept appreciating, which is not what they want. At a certain point, it becomes too much, right? And they said they've been looking to intervene. I wouldn't be surprised if we've seen some of this intervention through here. The way to look for that is to go look at their current account balances, what FX reserves they've swapped around, that kind of thing. But this going on at the same time as gold has been absolutely ripping is very curious. So I would not be trying to short heavily. I would be going with the Swiss National Bank, ultimately going for longs in the longer run for us to pull up to the high 83s at least, right? So hence me saying that we might have further shorts. That's a very near-term thing for like this week, the current conditions. don't be expecting that going forward, just so everyone knows. My larger expectations for this to continue to run higher. First point of call, and then potentially beyond that, right? There you go.
Yeah, I agree with you. I would love a new test to close to the walls to try to catch that bigger.
Yeah, to get an entry, that'd be great. Yeah, like that trend line basically that you were talking about, like through there,
something like that. Yeah.
Right. If we get a dip down to here and then run,
that could be. So yeah, that could be interesting.
That'd be a perfect kind of trade. You know, something like this. There, highs somewhere up there.
Yeah.
Bang.
And be ready to hold it for 3 months until dollar.
Yeah, exactly. You're gonna be holding that for a while. Like, it's not gonna be quick, right? Because exactly that. They're trying to battle with the flows going the other direction. But,
yeah, especially with our foreign Swiss. Even on the way down, you can see how many times it still went up, and the kind of There are other pairs that maybe are better to look for those swings. They are maybe quicker or get momentum and then just go. For example, dollar CAD. What is your take by the way on dollar CAD? Dollar CAD is just moving to the upside. Go ahead, sorry.
Yeah. I would say with the dollar franc, because of that, however, dollar, obviously you get the interest rate differential, so you will get good positive swaps.
Yeah, swaps. Yeah, that's true.
Basically at zero. So even though you do have to hold it for a long time, you'll get positive
money,
swaps. So from that standpoint, it's not a bad idea.
It can last 6 months to get to the target, no problem.
yeah, and you just be cleaning up profit in between. I just wanted to touch on this because Gabrielle did ask earlier about pound yen, and we're looking about 200 potentially up to 202.20. It looks as though we've basically stalled out at that round number of 200, started coming off. We came back into the 10 moving average on the 15 minute, which if you guys know, I've talked about a number of times as far as the sort of pullback point and the confirmation of a downtrend or an uptrend as still being sustained. So we have pulled back into that. Sometimes you get a slight tick over, see if you can close on a hourly or not, above or below. This time we've ran right into it, come right off. So yeah, quite possibly we might be starting to establish the down run now. That said, we've dropped another 35, almost 40 points or whatever from 200. So entering here, as far as risk reward, might be a bit stretched. At this point, I'd probably look for further confirmation of this actually running off and then enter on a break. Some kind of conviction that we got further downside and then let it run. If you're not in at the 200, obviously. So that's probably what I'd be saying. What were you saying before? Dollar CAD. Because we were talking about this with Jonatan as well, because he's still got dollar CAD trades in, right? I very much still see the upside for dollar CAD. What I was talking about with Jonatan is the trouble with the larger dollar complex overall, that I can also see a bit of a pause, right? And potential shuffle around, but it's mixed amongst various assets, right? And that's the difficulty. So right now I'm seeing this as very bullish. So what we sort of talked about with Jonatan, he cut, took profit on part of his trades. I think he got in, somewhere like right down here, right? Let the rest run. And I'm looking for about 141.50. That's where he had it. I had 141.40, just, touch below just to make sure you get hit TP, basically. So I still see further upside in dollar CAD right now. This is very strong. We're very bullish. Momentum is not fading at all. We've broken these previous highs, from Friday, and we've just continued running from there. So I would say further upside for dollar CAD.
Yeah, it was a nice continuation kind of a move that happened on Friday or Thursday. I don't know. Maybe it was Friday when they had the news. Like I think they had unemployment. There was a big sell-off, big candle on 1 hour time frame, 15 minutes.
Yeah, right down.
Which kind of shake many people, and then kind of a good accumulation to the upside, and that was already after price had broken the top on the left side on the 13th of May or something like that. So yeah, I could see the same. I could see price retesting those 1416 or 1415, something like that. Basically, the next level of previous support resistance that we had. I was just trying to see if there was an opportunity to kind of fight a little bit to move just before price would continue to go higher. But as you mentioned, at this point, there is no weakness whatsoever. Price is respecting every single previous low and just creating new highs. So I'll not be jumping. I'll be monitoring, because this is now the type of move that I do like to eventually fight when you do have such an aggressive move in one direction. But I need to wait. And maybe that's going to be where you guys have your targets. That's maybe the best moment to look for.
Yeah, we respected that level through here.
Yeah,
very nice.
That was a great continuation. Because again, it scares people when they see that big sell-off. Big strong bearish candle. Yeah, many people start thinking about selling in that moment, and
from this,
and many people don't really feel comfortable buying in that candle neither, because they see a big, massive bearish candle happening. So the last thing they want to do is buy, or most people. And then it just resumes the move to the upside, which is great. And at the bottom,
broken it, pulled back, precisely on there, ran. Yeah, I think this is still very bullish right now.
Yeah, but even the full accumulation that we had in June, like June, July, we have kind of a triple bottom at those lows, and we respected really nicely a higher time frame demand zone from October last year. So if you're looking at the daily time frame, for example, because sometimes I do like to look at the bigger picture, kind of the previous low that created the last high, and we literally respected it, and we have that big accumulation in June, July. Almost triple low, almost creating highs, retesting, going up again. It's like a good phase of accumulation that just pop up, and those lows respected that previous structure on the left side. So there was no break of structure on the weekly time frame, and usually when that happens, kind of price will just slowly get closer to the previous high. I'll get at least maybe a 70% retracement to the previous.
I assume this was some kind of drawing that I had on the lower time. I don't know what that is. That's not a candle, guys, just so you know. That's like a drawing here.
On the lower time frame, that becomes odd on the higher time frame. Yeah, but it was a good zone. All those levels were nice.
Your chart will be clearer.
Yeah, sorry. Yeah, so what I was mentioning is, where are we? Yeah, basically price, if you just follow structure, like this is literally the last low that created this push up. And for me to turn into much more bearish, I would have liked to see this level being taken to the downside, which never really happened. So price actually respected quite nicely. It created all this accumulation with this 1 low, 2 lows, 3 lows, whatever. Start moving up, another accumulation in here, and now it broke structure, and we create that quick move down with the news, and now move up, and most likely we can go to that 1416 and eventually get a little bit closer to something even in there. Now there's going to be a moment, maybe somewhere around here, that we're going to create a new range, whatever that range is going to be, before maybe continue to push higher again. So that's going to be an interesting part. Where is that move going to pop up again on the dollar cut, which is interesting, which is actually interesting. So yeah, we'll see what will happen.
Damo is asking, EuroCAD heading the same direction as US dollar CAD. I would be more hesitant on EuroCAD. The structure is just not as clear. And just like we were talking about euro dollar in general before, we're at a very mixed point where you could see slight further downside. That's probably not that much.
Yeah.
You're also at basically a coin flip probability of not getting that downside, and we move higher. In which case, EuroCAD is going to come right off, whereas dollar CAD could keep moving up. The dollar CAD structure is much better, very clearly bullish. You have much better points to lean on. EuroCAD right now, it's almost the same as the NASDAQ, like we were talking about before. we're in this that sort of weird mixed neutral area, especially if you go down to like if you look at the daily, that's one thing. If you go to the 15 or the hourly, right? This is sort of mixed. This is where we've dropped below. So you got that guy running through here. We dropped below there. We've come down to this relative support, and we're kind of in this like dead zone, neutral sort of midpoint box right now for price action. Right.
Yep.
So the thing is, you got dollar CAD, which is essentially like right up here and keeps running. I would look for dollar CAD if you want to express a short CAD view, put it that way. I don't really like this at all.
Because the move happened the other way around. So the upside on the Euro CAD and also pound CAD, it already happened. Like if we take a look into, and that because also of the strength of the euro on the pound in the early phases of the year, the dollar is kind of just moving to the downside, and now the dollar finally looks like it's correcting a little bit, and that also helps the dollar CAD to start moving to the upside. Right. So if you basically compare where the dollar CAD was in June, July, can you see that it was close to the lows? It basically made all this move in April all the way to June, July, now starting to slowly move to the upside. Euro CAD was already making all those moves to the upside before that. Okay, so basically June, July, whatever, price has been constantly moving to the upside. Even if you look left into the bigger structure, so we came all the way from here. We are now getting close to this upside move, or to the top in here. So we may actually, as we're starting to get closer to this level, we may actually start seeing more selling pressure and not so much momentum to the upside. Dollar CAD, just based on the same structure, looks like it's maybe somewhere around here, and now maybe getting kind of close to that second rally kind of type of a move. Of course, the structure is different. So there's a little bit of a difference. We definitely, as LJ is mentioned, we start seeing a bit of more selling pressure, kind of price tries to go up. And you can clearly see on the chart, price tries to go up, gets rejected, price to go up, get rejected, go up, get rejected. So anytime it's creating now new highs, it gets sold off straight away. This was a nice move. Price basically filled this range in here. I think price can maybe get a little bit closer to this level before moving down. I don't think maybe the top is still yet in place. I think maybe price can still go a little bit higher, but I'm not expecting such momentum. Again, I expect the same continuation of a move that we have. If price breaks highs, most likely finds new selling pressure, and we go down again, and it keeps on going like this until whatever. And if you do want to trade the Euro CAD, pay attention also what the Euro is doing. Like if you did see a lot of momentum to the upside, or expect the Euro to go higher, and you can look at Euro Index as a reference, then maybe you can try to look for those longs on the Euro CAD. But just be aware that we are getting close into a really higher time frame level of supply or resistance that can continue to push price down. So if you're looking for momentum, dollar CAD may be the best option. Euro CAD, just be aware of that.
Mm-hmm. And like Akram was saying with this BTC and ETH going to the downside, might give sentiment for the day. Very much. I mean, not necessarily give sentiment to the day. I think we've already got that sentiment, just like we've got here. NASDAQ further breaking down. We're seeing Aussie dollar in the bin, just like we were talking about. There's very much an underlying risk-off tone across the market right now. We're not seeing that in every single asset. Dollar yen hasn't fully expressed that. Dollar franc hasn't fully expressed that. Some of the other pairs, gold is sort of mixed to neutral. Gold isn't so much running off risk on, risk off stuff right now. It's just running off its own debasement trade and other inputs primarily. But there's definitely an underlying risk-off sort of tone going on. Now, the question is whether that risk-off is from further concerns around tariff-related stuff, because in that case, you'd see something like euro-dollar rallying off that overall. So that's where you get the mixed picture for the dollar in general. Hello, born in 2944. How are you doing?
Yeah.
to see you, bro. We do have Rich and Will in the background as well.
Yeah, he's coming back in a bit, maybe.
Yeah, he's left his chair. Left the captain's chair. Rich is here, though. How are we doing?
Yeah, there you
Yo,
go.
yo, what's up?
Morning.
Going well, going well.
How are you, Pedro?
I'm good, man. I'm good. How are you?
Not too shabby, man. Not too shabby.
Did you trade anything?
Yeah, I was going to say, yeah. I'm curious what you and Will are seeing today.
Okay, well, so GU is just too bearish. It did not present any opportunity for me to really enter, but I got a very nice sell on EU. So
Because, yeah, I'm quite mixed on things today.
yeah, so on EU, I got an entry at 115.62. So let me just do this.
Oh, it's pretty much right at the tippy top.
Yeah, so here, this morning, from yesterday's 15-minute base, New York was as expected. You know, there wasn't going to be much volume with Canada and the United States being with a holiday, bank holiday.
Yeah.
And then on the 15-minute bearish base this morning during Tokyo, it pushed into it and then started pushing a little bit lower. And all I was waiting for was just this little base candle over here. And then once that base candle printed, while myself and Will were streaming, it printed and I just took the trade. I wanted to have it for a little bit deeper. I wanted a little bit more from it. However, on the hourly, we had this multiple wicks. This was last week Friday. There was a wick on this little area yesterday, and then this morning again. And it didn't really seem to me like it really wanted to push through it immediately. But we still had this little area down here that I still thought might be hit. So I wanted a very quick little trade. So in, and I got out for effectively a 1 to 2. But my risk was initially up here, just above this previous swing, which was I think about 10 pips, and then I took out at 10.04, somewhere there is where I took out. But it drifted a little bit. It didn't quite hit 10 pips, and then it started pulling a little bit back. So then I decided, okay, cool, I'll just move this to 5 pips, and then I left it on 5 pips as my stop loss, and then effectively a 1-to-1 based on the re-evaluated risk. And that was it, basically. That was my only trade for today.
Do you ever change it? Like if you see momentum, or do you just hard stick to your fixed risk?
So I
surely
jumped
sometimes if you see stuff, with, okay, this is going harder, right? Or do you just no? So
recently, I've been looking at the idea of jumping between two specific take profit points. So like what happened on EU this morning was, because we were so low in the day already, and this support area down here, I didn't quite know, I didn't have the confidence, let's rather say, that it was going to push through this point, seeing as it had already jumped twice off of this little hourly area. But normally what I would have wanted to do was I would have wanted to keep this as a 1 to 3 as an example. And the reason why I keep it static is so that my expectation is always mathematically measurable.
Yeah.
So I know that if I'm going to lose a trade, it's always going to be the same amount. If I'm going to win the trade, it's always going to be the same amount, kind of like thing. So I can calculate my expectancy based on my win rate. And I can work out exactly, within ballpark figure, obviously, how close I am to my expectancy and if my strategy is working according to what it's supposed to. Like, not only your win rate, but your dollar value and so on and so forth. But recently, I've been playing with the idea of potentially varying that a little bit. So I have a 1 to 2 or a 1 to 3, and then there will be ones where I decide, okay, cool, I'm just going to let this run.
Yeah.
So still playing with the let this run one, because I'm so used to doing either the static or the expectant take profit and stop loss point. So maybe in future I'll have something like that. But for the timing, like yesterday, I've already removed it, but I had this trade over here, but this was a 1 to 2, and there was so much more in it. There was so much more that I could have had on this specific trade, but it's not tested yet for me. And then I had another one over here, and for me it was fine. It was like my risk is going to be still 0.25% for these two trades, and with this one I made 0.5%. With this one I made 0.5%. So for me it works. But what if there's a day where I attempt to take one again somewhere over here as an example, and I get knocked out, but instead of using a more fluid stop loss and take profit, I could have, my mouse, man. I need to fix my mouse. Instead of having my stop loss somewhere over here and then trying to aim for a lower point where I could have received a lot more, it's just not, as of now, not tested.
Yeah, fair.
What's up,
Makes sense. How are you doing, Will?
What's happening, guys? Sorry, I was going through some really weird technical difficulties, and then it just. Why did it have to happen 10 minutes before the stream?
Same thing.
No, you're fine, dude. You're good.
But yeah. So sorry, guys. I'm back. I'm here. So I do apologize about the technical difficulties.
Good.
Man.
How's things?
Going well.
Awesome stuff.
I'm pretty mixed on the market though. As far as positions, I'm sort of still cautious to jump into anything right now.
Yeah, no. To be fair, I was a bit like that earlier. I'll try and bring my chart up if it'll load. Like I said, you know when MetaTrader like pings at you, it's like that boing. I've had about 6.
Oh, dude, I hate it. No, I've turned off all those sounds, dude. That gives me like
literally. I've had about 6 of them in the past 2 minutes.
It gives me like PTSD or something from like sometimes if you have a trade copier and then something disconnects or whatever, it goes, it pings or you whatever. I'm like, no, dude, what's going on? Like that's not good. That's a bad ping. That's not a good
ping.
Right?
Especially like multiple terminals. It's like you have to go and find out which one.
Yeah, well, that's what I mean, because I have 4 terminals open right now, and I had like 6 pings. I was like, oh my god, what's going on? So, oh, mate.
Yeah.
This morning went well, though, but, oh, mate, the mid-morning, late morning, just, dude, I was stressful. I don't know what was going on.
Yeah, definitely.
So, but no, it's all good now. So, I'm just going to bring my chart up real quick, if that's okay, Rich.
Yeah, of course, go for it.
Awesome stuff.
Also, everyone, you guys out there, like and sub to the stream.
Give us a big thumbs up, guys.
Give us a like. We're here every day. Give us a like. We appreciate it. Thank you very much.
Yeah, it's obvious. They're here every day.
So, what's up?
I'm saying it's obvious people enjoy it. They pitch up every day.
Yeah, they're here every day. Yeah. Just punch that like. Thank you very much.
Yeah.
It's brilliant. Free of charge. Wonderful.
Yeah.
It's literally
my throat is killing me today. I've got like razor blades. I don't know. I've got some kind of infection or something. It's it's killing me. I'm trying to survive, but
oh mate. Just remember now, we have like this I can't even remember what it's called. My wife's got it, but it's like it's a little throat spray. But it's almost like 90-something% alcohol, basically.
Oh, is that like the numbing stuff, or?
No, not quite. I think it's called Ignatia. I'm just not sure.
Right.
But the next time I see you, I'll tell you what it is. But anyway, so a while ago, I had like a super bad like throat problem. I don't know, like nasal drip or something. Throat was not happy. My wife gives this spray to me, and she's like, "No, just take this." and I kid you not, it's like breathing in fire. Back of the throat, and I'm coughing like crazy. What? It helped. Like, it really helped, but man, did it suck in the...
Yeah.
I looked at my wife, was like, "Did you poison me? What the fuck?" You know, it was that like level of throat annoyance. Unexpected.
Yeah, like that 90% proof alcohol as well.
Yeah.
Have you had, that, or, absinthe isn't quite there, like proper
No,
absinthe.
there's a
You
lot
get
lower.
the top stuff and
Like,
dude, it's like death.
and what do you call it?
Hit you.
Oh man, now I can't remember the English name for it. But yeah, it's like 80-something% alcohol by volume.
Yeah.
It's ridiculous. It's got some silly names like Doringdraad or whatever. It's like, dude, it's drain cleaner is what it is. It's just straight up drain cleaner.
Dude, the best thing for a sore throat though is that numbing stuff, like the anesthetic stuff that you spray down, and it's like heaven. As soon as you do, you're like, oh, thank God. Right?
Especially if you have like not only the annoyance, like it's annoying whenever you swallow and it burns and all of that stuff, but if you have like a little bit of a cough as well, and every time
I was about to say, when you're coughing, you can't sleep because you just
So that numbing spray is amazing. But this I'll remember what it is. I think it's Ignatia, but it helps. It's helped so many times before, but like it's that first moment of I'm dying. What the hell did I just spray into my mouth? And then it's followed by like, oh, this is soothing. This is actually quite nice.
Relief. Yeah.
Yes.
Yeah, that's it.
Awesome stuff. Anyone had any lucks with the charts today?
No trades yet for me. I'm still waiting as well to see what opportunities will
nice. I had a little bit of luck on gold earlier. Rich saw it.
Beautiful trade.
We had this consolidation here. We had the breakout of the consolidation. I did take this opportunity here where we broke out, but we didn't get the close that I wanted. Then we closed down here. So I re-entered the close and took out immediately on when I hit break even. And then we took out of this trade just up here for about $332 profit. So it was quite nice in the end. And there we go. What was this from? Oh, this was just to make sure my trade copier was working. So yeah, I took a 0.04 just to make sure my trade copier was working. And then we took, so this was the break-even loss down here, or break-even win down here, $2, so $1 profit net. And then this was the main trade. So the only one trade today, even though I got 3 positions here. One trade taken at $332 profit. On gold, so that brings us now to $96,237. So I'm like 3.7% down.
That's
beautiful,
good.
man.
Yeah, slowly clawing out a drawdown, so which is nice.
That's really good.
Very good.
So LJ, you say you and Pedro, neither of you have had a trade today, but what is your sentiment today on the market?
I closed out some trades from last night. So like a NASDAQ trade I had. And a small euro short. But yeah, as far as taking new positions today, not yet. I am considering going further short here on Aussie dollar though, because we seem to just be breaking down further. So I'm kind of looking at somewhere lower in the 64, so about 64.20 or so, back down to this cluster down here. Like this momentum is not abating at all. We seem to have a clean drive from here, so I'll probably look to pick up like 20 points on that from
Looks
here.
clean.
So we go down to, even if we go down to 5 minute rather. So we had this slight attempt to sort of pause here at around 40, but it seems as though we're just going to break right through here and keep running. So that's probably going to be main trade right now. Euro dollar is kind of mixed. So I can see Pedro and I were talking about a slight further downside for euro dollar, potentially down towards 114.90 to 80 kind of area. But what I don't like is that momentum seems to be stalling out. Same thing with the pound. We had the news come out, massive downdraft, come back up, back down towards the lows, but we're not really punching on. So for me now, the sort of risk-off flows, NASDAQ coming off, Bitcoin coming off, Aussie dollar coming off, that's probably what I'm going to lean into for today overall. So
you mentioned something earlier about the 10 EMA. I had just gone away from the charts and I came back and you were mentioning something about the 10 EA. What were you mentioning about it? You were talking about as a continuation indicator?
Yeah, so I use the 10 moving average as like a confirmation that the current trend is still valid. So when you get these either downdrafts or, downside momentum or upside momentum, as long as the 10 EMA is still intact, trend is still valid. So like you get this pull down point to here, you have a bit of a rally, people start to freak out like, oh, okay, is this turning around now? Until we've actually broken and got a close above that 10 EMA, it tends to just tap into that and then keep reversing. So we go down to the 5 as well. 5 obviously is going to have more noise and you get a slight overtick and then come down. 15 is the main one that I rest on with that. So same deal as well when you get like stuff on the hourly for retracement points. As you can see, this is massively gapping the 10 moving average, which is up here now, right? But eventually this will pause. The 10 MA keeps coming down like that. We eventually get to here. Then the hourly will tend to reverse to the 10 EMA, which often roughly comes in line with some kind of prior bottom. And then that's going to be your point of call once you do find a bottom to reverse to, right? So I use it very much for mean reversion and continuation of momentum.
Nice. I like using the 20 EMA on the 15 specifically for that, but I sometimes add the 50 EMA as well, and I kind of see how it reacts between the band of the two. So if price were to retrace back into the 20, it's not to say, hey, it's turning necessarily. As in relation to the 50, then see, I don't know if it's almost like a cloud.
Yeah, so that'll be similar to, so on my other charts, like on here, I've only got, because it's Trading View, I've got the free version, so it's 2 indicators. So on my other stuff, I have the 10, the 50, 100, and 200 moving average. And then I've got Bolly bands on there, just for like a view of general volatility expectations. So Bolly bands, I'm running off a 20 moving average as well. So I normally have that sort of running through here. So you can see that line would probably come in roughly like this or something through here. And hence on the 5 minute, you'd see that basically between the 10 and the 20, when I look on the 5, it should stay roughly within there and not go further than the 50. And so long as that is confirmed, when you go up to, go away, see I'm on the free version. If you go up to the 15, you should then still be sitting below the 10, right? Yeah. So basically, same deal. And that's what I use as the pullback points to then re-short or add or something like that, or just confirm or deny that this is still in play overall.
Yeah, no, it makes sense. I use it in the same way to confluence the idea of the direction. So even though you're still trading actual market structure and you're waiting for higher highs or lower lows or sweep points or stuff like that, it's just a very quick reference point, especially if you're in between two areas, for example, like in between 2 points of interest, and you don't quite know if it wants to start turning early or if it's going to just plummet through. Then I just very, very quickly have a look at the 20 EMA and I'm like, okay, cool. It's still in line, still intact. Yeah. No, I like that.
Yeah, the same deal. I use them more of reference points rather than like hard, trade signals or something like that. It's just like an observation inference, if you put it that way, I guess.
Yeah, I don't trade off of the 20 EMA. Like if the price hits it and then reacts off of it, I don't use it as an entry point. But
just it's as like a second or third additive confirmation to the larger piece of what you're looking at. Yeah. So
especially because my trading is very intraday. It's very like between 8 o'clock in the morning and 12 o'clock in the afternoon, like that 4-hour period. For me, it's the fastest way to see, okay, where are we in relation to? So it's a very, very quick done and dusted.
Yeah, same with the Bolly bands like we've talked about here before. I don't necessarily trade off them, but it's just like a immediate visual reference of general volatility, 20 moving average, 2 standard divs above and below, bang, done. So.
And your standard deviations on them, are they like set to like 2 standard deviation or 1.5? Have you got like specific settings for it that you normally kind of gravitate towards?
Yeah, just standard settings.
You don't play around with it much, okay?
Yeah, not for Bolly band. Like I said, it's just a visual reference. So 20 moving average, typical 2 standard div above, 2 standard div below. Then on other charts, I do have like a standard deviation channel with like a midpoint, 1 standard div, 2 standard divs, 3 standard divs. But then that has like a certain number of bars look back point. So like 120 bars. And then you basically cross compare that with the 20 moving average smoothed signal levels from the Bolly bands, right? And then see where they sort of line up. So the other piece is, I guess, more current. And then there's more distortion in the Bolly bands from there. So
you said the most Australian thing ever in that sentence.
What?
Yeah, no, yeah.
yeah, probably.
I was fixated on that for a second. I was just like, yeah, no, yeah. It's like, okay. Yeah, LJ is Australian.
It's look.
It's ingrained in you now.
Yeah, no, that's just like general speak here. You don't even realize when you do it. So
yeah, in South Africa we have the ja nee, which is just yes, no.
Yeah.
Ja nee.
There you
It's
go.
the most like typical thing.
Yeah.
Pedro, do you guys have stuff like that? Do you have a let's just call them like a colloquial speech that just is for you?
Yeah, most likely. But then it goes also maybe into personal. I do a lot of those kind of nuances as well when I speak. I think one of the reasons is because my mind, I think, goes faster than my mouth, and I kind of I start kind of, I think I already finished one sentence, I haven't finished one, already kind of transition and goes like in a weird way. Again, my partner is always telling me kind of slow down a little bit, kind of take time to speak, like speak slower. Well, just go. And before I finish a sentence, I'm already thinking about the next one. Yeah, that's just need some work on speaking, basically, to slow down my own.
Almost like your brain goes on autopilot, and then the language filter just kind of cuts out, and you're just rambling. The most typical things that your brain is just like, I don't know what I want to say or what I'm supposed to be saying because I'm already past that point. Take word and insert.
Yeah.
Oh, believe me, I have to like filter certain things often, right? When I know I'm about to speak like too Australian, right? And people just be like, "What are you talking about?" Or drop another
too Australian.
Yeah, you have to remember. Everybody is in Australia. Not everybody understands the jargon.
Yeah,
chill.
Or the cussing as well. You know,
that's my problem.
Yeah.
I have a potty mouth. Like real bad potty mouth. So I have to really think about what I'm gonna say before I say it.
Yeah, because here it's often it's like endearing language. Like if someone's speaking to you just plain, that's not a good sign, right?
No.
You know, so yeah.
It's like we tell Will always, like, or when Will and I have a nice discussion and we're throwing like random stuff in there and we're taking the piss at each other kind of a little bit. I do that as an endearment. Like if I don't like you, I won't be doing stuff like that. Because I feel comfortable enough with you for us to have this kind of banter and this kind of like dirty talk. But if I don't like you, I'm just gonna no, cool, yeah. Yeah, sure,
Yeah,
sure.
exactly.
Sure.
Yeah.
Very little engagement.
It's
yeah,
exactly
if I don't like you, I'll be nice to you. Whereas if I like you, there's a good chance I'll wind you up.
Yeah.
Good for
Precisely the way it goes. Alright, I might have to drop out now, guys. I got a bunch of other stuff to do. Got to rest my voice as well. Get some medicine for my throat. Honey. Whatever's good.
If you struggle, you can always go
What
get
was that
yourself
thing you were
some
talking
sushi.
about? What was that?
You can always go and get yourself some sushi, and then you get the pickled ginger, and then you just eat as much of the pickled ginger as you can.
Dude,
Pickled
pickled ginger
ginger
is amazing.
I don't know if we have that here at sushi places.
Do you know?
Maybe we
what do
do.
you mean? Surely you do. It's like pink.
We do.
So you have wasabi.
Oh yeah. Oh, the pink stuff. Is that
Yeah,
what it is?
yeah, it's pickled ginger.
Ginger.
Oh, dude, I've never tried it because it looked weird.
It will taste weird as well.
Like, what is that?
What's the pink stuff? Yeah, no, it's pickled ginger. If I feel like I'm coming down with something, especially if it's like nasal or like upper respiratory, I have a crap ton of that, and I usually feel a little bit better. It's like a little bit of a boost.
Yeah.
And it tastes better than just having like raw ginger or like raw garlic, because it's at least a little bit pickled, you know?
Okay. All right. I'll give it a try. But
Henry.
yeah. All right. I will see you guys tomorrow. Good luck, everyone. I'm not sure. I probably won't have too many more trades today. We'll see. I'm pretty dubious right now, so see how we go. But yeah. See you guys tomorrow. Ciao for now.
Cheers, LJ.
LJ. Yeah, I have to go as well. We have Griff on the back end, so Griff is ready to jump. I don't know if there you go. Griff is back. No, LJ is back.
Hi.
Griff had a haircut.
I did.
Yeah, hi Griff.
Oh, great. Looking smart,
Fancy.
man. Looking smart.
Oh, thanks, guys. You're too kind.
Hi guys.
All right.
Have a nice
thanks,
stream.
Griff.
Enjoy.
See you.
Have a
See
nice
you
one.
tomorrow.
Bye-bye.
I think it's flu season, isn't it? My wife is poorly at the moment as well. I'll have to get her some pickled ginger.
Yes, get yourself some ginger.
Yeah, I definitely will. I'll let her know to get some pickled ginger.
Yeah, so get her the actual root vegetable and not the William version.
Okay, you got it.
What does that even mean? What does that even mean?
The William version.
Yeah, a little bit.
William version?
Sure.
Huh?
Okay. Yeah.
Trying to find a pickled ginger.
No, you're a bit ginger.
Just ginger.
Cheeky bastard.
Don't worry, mate. All of the best people have a bit of ginger in them.
As you down here.
Yeah,
Oh,
you
okay,
can't.
no, my beard. Yeah, my beard, full ass, dead ass ginger. Like I can't.
All of
lie.
the whiteness in my beard used to be ginger.
Well, I hope mine turns white. That's pretty cool.
Yeah, tell you what, it
Makes you look wise.
It's like usually like this strip that people have here is like the wisdom strip.
The wisdom strip.
Yeah.
I hope I get one of them.
Is that what you're calling it now, mate? Yeah, the wisdom strip.
No, I don't have it. Wisdom strip? Me wise.
Is that your
My
excuse?
stats were dumped into charisma and constitution, and a little bit into strength, but very little into intelligence and wisdom, mate.
Not investing any skill points there.
I had a few in luck. I had a fair few in luck. No
Yeah,
ginger.
that's the place to invest your skill points as a trader, for sure.
Oh, I've had this discussion before with people, but it was more poker related. Would you rather be skillful or have luck?
I don't know. I mean,
think
skill traits
luck,
is no
because
luck.
you can get skill later, but it depends on how your metaphor is gonna work. Like, can you choose skill and then acquire luck? Can you choose luck and acquire skill through like training? Because you can't acquire luck through training. You know what I mean?
Yeah, of course you can. Luck comes through skill.
So the way that I see it is that you cannot outskill luck, but you can outluck skill.
I totally disagree with all of
Yeah, but nobody asked you for your opinion. I was asking Griff.
that. I think the complete opposite.
Interesting.
So luck to me is like a weird concept.
Okay, that's why they call it. Why do they call it beginner's luck then, not beginner's better?
Well, because if you're lucky, you don't have skill. Like if you're a beginner, you don't have the skill yet. So it's beginner's luck. But as you become more experienced, you gain more skill, and thus you become skillful.
Nah, luck's but nah, skill's better than
Also,
luck.
how do you measure luck?
That's a very good question. It's kind of immeasurable, isn't it? You know, I've heard a lot of billionaires say that the difference between themselves and millionaires is luck. So like millionaires are skillful and billionaires are skillful and lucky. So just like to make that much money, there is an element of right time, right place, which is just pure coincidence, chance, luck.
Didn't skill?
Yeah, hang on.
Didn't skill put you in that place?
I enticed LJ. LJ's back.
I had to come and answer this because I just like Griff was saying, like you can make 100 mil off skill. To become a billionaire, you need some luck. So I would probably pick luck overall.
Would you?
Good to know.
Yeah.
So there's a
skill equals consistency. Luck's the one-off.
Yeah, there's a saying that luck is when opportunity meets preparedness.
Yeah.
So that's luck. It's when those things kind of like align. So there's the idea that you have to be prepared and then be ready to be lucky, kind of like thing.
Yeah.
So
If that's the case, then luck doesn't exist.
Yeah,
No,
not
it
really.
doesn't exist. So like skill is like a constant. Like you need skill, right?
Yeah, without skill, you will not get lucky.
Yeah, exactly. That's a base level. But if you have skill, you're capped. If you have skill and luck, that's where you get to the top side.
Yeah, exactly. Like for example, with you guys, the 5ers now, you know. So I am very lucky to have the opportunity to be streaming here. But realistically, it ain't luck. You've just identified my skills.
Yeah, if you didn't have skill, you wouldn't be here to begin.
I'm a very good trader. I'm a very good live streamer.
They're
I'm a
both
pretty cool guy. All of it took years of skill and mastering my craft. And I'm lucky enough that you guys have managed to spot me. But it's not really luck, is it? Because look at me, it's me. Look at me. You've managed to be, oh wow, we're looking for someone really good in the industry. Huh, there's someone.
And we're lucky to have you.
yes, Will, we are so lucky.
Yeah, we're lucky. Thank God Will is here.
You know what I mean though? It's like you're looking for someone good. I am someone good. There's no luck involved. It's skill. Someone's looking for skill. Someone has skill. They meet. Bosh. Yeah. There's your luck. You've created luck. Luck doesn't exist.
Luck is like chance. Like there might be someone equally as skillful out there right now that didn't get as lucky as you.
Nah, it's not. Yeah.
You see, there's a way of making it make sense. There's someone maybe even more skilled who got unlucky and should be here right now.
Put it this way: the more skill you have, you increase your like RNG percentage of also having luck.
So I'm going to miss you saying the more skill you have, the luckier you are.
Yeah, I get it. Yeah. Like, I like this comment. There's no coincidence, only unexplained synchronizations.
Yeah.
That's actually pretty cool.
Put it this way, Rich. It would be like, the more skill you have, it like increases your critical hit chance. Put it that way. And that's the luck portion.
Exactly.
Right?
So
that's
you're trying to say without skill, there's no luck. So without skill, there's no luck. Or without skill, there's no luck, yeah.
You need a bit of both.
Yeah, you need you can still have luck, but just your probability of luck goes down. As you increase skill, your probability of luck also
what
goes
would
up.
you choose? Would you choose luck or skill? Because if you were to choose luck, and then let's say I was a rubbish live streamer and a rubbish trader, and the 5ers come up to me and said, "Hey, well, it's your lucky day. We'd love to give you an opportunity to stream with us." And I was absolutely rubbish at what I do. Where's the skill? You can't learn the skill along the way because you'd be sacked by then.
No, but you can learn the skill eventually. So maybe that opportunity
luck
was
runs out before eventuality kicks in.
No, but what I mean is like in that moment, you didn't have the skill, but skill can be learned, and skill comes with time. But luck, how do you How do you learn luck? How do you gain luck? You gain it by
gaining skill.
Yes.
By being identified for your
So I think the question is, are we putting on, you get to pick which one you have a 100% probability of.
Yes.
Right? And then the rest is a question of if it happens. Right?
Yes.
So if you have a 100% probability of luck, then you can gain the skill, and then you 100% get the luck, which you're going to blow up. Or if you have the luck, you might just get a pop off, and then it declines because you didn't have the skill to maintain it.
Exactly. Yeah.
But then wouldn't you be unlucky?
Nah, you wouldn't be unlucky.
No, because then that's the...
You're just not good enough.
If you have 100% skill, you might not get the luck portion at all. So you only rise to here.
I just 100%. You will. If you've got enough skill, it may take you longer, but the luck will come. The luck will 100% seek you out, providing you've got the skill.
Yeah, I'm still gonna go. I want to be 100% lucky, and then I'll eventually be skillful.
I'd rather, like, put it this way: if I was playing poker, I want to be 100% lucky rather than 100% skillful, because you can play some top tier hands which are, otherwise 90 whatever +%, and then you just lose, and you're like, okay, right? Yeah, and you're just like, damn, bro.
I could have played pocket aces best on earth, and somebody with their 7 deuce offsuit just rocks up, and then the run out is 7 deuce. Mate, just no skill involved, all luck.
Exactly.
I don't know. See, I agree here. How long until luck runs out? Will luck run out before you gain the skill?
Well, then you'd be unlucky, and you wouldn't be lucky.
You're not unlucky then.
You'll be unlucky. The day your luck runs out,
infinite of the luck.
It's a fun question, though.
It is a fun question. Yeah, I mean,
I didn't realize I'd get so triggered by that. Turns out I'm triggered by that. I seem to have found my trigger.
No way! Screw luck, it's all skill.
Wait, do you follow F1, Will?
Yeah, I do follow F1.
Yeah, so I feel like the luck thing is like Max Verstappen, Lewis Hamilton, Abu Dhabi.
Mm-hmm.
Max had all the skill,
Mm-hmm.
but the luck with the safety car thing, Max takes the championship, Lewis loses out on an 8th world title. And he's been not getting another 8th. Sorry, Lewis, but, right? That's where you want the luck. Right?
I suppose. Yeah, there is elements of luck there. Yeah, I suppose there is elements of luck there. Okay, if that's the case, then in a straight on straight match, so where there's no contributing factors of random things happening, in a match where skill meets skill,
you need a bit of luck.
Yeah, because if skill meets skill, you lose to luck, because luck is like that. Right?
I suppose, yeah.
Consider luck edge. Think of luck.
Yeah, luck is like it's the double bubble extra bonus, little cherry on top.
Like Will was saying though, if it's in a contained environment where there's no chance of anything random happening, then skill wins out because of the elimination of randomness. Like if it's in trading though and poker where it's 100% random, that's where luck is very helpful. I agree where it's like,
or it's not 100% random, but it's 100%
no randomness.
Yeah,
maybe
not 100% random, but you can't get 100% clarity. 100% clarity is impossible. So
it's
by
unknown
definition,
variables. Not all of the information is available to you. It's a game of it's incomplete information game. So poker, trading, all of that stuff, we don't have the outcome. We have
a profitable trader, skillful or lucky?
Well,
both.
To become profitable, I would think that you would need a good balance of both.
Put it this way, even Machiavelli attributed 50% of your outcome in life to luck. Even him,
but I mean,
right?
Niccolo Machiavelli was a strange fellow.
Yeah, exactly. But exactly how hardcore he is with sort of stuff, even then, still attributes 50% of the outcome to luck, right? Despite the Machiavellian
Yeah, Machiavellian point.
Yeah.
I think another element that Will is considering is that you increase your luck by the amount of hard work you do, because the more hard work you do, the more opportunities you have to be lucky. So like somebody that's not putting in the work and not building their skill probably is less likely to get lucky than somebody that's consistent, working hard every day, because there's more opportunities for them to hit that lucky moment.
So therefore, skillful people get luck.
Yeah, but hence we were saying
the
that
question was, which would you rather be?
Yeah, because if you
skillful,
increase
otherwise
the
I'd never
skill,
get lucky.
Yeah, no. But if you increase the skill, you have a slightly higher probability of luck.
Exactly.
Right? But if you have 100% of luck and then you
But
put in the skill as well, you're going to be at a higher level that the skill gets like a bubble and gets a big payout.
I don't think there's a right answer. So
The more
it's good to have
skillful
a
you are,
conversation
the
about it.
more lucky you become.
Yeah.
It's just a discussion point. But what I wanted to do,
it's like talking about superpowers or something. It's not.
Yeah. There's no right answer.
Yeah,
like
there's no right answer exactly.
Imagine you take the same concept and you contribute it to trading. Like the exact same idea of, would you rather be a very lucky trader with the idea that your trades just seem to work for some other odd reason, there's no skill involved? Or would you rather be on the other side of the coin, an incredibly skillful player, or a trader in this case, but you don't always have the luck? Like sometimes it just wicks you out of your position and then carries on going down, or just
it's such a paradox.
Skill.
Well, put it this way: imagine you're
massively
skillful.
Skill is repeatable.
What if you're massively skillful? You're one of the biggest brains on the planet.
I can imagine that.
But okay, maybe not the biggest brain, because then that's like billions and billions, and that's going to destroy my analogy right here. Let's say you're like hotshot lawyer or something like that, or a doctor or something. Or you could just win the lotto and get like 50 mil. Right? You know what I mean?
Yeah, fair.
Like, that's the... If you want to strip
out...
a
hotshot lawyer has a higher potential and a higher possibility. A hotshot doctor, there's only so much. There is a ceiling to that success, unfortunately. Even though they truly deserve more, but there is a ceiling to that ability of earnings. Someone who wins the lottery and wins 50 mil, they don't know how to preserve it. They don't know how to look after it. They just go off and spend it. They can't do it again.
Well, okay, assume assume it's you and you're at least of moderate intelligence after winning.
Okay, so they're of moderate intelligence. They're of some form of quantifiable intelligence.
Maybe you don't know how to turn 50 mil into 150, but you know how to not lose $50 million after getting it.
So they're somewhat sensible. Okay, so 50 million. Let's assume they're spending through the 50 million. At some point, they're going to dwindle down through that 50 million because that's what they're going to spend. So, however, a hotshot lawyer, hotshot solicitor, whatever that may be, he is going to do a job. He is going to do a good job because he's fantastic at his job. Now, he's going to scale that through word of mouth, through marketing. He's going to scale that through better services. He's going to get bigger clients. He's going to earn more money. He scales it through the skill. Now, more people, bigger people, more, richer people, bigger fish, bigger clients are going to want to approach him. Why? Because they've heard of his capabilities. They've heard of his potential. They know what he's about. So therefore, he is going to scale through the ranks and get closer to 50 million and potentially even surpass £50 million or $50 million and keep on earning that. He's going to earn 50 million and plus more because he's got the skill there. None of it was luck. He created his own luck. The big fish, the big clients, the big clientele, the high earnings, the more jobs, the more work he gets to do. It's all lucky, but he's created that luck. Whereas let's say in 10 years time, let's say the minute, so boom, 50 million, wins the lottery, solicitor, lawyer, gets up to that 50 million, boom, they're now on level playing fields. So let's go, they're now on level playing fields. 10 years from then, lawyer, 100 million, 50, maybe 80 million. He's scaled it. He's earned more because it's not just luck.
I honestly feel like Will is like going on the largest tangent to try and convince himself that he'd rather be skillful than lucky.
Whereas this guy who's won the lottery has now got like 30 million.
He might win the lottery again because he's so lucky.
Yes, so lucky.
Okay, if that's the case, then screw it. I don't know what alternate universe we're living in, but if he gets that lucky, then screw it. I'm choosing luck.
Yeah, I don't know. It depends.
I love it, Rich. Like, I was looking at you, smiling.
Like I can.
Mate, that's a really successful lawyer. He's going from 50 mil. He's getting another 50 million worth of cases. You know, his profit portion. Damn, this is a really successful lawyer.
I wonder.
And if he doesn't have any
the
luck,
most successful in history.
Yeah, I don't know. Maybe he's like
Bill
Bill
Gates
Gates, like Bezos' divorce lawyer or something. I don't know.
Yeah,
what if he has a heart attack?
He might just get hit by a truck. He might die young. You know,
That's a good point.
No
you need.
Okay, if that's
luck.
the case, we haven't taken into consideration unluck.
Unluck.
That's a good point. Yeah, you didn't. Yeah, exactly. So, I guess if you're lucky, you don't get hit by a car. You don't have a heart attack. You don't have a random satellite drop out of the sky and crush you. That's probably pretty good.
When you do get hit by a car, you're
live.
lucky because you only break a leg.
Yeah.
Screw it then. If that's the case, I'm choosing luck. I'm with you guys on this one.
It depends, like how
the Titanic sinks and you live. That's luck.
Have you guys seen Deadpool?
Yeah.
With the lucky, I don't remember what the character's name is, but their superpower is just being lucky, and it's
Domino.
just the most domino, just the most OP power ever, because it's like, what are the limits? How lucky can you be? And it's just really, it's great. People
because
try
I think
doing
luck
her
is
and like guns
unmeasurable.
like jam.
Yeah, it's like luck is unmeasurable. It's not. There's no like mathematical equation that can really justify luck. But you can mathematically work out skill because there's like it's measurable. You can measure skill. You can give a metric and then you can kind of like play around that metric till you find where skill is now at its peak or where it's low or whatever. But luck, it's so difficult. It's so varied. Where's the ceiling? Where's the floor? We don't know. So that's why I love the conversation of would you rather be lucky or skillful, because the justifications that people come up with for one or the other one is amazing, and there's no right answer. Like it's not a trick question. It's just
exactly. Yeah. And technically, if you want to go somewhat analytical, mathematically, arguably luck can be open-ended payout to technically infinity, right? Where skill, what we're arguing, has a cap. So, you know, on that payout front, right? Arguably, luck is better. Then you have that. It's the same thing with superpowers, and then you get the deep question like, oh, you need skill to have luck and this and that, like we just had. So let's not rehash that. But yeah,
we don't have to.
It's fun.
Yeah. It's just a fun conversation thing to have. And the thing is you can take that exact same conversation and you can go and connect it to any field, like trading, poker, sports, whatever. You can go and there's always going to be that argument, but you just got lucky with your trade, or you just got lucky with meeting the right person at the right time. That's why I also like the idea that people, somebody corrected me with the exact quote. I think it was Maya Trader. The saying is, luck is when preparation meets opportunity. And like, if that's the way that you want to quantify luck for yourself, and it works for you, you can take that and you can attribute it to anything in your life. So
I like that. Like,
I like saying, if you're in trading, be ready to be right, but also be willing to be wrong.
Yeah, true that.
So
it's like luck is where skill meets discipline.
Yeah. I was just gonna say to Raza, this is what I'm looking for, gold. Just by the way, so you know, as I was putting this on the background. But also, with that. So I would say, what I call it is inviting serendipity into your life. So the same way that I see is like living in big cities as beneficial, because you have more potential to meet people, make more connections, and then randomly these connections add up to something else, and you meet other people, and it leads on to opportunities, and then that grows things, and etc. etc. By putting yourself in that position where you are, you're inviting luck, right? Which is not really, it's not really luck, because like we were saying, that preparedness, putting yourself in the position to take advantage of that is the control component that you have.
Yes.
When it comes, you can take advantage. So the same way, if we're talking about markets, if you've got dry powder and you go to like, so we go to the S&P and we go to when we had this massive downdraft with Trump, right? If you had dry powder here to deploy, nice, right?
Nice
so
powder.
Same deal with that. That's the same kind of principle. Exactly that. So, yeah, preparedness, being in the right position, all that kind of stuff, adds up to luck ultimately. So I call it, serendipity, because, yeah.
Yeah, I like that. I think luck as well is like luck, like wow, you got lucky, is where you got a positive result by accident, when you should have had a negative result, but you had a positive result instead due to a lack of judgment, or maybe something you were unprepared for, and it still went in your direction. That's luck, because you shouldn't have had that outcome. Like, for example, if I should have had a stop loss, if I should have hit stop loss, but I forgot to set a stop loss, however, it went up and hit my TP, that's lucky, because it's outside of my plan.
Yeah, exactly. That's a key point. Something that's outside of what you preconditioned prior to taking whatever action. Right.
So when skill meets discipline is where you create your own luck. Now, uncreated luck or unfathomed luck is where, positive opportunity is due to something outside of your skill.
Yeah.
I'm familiar with a couple of traders that I've known to be lucky, and they think that they're skillful, and they've had, maybe a year of getting funded, getting payouts, and me seeing their trades, I'm like, I don't think that these are very good trades, but hey, it fits the trading plan that they've made. I wouldn't take them. I don't think that they're very good. They don't really make sense to me, and I am perceiving them as just getting a bit lucky. And I have seen this a couple of times, and they think that they're becoming really confident traders, because they think it's all skill, and then it turns around so quickly, and then you realize that they have to realize themselves then that I was just on a bit of a lucky streak. And then but if they don't acknowledge that they were on a lucky streak, then they're just going to be blaming like external factors. They're going to be constantly trying to get back to this place where they were feeling skillful. Yeah, I've seen that quite a few times.
It gets misconstrued, where people think that that singular moment is them being skillful. I planned a really good trade, but in reality it was maybe more on the luck side than it was actually them formulating a proper plan and executing on a proper plan, kind of like.
I think, I think I've seen a couple like millionaire traders, doing a house tour, and I'm like, this guy is an idiot. How he's just hit like 2 massive trades in his life, and he thinks he's like God's gift, but he's actually just gotten very lucky.
I will say I'm not one to talk about someone else's luck. I'm not one to talk about someone else's journey, and I'm not one to judge someone else's journey. However, there is this one trader that I do follow on social media, which I'm not going to name. You know, I'm not like that. But however, I do watch his stuff, and it's hard not to, because I'm watching him and I'm like, how? Just how? And I'm like, how is? Just
Who?
how is this possible
Who?
right now?
Who?
His name's
Say who?
His name's Lockie. Is it Lockie?
I think he's here with us now.
Lockie Rose.
Guys, it's not LOCH, it's LUC.
Yeah.
Lucky. Yeah, it's called a lucky.
And like, oh mate, like I'm watching his trades as well. Like he'll show like one trade or something. I'm thinking that wow. Like he doesn't do it often, but like he'll just show some like monster 30k.
Who is it?
Live open trade. I'm not.
But on what size account, first of all, and can you actually say who it is?
No, I can't. I can't.
LJ is really interested. Like, how dare there be a guy out there?
No, is this guy not massively public or what?
No, he's very public. Yeah, but it's out of my morals. I don't drag people's names through the mud. It's just not something I do. I'll happily drag an unnamed trader through the mud, just not a named trader.
Is he from the UK?
Paint us a word picture of what his face looks like.
I'm not a bit. The trading community.
I feel like that's
so
yes.
small.
I think I know who you're talking about. So that's fine.
I was gonna say the trading community is so small and the 5ers are very big. So I'm not gonna say where he is. I'm not gonna say how old. I'm not gonna say what his name is or anything like that.
All right.
I'm not even gonna say whether it's a boy or a girl, but we're gonna call him a he.
I won't say as well then, because I think I know who you're talking about, but.
You're more than welcome to, but like me personally, like morally, it feels wrong to out.
You're like I actually live in that area. You're like LJ. You're on the other side of the planet, so it's all good. But yeah, no. What Griff was saying though, like exactly with that, like this is where you can run like a random distribution of trading systems that have an EV of 0. So essentially, they shouldn't really lose money. Essentially, over time, they basically just aggregate around the average. But you can run simulations, and you'll have various ones that over a certain time period will be up 70%, 100%, whatever, or more. And just like Griff was saying, you see these people that are raking it in, that were that statistical deviation from the hundreds, thousands of people trying to do this, and also trying to do it on social media. A couple of them hit. When they hit, they cash out. They put together a trading system or course that they sell. People have seen that result and then buy it, etc. And then turns out they don't get the same returns. But then you see some people subscribing to these courses that do get returns. But they are the same statistical deviation, just like the first guy that did it. Yeah, they're an anomaly. So, same way if you had, say we played inverse Russian roulette, and instead of one bullet in the chamber kills,
There's 5.
There's 5. Yeah. You would have, if you had 1,000 people, 833 of them would die,
but
right? And 167 that would be alive. And if you played it each round for $1 million, these 167 out of the 1,000 have made a lot of money, and it looks very profitable. It looks great, but they are the statistical deviation. Yeah, once you get enough people, and that's why it's very hard. So that's when you then have to challenge it over time, to really test these strategies and stuff. And you can actually go and do that with all these people.
That's why I kind of
you actually put in the time.
Not the Russian roulette though. That's illegal.
Yeah,
not roulette, but you can take the trading strategies, like algorithmically put it together, try and price it over a longer duration, not just the single market cycle, and see if it actually works. Because a lot of them do fit the current regime and not prior cycles as well. So
I remember there was a really good tool, like just like what you described, where you could put in your win rate, your risk reward, and then you can have 100 accounts, take 100 trades at those random win rates and risk rewards, and then you can see 100 different equity curves, and you can look at the best case scenario and the worst case scenario, trading over 100 trades, over 100 accounts. And that was always really helpful to kind of see, what is the worst my strategy could perform with this win rate and reward.
That's really interesting.
Basically, what that is, Griff, is just a Monte Carlo system.
It is the Monte Carlo.
I've got a thing. Yeah, I've got a thing. I can send you if you want. You run over 10,000 simulations of accounts.
That's awesome. Yeah.
But
And
if you want me to send it to you, I'll actually send it
as
to you.
well.
Oh, thanks. No, it's okay. I appreciate it.
It's
a very polite
It's just good for visualizing, isn't it? That's kind of
we had stuff like that for in the poker sphere as well, where you can run millions upon millions of simulations, and you can see the expected outcome based on all of those variables, and you can dissect every specific run out of the cards. And each variation and what is the most likely outcome based on the variables that have been set. And the interesting thing is, whenever you make one change to the variables, the outcome is massively more or massively less. The gap becomes so much larger. That's why the data set that you use in order to do your back testing is just as important as the idea of back testing.
Exactly.
And the
then
point
that's
that
the same
LJ
way
touched
when
on
you
as well.
develop an algo, you backtest it against certain data. If the data isn't quality, when you backtest it, it will show profits. When you put it in the live market, it's dead.
Yeah, I like
Exactly.
the point that you touched on as well in regards with gurus and selling courses, because they might have gotten lucky themselves, and if they get 1,000 students, odds are maybe 5 or 10 of them will get lucky as well, and then you've got 5 to 10 excellent case studies where these people made loads of money, but still 95 fail.
I mean, what is the current success rate of the retail trader?
Of the what? Sorry,
the retail trader.
Over what time frame?
Let's say over the last 10 years. Is the expectancy that more than 80% will still fail?
Yeah, it's probably 1 to 5.
Yeah, I would say
success rate, I think.
Over 10 years. Well, are we talking about individuals or new entrants? Because over 10 years, new entrants
you can mix
won't
it up.
be there.
Yeah.
Right.
So what do we expect?
I think 1 to 5% as well.
Yeah, I'm going 1 to 5% success rate.
Yeah.
I know that 0.3% of traders reach a payout on a funded account. And on average, you lose their funded account in 22 days.
I would even
information straight up 5% as an easy bar. If you go and look at the gurus, the exact same example of what LJ and Griff was just talking about, you have 1,000 people that buys one person's course, and 10% of them make it and the other 90% fail. Technically, it is still within line with what is expected of the average retail trader.
Yeah, true that.
So it's not really that far from reality for that to happen. Which is strange, because it means that you need to get as lucky as that person got, or as lucky as those other people got doing that system with that guru, as the average retail trader.
Or as skillful. Just restarting the conversation again.
It's kind of the same thing as Warren Buffett is a good example. So there's plenty of people that do exactly what he does, have done exactly what he does, especially since he's been doing it. People replicate it for forever.
Yeah.
But no one has quite got to where he is. Now, part of that starts because he started so early. First investments at 12 or whatever.
Yeah, I was going to say, you started
back
12,
then,
13.
Yeah, and he didn't have small money. It was $5,000, $10,000.
Yeah.
Back when he was that young, that was big money. That's like you starting at 12 with 50, 100K now.
Yeah, it's huge.
Yeah, no. If you just put in an index fund and did nothing, you'd be ridiculously wealthy. Right now, beyond that, obviously, he's compounded it massively. But that's where the portion of luck comes in. And if you take a wide enough distribution of other people that did that at the same time, they weren't as lucky. He did the same things as them, but picked slightly different stuff, had a bit of luck on top of his due diligence, which can't question, absolutely has that. But you have other luck portions like that he met Charlie Munger, right? And these are the other intangible pieces that he attributes the majority of his success as well, where he actually really like hit the exponent curve to Charlie himself, right?
Well,
who has a completely different background.
A fantastic example of that is the book Psychology of Money. The Psychology of Money actually goes into depth of exactly what LJ was talking about, and it also goes to show the ability of a compounding effect when starting at an earlier age. Now, obviously, yes, okay, he's an absolute anomaly to most because he started at such a young age with such a huge amount of capital for his time. Now, there's a trader out there who's not even as close to as wealthy as him, however, nonetheless, still a massively wealthy person. I think he gets like 30% more return a year. And however, because he started at like 30 instead of 13, he's still a multi-millionaire. However, the difference is astronomical. It's still like he's still significantly less off than the original, so it swings in roundabouts.
Those last few years of compounding make a huge difference, I think, don't they?
Yeah, absolutely.
Yeah.
By the way,
if you look at a million versus 1% on 100,000 is.
Well, 1% on 100 compared to 1% on a million.
By the way, I can see that they did a poll in the chat. We can't see it in our back end. I went on YouTube and I can see that we ran a poll 17 minutes ago and it got 60 votes. And 27 it's just disappeared. 27% said they would want to be lucky. 36% said they would want to be skillful. And like 37% said that they would want to be both, which is obviously.
Yeah, I mean, if you had the choice of both, obviously you want to take both.
Yeah. But it's around 50-50, which is interesting. Half said
I'm kind of hoping most people.
Yeah, it's very distributed, right?
Like, why shouldn't we have had a 100% for both?
Yeah, I'm gonna flip a coin.
Yeah, we should have had a 100%.
I wanted to land like this.
To be fair, I clicked lucky, and then I saw that the third option was both, and it was too late.
I actually.
I was going to say we should do another one with just skill or luck, right? Because both is obviously the answer.
Yeah.
I mean, who wouldn't want to be both?
Yeah, obviously. Yeah.
Well, I don't want to be both. I just want to be lucky.
But yeah, dude, Henry, I love this. This is good old double blind test. That's great. I love it.
Yeah, what annoys me, going back to the whole course side of thing, what annoys me a lot of the time when it comes to these gurus could be an absolute revelation in the trading industry. They could do so much good in the world, but they don't. When it comes to courses, it seems to be these gurus that seem to have like 100,000 people a month buying these courses. Like, however, if it was for someone like us who genuinely want people to succeed, if we were to create that course, no one would want to do it because we just don't have the skill. Your 1950s landlines going again, LJ.
It's like Alpha Beta Labs, that thing that they were running, and that was free. That's like, and this live stream as well. We've got a couple hundred people here, but I'm sure you're not going to really get any more realistic trading advice anywhere else. People don't care for realistic. I know you're a big advocate of this, Will. Like, it frustrates you when these really rich people are like flashing their wealth, and it's annoying that people are more attracted to the flashy fake traders. They look at the outcome rather than studying the processes, which is what we talk about.
Yeah, it's like on my Instagram. I've been growing my Instagram for years now. It's like right at the very beginning, like 7 years ago, sort of thing, when I was a teen, building my trading journey. And along the way, I've shared my trading journey. I've posted stories about it. I've posted like posts and reels about it, and no one's cared. No one's asked. No one's supported. No one's clapped. No one's cared. No one's wanted to learn. The minute I posted my trip last Sunday, I was in a watch shop and I looked at a Rolex Daytona. I looked at 2 Rolex Submariners, and I also looked. Well, I also had my tutor there. And I'll tell you what, the amount of people that popped up saying, "Oh yeah, nice Rolex, Rolex. Oh my God, how much is that Rolex?" I mean, people were all over it. They were salivating all over my Instagram just because I posted a Rolex up there. And yes, okay, guys, I genuinely looked at buying that Rolex. I'm still really considering this Rolex. But it's taken me 7 years of graft and hard work to get there, of consistency and maybe a little bit of luck to get to where I am now, you know? So why aren't they
all skill, mate? All skill.
All skill? No, screw luck.
All me, baby.
I laugh in the face of luck. I'm joking, luck. Please come find me, luck. I could do with a little bit more. You know, so like everything, like my Instagram now is starting to look a little bit more flashy because I've earned that ability. However, you know, I don't flash it. I say, you know, I try and show a little bit of flashy, a little bit of what I have earned, and say, guys, this is what took me here. The minute I say this is what took me here, views drop, engagements drop. No one's interested. It's like, guys, I'm so tempted, and like, let me know in the comments. Like, let me know what you guys think of this. I'm so tempted to create a course, and I mean, flash it up, make it look super sexy, really guru it. And the minute they buy, the minute they go into the course, it's going to be nothing but pure value and realism.
Yeah, I 100% agree with like, and that's the frustration. Like, it's the same thing. Like, we had a very good talk between me, Jonatan, and Dirk on Monday with macro stuff, right? Which is the in the weeds, kind of more in depth kind of stuff, whatever. And fortunately, you guys seem to actually really enjoy it. We had very consistent view count and everything, and seemed to provide a lot of value to you guys. And we did get a lot of like executional stuff, but definitely same way. What you're saying is people want to see the flash and not the actual grit underneath that actually takes to clean that up. Because you can go like, oh yeah, Rolex, yeah, sick. Yeah, like, what is that? You know, like, come on, it's
just like, yeah, look at that, watches, guys, watches. You know, it's like, okay, yeah, who cares?
Get your watches, kids. Come on, go get your watches.
It's not going to help you actually get the watch. What you want is the stuff that is going to get you the watch, not to just observe someone else and be some weird voyeur of the thing. Ideally, you actually want someone offering that grit, the sandpaper that is actually going to get you there. That's where the value is. And so, obviously, what we do here is hopefully giving you guys that and trying to express that, whether it's from, you know, trading directly. Sorry, we got my free version coming up. You know, some of the psychology stuff, general trading tactics, all that kind of thing. But yeah, once you get into the weeds, it's hard because people just want signals and stuff.
Yeah, that's why people want to be lucky versus skillful.
Yeah.
Rather want to win the lottery.
Exactly. That's great as far as like a hypothetical, you know, fun thing to play around with. But unfortunately, in real life, like we were saying before, the more skill you have will increase your luck probability, right? You want to increase that critical strike chance. Only way you do that is by increasing your skill points.
Wesley, I love this. We will buy Will course. Open it and it's a PDF that says it becomes more skillful, not lucky.
You know, Wesley, every now and then he just pops up with such a funny message. I don't see him very often, but every time I do, it's really funny.
I reckon Will's course wouldn't be in a PDF. You'd open up and it like opens up in notes or something. Right? It's not even like it's just
TXT.
Yeah.
It's not even in a font that you've heard of before. It's just like this cancerous,
some weird font. It looks like
skill issue.
It's like Egyptian hieroglyphs, and you're just like, okay, figure it out. Oh, no. Good luck.
Oh, dude, you know what? That's actually that's so tempting. I'm actually really tempted.
Where you have to decode it?
Yeah, I'm really tempted.
That's actually a cool idea.
Isn't it? Like, guys, I'm going to create a course, and I'm going to really, like, guru it up. And, like, it's going to be, like, guru as hell. It's going to be it's going to look so... People are going to look at it and go, that's a scam. And, like, you're going to buy it. and then it's going to be pure value. It's going to teach you exactly how to master your psychology, exactly how to master risk management, exactly how you should look at technical analysis, fundamental analysis, macro analysis. It's not going to give you how I trade. It's going to teach you how to learn to trade yourself, but it's all going to be in some ancient like language no one has ever decoded. It's going to be in like
you're gonna crack the cipher.
Yeah, and you got to like really crack the code. Like you got to work as a team to crack the code, and then you get the value.
Telling you, Will, you're going to receive such scathing Google reviews.
Yeah, I know. Could you imagine? Like, could you imagine though those people who actually manage to decode it and understand the course? They will they'll be profitable traders. B, by God, you will not need to question their commitment. Like they will be committed.
Who's got the time?
Yeah.
For that person, you just invite them. Look, the all of that information that's there behind whatever hieroglyphics that you're gonna have is just gonna be a telephone number
to me
and an address.
I'm like, I will want to
like figured it out. They rock up to your place, and you're like, okay, cool, come. I'll teach you everything.
Welcome into the House of Apex Brotherhood, where we all live together,
like
and I will teach you to trade.
Yeah.
Like literally, I think I'd actually do that. I think I would actually, if someone showed me that much commitment to trying to learn to trade, I think I'd actually one-to-one teach them.
Okay, so the way to do it, I reckon, whoever figures out first gets like a 10k bonus, like a 10k win, or something, or 5k, or like some kind of prize to whatever, that kind of thing.
Us.
And or maybe you got 1, 2, 3, 4, 5, and there's like a time dilation between the other numbers. So first would come first, but then you got to hold it for another like 5 or 6 weeks. See if anyone else gets there and they get the next things. Mate, if you're doing this, you got to include me because we came up with this, right?
There's 4 people in this call, mate. 4 people.
Yeah, precisely. Yeah.
And then on the outside, it's all really flashy and fake, and
that's what I mean. On the outside, it's just going to be like really sexy, flashy, Lambos lifestyle.
It's gonna scream
getting their watches like all up our arms, and
about 3 weeks ago, I bought this AP.
Oh, nice.
I got a lot of attention from it. People asking about, trading's going well and stuff. I didn't even buy it with money I made from trading. I just bought it with my savings.
That's amazing.
It's so fascinating how much attention it brings to you as like a financial, like an influencer in the financial space. Like it's very helpful. Like social proof, like having an expensive watch, people think like, oh wow, he's a great trader then. I didn't. Yeah. I am, but I didn't buy it with money from trading. So you got to be careful out there, guys.
Yeah.
To be fair, like the missus said to me, she was like, she knows how much I spent on my watch, and she goes to me, "Why did you buy that?" I was like, "What do you mean?" She said, "You could have bought a Rolex." And do you know the reason I didn't buy a Rolex is because I didn't want to look like a forex trader.
Yeah.
I didn't want
I would never buy a Rolex for the same reason. I was like, I've always wanted this type of watch, but I feel like
what is that?
There's what was it? There's a lot of things which people will assume are fake or related to scammers. It's a shame because Rolex is a very old brand. It's got a lot of positive associations, but unfortunately in some spaces it has a lot of negative associations. And like if you wear one, you just look a bit dodgy,
Yeah. A friend of mine
has been made now, and now we cannot unsee the association.
The minute it's faked, I don't want to buy the real one. Mm-hmm. The minute it gets faked. So like I was with a friend of mine a couple of months ago, and he had a nice watch on. I thought, and I notice watches. I'm a watch guy. I notice watches and cars. And I said, "That's a nice piece on your wrist. What you got there?" He goes, "Oh, Rolex." I was like, "Yeah, no, I can see that, you muppet. What Rolex?" "Oh, I don't know. It's date just." I was like, "Oh, nice, mate. How much that cost you?" 250 quid.
Yeah.
I thought,
exactly.
It's so annoying, man, because like that's the reason I won't buy a Rolex, is because someone could look at me and go, "Oh yeah, nice. I got the same one as it's rattling about."
Yeah, same deal. So like my first watch was like a Ulysses Nardin marine diver. Right. Nice. Now if you know watches, you know what that is. Yeah. If you don't, you got no idea. Right?
Yeah,
so it's
and if you
black and
don't,
rose gold.
that's why I bought
Yeah,
it.
exactly. And if you don't care, right? That's exactly right.
Yeah, mate, like I upgraded my watch to the titanium watch as well. Like I didn't just want a normal watch, I wanted the titanium one just so I could be a bit different again. And people look at me and they're like, oh yeah, what watch is that? So I explain. They're like, yeah, I've not heard of them. I'm like, yeah, no, I know, that's why I bought it.
Yeah,
you know, I
exactly.
bought it just because I want to be different. I don't want to be copy and paste. And it's like my brother. I looked at a Lamborghini earlier for sale, a Huracan, and he's like, "That's so nice." And I was like, "Yeah, it is, to be fair." And he's like, "Oh, 100%, I'd get that." I was like, "Yeah, but I prefer the McLaren." He's like, "Why?" Like, look at the Lamborghini. I was like, "Yeah, but copy and paste, isn't it?" I made Forex trader, and I'm a successful Forex trader. And I've got a course.
You're afraid to fit
Lamborghini,
mold.
and I've got and I've got a Rolex. It's like, oh yeah, you're different.
I smoke cigars. I have Instagram.
Yeah, so
it depends who you want to
find
appeal to,
Apple
I
or
guess.
something.
You can
Right,
appeal
like
to the youth that have only heard of Rolex as the expensive watch brand, or you can appeal to somebody who already has a little bit of money, maybe is a little bit more sensible and committed, and I guess they would be more attracted to slightly less heard of expensive watches.
Yeah. To be fair, like I buy my watches to impress certain people, and the people who aren't impressed by my watch, I'm not looking to impress them. So like I believe that with everything. How you dress, you're representing yourself. You tell a story with how you dress. Same with my watch. So I've got a watch here, and it's not an expensive watch, but it is a nice watch. Now, it's a Citizens Red Arrows, RAF Red Arrows. It's a very nice watch, probably only worth like $1,000, $2,000. Now, it means a lot to me because it was a birthday gift from my dad. Now, this, in my opinion, will be more expensive than any other watch. It's irreplaceable. However, I won't wear it on a business meeting. I won't wear it if I'm going out with certain clients because it doesn't turn a head. However, if I'm wearing it, I will wear it as an everyday because it means a lot to me. Now, when I go out to a meal, I won't wear a Rolex because, the kids may get impressed. They're like, oh, wow, oh, cool, Will, you got a Rolex. Yeah, okay, big wow, big woof. No, who cares? However, the people who I want to impress will look at me and go, oh, wow, okay, he's got a Tudor on his wrist. Nice. It's that you give respect. There's a certain
a Tudor is definitely a respect thing because people that know will know, right?
Literally that. If you know, you know.
I've got a new word. I learned a new word recently, and it applies nearly exactly to this. And it's a shibboleth. I don't know if you guys have heard of a shibboleth. It's like say you meet like when I went to uni, one of the first things they all asked me was, what private school did you go to? Did you go skiing growing up? How much skiing do you do? Things like that. And then they weigh up your class based on your customs, your traditions, your principles. And I suppose the type of watch you wear, the type of car you drive is a bit of a shibboleth. It's like I've heard a lot of people these days, they will like a house of young people will buy like a Lamborghini and they'll split the car payments 5 ways and they each have it a different day of the week. And then that day of the week that they have the Lamborghini, they may get more business opportunities because they look wealthy.
Yeah.
You're not going to get an investor if you're driving to the gym in like a Honda, but if you're going there in a Lamborghini, you might get more investment opportunities, which positively impacts the rest of the group as well if you're all working on a project together. And what is kind of like that. But yeah, a shibboleth.
I was at the Mercedes dealership a couple of days ago, or a couple of weeks ago now. My partner really wants a G-Wagon, so I said, let's go have a look. So pulled up at the Mercedes dealership. I was looking okay. It was just come back from London, so I was I was wearing what I'm wearing now pretty much. I was in my Apex tracksuit. And went into the dealership. I was like, hi guys, and they were like, oh, can we help you? I was like, yeah, I want to have a look at the G-Wagon out there. You've got 2 G-Wagons. And they all just sort of looked around at each other. And one of the guys sort of like huffed and go, yeah, I'll be out there now. And, my partner, she's dressed very flash. She dresses very well. And this guy sort of like dawdles out about 10, 15 minutes later. I was sitting up against the bonnet of my M4. Changed completely. Oh, okay. Oh, so you want to look at the G-Wagon? Okay. And then took me over and had a look at it. His attitude between being inside the dealership, just seeing a young lad like me, speak about a G-Wagon to actually going out, seeing my partner dressed quite nicely, getting out of an M4, then, you know, the difference in attitude changed completely. And it goes to show, you know, how you present yourself is how the world will judge you and how the world will see you. Now, I'm not saying it's right. However, you know,
it's a shame, but it's true.
It is a shame.
Yeah,
and
it is unfortunately a social construct that is very true. It is something
absolutely.
that is unfortunately one of those things.
And that's why I say to people when they're like, "Will, why don't you buy a Rolex?" It's like, because I can buy a watch that doesn't impress the people I don't want to impress, but will impress the people I do want to impress. So a lot of people that I want to impress will look at me and, like LJ said, if you know type of watch. Whereas a lot of other people will look at me and go, "Oh, it's not a Rolex." It's like, yeah, okay, cool. That's why I don't want to impress you. Go away.
Do you want to hear?
Now I know why people don't talk to me when I go outside. So I need to.
Yeah, Jonatan.
Yeah, I need to get a Rolex.
What colour's your Bugatti? What colour's your Bugatti?
Yeah. What color is it?
Where's your Bugatti? Where's the Bugatti?
Dude, have you ever seen that? Have you ever seen that video when he talks about how cooking is the least ROI activity you can do?
Yeah.
Yeah, and Jonathan's like,
grab your lettuce. Grab your
watch
lettuce.
this.
An onion.
Triggers Jonatan.
You're broke.
You're broke.
Yeah,
Fucking
Jonathan,
onion. You're broke.
you're broke.
Lettuce. You're broke.
Yeah, you're cooking for yourself, Jonathan. You're
Yeah.
broken
The worst.
over here.
I mean, I love cooking. I dress in whatever's on top of wherever my clothes are. You know,
I can be like that, so.
Nice.
dude.
I mean, I was gonna say this watch. I swim with it. I go to town with it. I eat with it. I jog with it. This is an all day, everyday watch, and it's a decent watch, but it's
tell
just
the time.
exactly that's the point.
Who cares then? Innit?
Function
Yeah, as long as it tells
over
the time.
form, function over form.
Yeah,
Always.
and like I said, that's why I win.
Favorite watch is this guy.
That's lovely.
It's a Citizen from it's 1920.
Oh wow!
So it's
nice.
over 100 years old now.
Yeah,
Right?
wow,
Nice.
This is
that-
my
that's incredible,
grandfather's
man. So I
ages
have
ago.
got a watch. It's not actually in my watch box. This is how nice this watch is. It's not even in my watch box. I can't remember. I don't even know what make it is, but it was my great grandfather's watch, and it's a wind-up watch. And it's not even in my watch box on display. That's how nice it is. It's one of my favorites. I wear it maybe once, twice a year at best. It's probably worth a tenner at best.
I kind of feel like this comment though. Like I feel like honestly, I like couldn't care less about, you know, maybe if I would have to, like, honestly, like nobody would probably invest in me, you know. Like I show up to meeting, I'm like, you know, but yeah.
I think
I feel like
exactly with that comment. Like, it's the difference between flaunting it versus you do it because you're actually into it. Like if you're probably into cars,
Exactly.
Yeah.
completely different, and it's going to be a completely different thing. The same thing we were talking about with watches. If you're actually into watches, you're going to be talking about random, you know, brands that people don't know, etc. Like you're going to be in the weeds with the depth
You're
of
an
whatever. Right?
enthusiast.
It's yeah, you're an enthusiast, and it is night and day. It is so obvious, so clear. There's no question, right?
Yeah,
So
100%.
Griff, how many Rolexes do you have, Griff?
0.
But I know
No,
that
but-
you're wealthy. You have
Griff,
the love.
show
You have the
Jonathan your
love.
new watch.
I was
I
going to
did-
say,
I
hang on
did
a minute,
get
you
a
can
new
have a Rolex, but he's got a hell of
That's even better. Yeah,
I got
his
an
new watch
Audemars
is even better.
Piguet.
He has got a hell of a piece.
Oh wow,
He's
that's
got
good.
an
That's a
AP
nice
then.
one.
We've got an AP.
Yeah.
Nice. All right, so I'm the so I'm
That's
actually the
1,000
only one here
times better.
that don't have a watch.
It's the only watch I've ever wanted. I bought it now, and now I don't need to buy a watch ever again. That's my attitude.
That's a quality class selection. I would say.
Yeah, no,
That
that's
is
it. No,
beautiful.
I give you a lot of respect for that.
I've actually
Yeah.
got to shoot off while there's a gap. Thank you guys for having
That's
me,
right.
and I'll see you next week.
Griff,
All right, thank
No
you,
worries.
Griff.
See you, Griff.
Cheers, guys. See you soon.
Ciao. Enjoy the
Cheers,
watch.
Griff. Yeah, we went so off the rails with
enjoy-
all of the
enjoy the
interesting
evening.
conversations today.
Yeah, we did. It's right.
But it
I
was
was
fun.
still doing stuff in the background, so it's all good.
Fine.
We've definitely, as far as markets, like we've paused out here. We're not doing. We've basically hit like a.
Yeah,
we haven't
literally,
gone anywhere
I
for forever.
Yeah, I had 300 bucks this morning, and then the market's just switched off. So I was like, okay, looks like I'm not trading this afternoon then. So maybe New York session will have something, but right now I'm completely flat in the market.
Yeah.
But another watch I really like is the Hublot. LJ, I don't know if you've heard of that one. It's
Hublot.
Yeah. Oh, is it the Hublot? Yeah. I just call it Hublot. You can go to show. I don't speak to people about watches, so I just read it as it is. Dude,
did you say Hublot?
Yeah.
Oh, LJ is left. Look at that. He is so embarrassed. He is left.
He's like, it's
yeah.
Hublot. It's Hublot. Well, how dare you call it Hublot?
Hublot.
Like, that's another one. You know, that's more expensive than the Rolex Daytona, which is like the peak. It's the top quality Rolex. However, for me, give me a Hublot any day. Anyway, guys, I got an important call coming, so I've got to shoot off. So I'm going to let you all leave you. I shall speak to you all tomorrow for my competition with Samir. So I shall see you tomorrow, guys.
Hey.
Thank you very much.
See you later. Yeah, I got the finals tomorrow. Around this time tomorrow, we get the finals.
Yeah.
Nice.
All right.
I'll say
How you guys doing?
Kind of rubbish. That's a rubbish watch.
What's up, Hublot? What's up, Hublot?
Hublot. Also, Jonatan, side question. I will have to go soon. My partner's here, so. But are we doing the side rounds? For the
I'm currently working on a structure to set all of that up. I'm trying to figure out what would be the best way to do it. I want to make it fun. And what I mean by making it fun is maybe getting the audience in on each of the matchups, you know. So this is gonna be the side quest, you know. This is gonna be the crazy wild card tournament where we might have a competition within a competition. So, for example, if you're leading, and I'm gonna say the one that first names 5 fruits starting with A gets $100 extra on the bonus, and then nobody can name 10 fruits that starts with A, so you don't get it.
You said 5, so you're already going back on your word. So
you see, that's what I said. Crazy wild card.
What if there aren't 5 fruits that start with A?
Then you're broke.
First is apple.
Brokey. That's it.
Then
You're broke.
everyone loses.
Yeah, you can't even name 5 fruits.
Well, my Bugatti is blue.
An art apple.
That's my answer.
That's right. Questions like, if your Bugatti is blue, then what is the color of your Ferrari?
Red.
There's only one Ferrari color, mate.
Resale red.
Exactly. If you don't say red, and you lose money. ECS.
No, you make money. It's resale red. That's the whole point, Jonatan. No. God, you're terrible at this. What are you, an investor or what?
You're gonna have to do food related things.
By the way, on a side note, I ordered a lamp from Amazon
from IKEA
yesterday evening, and I got it today. I got it now. Like, I got it an hour ago, and I live in in the forest. I have wolves around the house. Like, I live in the middle of nowhere.
Sorry,
what?
It's pronounced IKEA.
IKEA,
yeah, not ANAZON.
Yeah,
I don't think that's how you spell IKEA.
It's IKEA.
You can barely order from IKEA. They don't like they have the worst web shop ever. Like, their e-commerce. Yeah, so if you work in e-commerce, maybe call them up because they suck. IKEA is great, like in the actual physical place, but on the internet, no.
I got a story about the last time I went to IKEA.
Yeah, me too, but I think it's not a great time to share it on the live. So I've been in many different IKEAs, and
IKEA is great.
I love IKEA, especially after closing times. That's the best times in IKEA. Because you have so many options of beds and couches and kitchens, and you can remodel like how much you want.
Dude, I know you can. Yeah, pick your own house, and you want to go to a different. You're like, oh, now we're in the.
It's a literal one-stop shop for everything.
Yeah, I love it. But then they started installing all of this surveillance, like cameras and 24/7 security. So got crowded.
They're not very
got
effective.
crowded. Yeah. IKEA is very fun. I love it.
I will ask Johnson, have you decided anything further on your dollar CAD trades?
No, I haven't looked. I haven't really looked at the markets. But so looking at the daily right here, I mean,
I will say I have confirmed that I am still very much bullish. Just like we're getting the downtrend right now, a bit of a pullback. I think we're still very hot though.
Yeah, but I think we're getting a local. I think I took profit at the right time. I think we're getting a local.
Yeah, exactly. That's what I was going to say. Yeah.
I'm going to preface. Just be aware when New York session opens up that yesterday being the whole of North America almost bank holiday, there's going to be some stuff waiting there from Monday, effectively.
And we do have Trump. Sorry, not Trump. Jerome Powell.
Fed Powell
speaking as well. So yeah.
Interesting. I wish I just didn't have so much on my plate, so I could just watch just watch the market and just analyze the markets all the time, because it's difficult to do that when you're like doing proper research when you're live streaming. It's not really possible, because you need to go all through reports and articles and look at interviews and all of that to really create a picture. And so the only time that I really have is like in the evenings, but then I have to study for CMT. But man, there's so much information out there, especially what we talked about this morning, LJ, with the 4 turning and that book and what they're doing over at 42 macro. Like it's a whole new universe.
Yeah, that's actually crazy that you linked that up, because I've been running off that framework for a long time.
Yeah, and it's probably why
I've been going like, this is too orchestrated, too whatever. Very funny that you brought that together.
Yeah, because I read, I saw a video from that. Now I can't remember Darius Dale, and so I saw a video, and he's like, "Oh, shout out to my mentor, Neil Howe, or Howie, or whatever he's called." And I'm like, "Wait a minute, I remember that, right?" And I went back to the conversation. He said the book 4 Turning. I googled it, and I was like, "Well, that's the author." And I'm like, "So okay, so he's the colleague and mentor." So I went back and looked at what actually he did, and he was actually the senior executive at a research firm on Wall Street. So I'm like, okay, this guy is actually the real deal. And then I started reading on, interesting.
It goes back to what we were talking about yesterday, as far as the information type thing. Like if you know these things, then you know this stuff and you know where things are going. Definitely. So very curious. Rich, have you read The 4th Turning at all?
No, but I was going to ask you for the name of the book so that I can go and read it, because I do like reading quite a bit. So what's the name of it?
So I'm subscribed to this macro fundamental analysis community. Now, if you're watching this, let's 42 macro, and then you'll hear that I'm going to send it to the CEO, and he'll give me a free subscription, because now I'm here, saying this. The first one's free. Anyway, so I'm subscribed to 42 macro. Really good, like really quality stuff. I'm paying. Now I'm paying for the daily, the weekly, and the monthly, because like when I realized, like when I put all things together with what LJ talked about for all this time, I've known LJ. He's talked about specific concepts, and then I like put it all together and I realized that that's actually what this guy is focused on, and so I'm paying like $195 a month, which for a lot of people might sound like a lot, but it has really, in the last, I think 3 weeks, only 3 weeks, I've been studying this, and it has really excelled my understanding of fundamental analysis to new levels. So I'm really impressed with that. Now, it's one thing knowing why something is moving, and it's actually not that difficult. I mean, if you spend a week studying what gold is and why governments and institutions are piling into and central banks piling into gold, it's easy to understand why. But that doesn't really do you much, understanding why. It's understanding the shifts that will make you money. Yeah, the what happens, like what's the where's the top? What happens at the top? What type of mechanics do we need to see for the people that is driving the market right now? What do they need to say and do for us to for that to signal a top in gold, or at least a pullback? Because as we know, and what LJ, what you talked about as well, gold is not going to crash. Because the central banks, the governments, they're buying gold. They're not going to sell gold. They're accumulating gold, not to sell it for a profit. They're accumulating gold because they need to hold gold, and they're not going to get rid of gold. So it's not going to crash. It's just going to go up in not as fast, right? Like Bitcoin, for example. So understanding when is that shift coming in, that is the true. That requires to be a true master at these, cycles and fundamental analysis. And I think that's the difficult part. And only, understanding the why is, I believe, a years-long journey. But then understanding the shifts, that's because they don't happen very often, right? They can happen every other year or every 4 years or something like that. So you have to actually you need to have that information when it happens. And also have the balls to actually act on that information, which is
that's the big part.
And I'm looking at my long-term dollar potential bottom scenario here, and I feel like the more I look at the bigger channel, the scarier it looks for my potential dollar bottom idea. But I have like 110% conviction on this idea until it's invalidated, right?
Yeah, the thing is, I think, like we were talking in the other chat with, you have to remember, like Mike brought up, that this is the Dixie, right? The main Dixie based on the 6 currencies, so 6, not the entire dollar complex. Because if you look at the entire dollar complex, it's a bit different, right?
Okay, so can you explain what? Okay, so what is the entire dollar complex? Where can we see it? Do we have graphs for that? Do we have, like, are we talking about the government spending, the debt, the employment data? Like, do we have a specific graph for that, or is it just everything US, and then we try to quantify that?
Before you jump, LJ, I need to go see a man about a horse. So I'm going to jump off, guys.
Man about a dog. Yep.
Cheers.
All
right, take care, man.
Stay rich. Ciao, man.
Hey, no, I don't have the SS for that. How are you guys?
How are we doing?
Welcome.
I'm good. What about you?
Doing well.
I'm fantastic. I would be better if LJ could really make me understand the.
Yeah, I also want to know about this.
Yeah. So basically, the Dixie is based off the. Okay, so I'll rattle it off. So it's the euro is 57.6% weighting. The yen 13.6. The pound 11.9. Canadian dollar 9.1. Swedish krona 4.2, and then you got the Swiss franc.
Did you say Swedish krona, really?
3.6. Yeah, that's in the basket. Yeah, for the Dixie. So you can see that you're clearly missing a lot of big currencies, like the Aussie dollar, for instance. You don't have any reference to the yuan, nothing to the peso, Canadian dollar, that kind of stuff, right? Which are massive trading partners. So you get distortions in the Dixie itself versus viewing the dollar index on like a trade-weighted basis across all baskets or some other metrics, which have the wider, basically the broad dollar index, which is going to be a bit different. But now you're seeing distortions from those specific currencies and not seeing the influence from everything else, right? So once you start to realize that, you go, okay, is this chart actually true? Or I'm just viewing a couple currencies put together and that's it. Right now, the reason that those currencies are in the basket, they are the bulk of trade. But you can also see that in the current times, some of those might be less relevant these days. Like, to be fair, you have the Swedish krona. I personally would potentially replace that with the Aussie dollar.
Never. We could. It's just, we don't have to replace it. We could just add something else. It's obviously a very important currency for world trade, international trade.
Yeah, and so the reason is you have some of the commodity aspects there, right? And energy, natural gas, that kind of stuff. But obviously, Australia is like right in the core center of all this stuff, and has the window to China. And is literally the single middle point between China and the US. So you would think you would add that to the basket now. So arguably it needs to be updated, that kind of stuff. But right now everyone runs off the same typical dollar index. That's the portion where you're going to get distortions, where it might be somewhat, I don't know, lying to you to a degree. Right.
So I did something interesting here. Put on the Bloomberg US dollar index, which has a different weighting, I believe, but it looks fairly similar. So it's for the last 5 years, and I think it's so basically we can go back to
Let's make it simple. That's about 124k, isn't it? Or so.
Yeah.
Right. Yeah, so that would be the broad trade-weighted dollar index. So including stuff like China.
But this is actually quite similar, because you see that the lows that we have here, that's going to be those lows. And then you have this consolidation is this one right here, which is right below these lows. So that one doesn't really give any...
Not quite, because if you move the chart, can you move the chart on your screen?
This one?
Yeah. So if you bring that down to the bottom, so zoom out from your trading view chart.
Okay.
Yeah.
You mean like this?
No, but put the secondary chart down towards the bottom. Yeah, and then zoom out further on the trading view chart.
You will zoom out.
Yeah, so we can see both. Right,
yeah, but
so
this is just a 5 year.
Yeah, exactly. So that's what I'm saying though. Then we can see how the Dixie has priced higher highs, whilst the other chart has not.
No,
right,
so this chart, we're only looking at this time window.
Yes, but look at the difference between the high highs versus the one that you have as the secondary.
Wait, am I retarded? There's no higher highs. Oh, you mean these ones?
Yeah, so look at basically what I'm saying is the distortion between the high highs on the Dixie versus your trade weighted chart. It's not at all as aggressive as the Dixie chart that you have. Right, so zoomed out, the Dixie chart looks pretty tame. But if you look at the same window zoomed in, you can see the Dixie went much higher than the trade-weighted balance chart. They're similar, but different. And so if you mega zoom in to the recent activity, and if you didn't have that on a 5 year, you'd see that the trade-weighted balance, that's obviously like a smooth line, not like a candlestick chart.
Yeah.
But you'll see it's slightly down versus the Dixie has come up. So whilst the Dixie has come up, the trade-weighted balance chart has actually still stayed lower and has not broken any highs. Whereas
Right,
the
okay, so I
Dixie looks as though it's sort of breaking out.
Okay, so let's see if we can find the trade weighted US dollar index for, or see if we can find the broad dollar index. It's supposed to be published by.
Look at it on like a 1 year time frame or something.
But I want to see if I can find this one. I think I have an interesting chart here for you, which gives a different. Just give me a second. I got a phone call here. Just give me 1 minute.
Yeah, sorry. How are we doing, Samir? Doing well?
I was in a trade, so I was looking at my phone. I just closed it.
Yeah? What are you in? Out of curiosity.
I just took some gold sells, some kind of liquidity play. That trend line liquidity I just secured, I think, maybe 80, 90 pips. I don't know. Okay, so let me explain why I took this trade.
Yeah, go for it.
There's this thing just for the disturbance. Okay. So if you go to the 2 hour time frame, I'm not a big fundamental guys like you are. I just see the charts. If I see some, technicals aligning, with my view, I just take the trade. So I just saw these wicks. We are trying to kind of reject from here on the 2 hour. So I just go to the 15 minute. Then we was having this consolidation. Then go to the 5 minute. Then we was having this trend line. So I just shorted it somewhere around here. My stop loss was these highs. And I was just targeting this liquidity move. I think I closed somewhere around here. Yeah. I do think from these areas, so we can go to the upside because, if you see, like everyone knows about gold, so I don't have to, say, but we are in a very bull run, aggressive bull run. So that's why, secured some profits and moved on. I took one more trade. It was euro-dollar shorts in the London session. It was simple Fibonacci pullback. I just took the entry around this area. My stop loss was here. And my target was this candle because this candle was having no wick. And I have seen these type of candles do, in future, price comes to make a wick. So my target was this. So it was a really good day for me today. Yesterday, it was a losing day. But today, I recovered that. And on top of that, I made a little bit more. So that's how trading is, guys. You lose and next day, you do the same thing. And you win less, you lose less, and you win a little bit more. That's it.
That's good. That's exactly what you want. I have definitely been... We were talking over the session, like leaning on sells for gold. We had a number of people talk about active trades.
Was you having any fundamentals aligning with the sells? Or it was just technicals?
Yeah, so a bit of both. So right now, like I can see a bit more upside for gold since we've had these runs. Overall, I prefer to short at some of these tops, just like we had that big downdraft. I've said that a number of times the past 2-3 weeks now.
Yeah.
I prefer to find the tops and then short those big sells. But intraday, if you're wanting to trade actively right now, I can see longs either from here or just earlier. Like you've mapped out the lower section, that's definitely buying pressure coming in there.
Yeah, exactly.
That's what we're looking at. Yeah, since we broke, just like you've got that trend line sat through there, I was looking to potentially buy off of that. For a rally up towards the highs. But as I caveated, I prefer to sell overall from highs rather than keep going long at this point. We've definitely got momentum. We keep going up at the same time.
Yeah, exactly. This is just, I think, some kind of liquidation in my how the information that I've received so far. Some kind of liquidation for big guys. Then I don't know, some traders, then they are just gonna step in, the big traders, the big hedge funds. I think this just kind of a false move because, as you guys mentioned, like central banks are really buying gold aggressively. So Yeah, these type of big things.
They're buying aggressively and they're not selling. That's the key point.
Yeah, I didn't know about that. They're not selling.
No, yeah,
that
just hold it
has a
right.
Yeah. I don't know. I think how the world is gonna be next 10 years. I don't know how these markets are gonna behave. This gold. So yeah, let's see.
Definitely.
We have a question here. Monday and Friday, probably you're gonna have more wins. Like, it's not that, I believe that some days are yours, regardless of what you do. Even if you just take a very random entry at a very wrong point, I believe some days are yours only. That trade is gonna play out regardless, and some days are not yours. Even if you take the perfect entry, every confluence was there. So I have, realized when there is not your day, you just stop. So as you mentioned, Mondays and Fridays are you have more wins. I don't live by that. I don't believe that. I believe some days are yours. Even if you take a very bad entry, or I don't know, very, even if there is like nothing. So I think you should know when to stop. That is the only thing which is gonna make you money in the long run. It has done for me.
Long enough, and you've had... Was I not on the screen?
You back. No, you weren't. No.
Yeah, now you're...
I just put you back.
Now you are on the screen.
One thing to add to that is, if you've been trading for long enough and you've had a fairly, especially if you're, let's say if you're a discretionary trader and you've been a discretionary trader for the last 10 years, then you look at your data and it's all going to be there. Like you can see, for example, you have, so when I traded between 2019 and 2024, a very, very specific system where I took very specific trades, very specific system, and I saw that I was not, I think it was Mondays, I was not profitable on Mondays. So I stopped trading Monday. So I looked at my statistics and I'm like, okay, I'm not profitable on Mondays. So I stopped trading on Mondays, but on Fridays I was extremely profitable, but I had few trades, but a lot of profitability. So I think, if you have enough data, you can kind of look at the data and try to figure out what days are
in the process you get to know a lot, about yourself, about your trading. So in short, you are right only. So in the process, try not to, over trade, over risk these type of practices. The rest, I think in the process, you're going to learn a lot in your journey. So, it's a byproduct of that. Gold is moving very aggressively. I just closed a little bit early, but that's trading is.
Gold. Let's see. What are we looking at for gold? Okay.
So are you in any trade today? You got involved in any opportunity?
Well, I am in USD CAD, but I have been in USD CAD for... What is that? I entered at the end of...
Yeah, I remember you was planning for longs on the last week on the stream itself.
So, I will just interject and say, Jonatan, anything final that you wanted from me? Otherwise, I will have to go in a sec.
Yes, actually, yeah. I pulled this up. Well, if you need to go, then obviously we'll wait.
I can hang for a couple of minutes.
Just a few minutes, because I wanted to show you... I wanted to show you this. I found this one, Real Broad Dollar Index, on the Federal Reserve Bank of St. Louis, which is by the way, really good website. Really good website where you can have a chart like this, the Real Broad Dollar Index, which I'm not exactly sure what it is yet. I need to do some research.
I was about to say that it's the same one I was bringing up as well. So yeah, good. Yeah.
Right, and then what you can do is you can go in, you can edit the graph, and then you can add, if you go into add line, you can add different things onto this. You can add inflation data, CPI, PPI, you can add this to the chart. Very, very powerful stuff. This is so cool that the Federal Reserve actually has this. It's probably for macro data. It's actually one of the best public charting platforms for macro analysis stuff. You were.
I was just going to show you. Yeah, this is exactly the same thing that I had up as well. So we can go back to yours.
That's a different one. That's the nominal. That's actually a different one. We have the nominal.
Of course.
So I don't really understand what's the difference between the real and the nominal.
What do you mean the real and nominal? You've got the nominal up right now.
Yeah, but
right?
this is the real one. This is like the real broad dollar index. And this is the nominal.
So I'd have to look at how they measure that. What?
Yeah, we don't have to go into the details of that now, but what I do know is...
Go back to the real.
This is the real
I'm pretty
one.
sure that's just...
I think this is a monthly. I think the frequency on this, as you can see, the frequency on this is monthly, and the nominal, the frequency is daily. So obviously, you're going to have much more fluctuations in the line here, the price on the daily. But let's just look at the monthly here. So what we see here is that actually we haven't even broken down. So if we look at the low from July in 2023, and then we look at we look at that low in on the Dixie. I mean, we're looking at two different charts. The real.
So I assume the real would be. I'll have to look, but anytime you talk about real stuff, normally it's inflation adjusted in general.
Right. Yeah.
In economics terms, so I assume if we're talking a broad dollar index, that would be the real. In some real terms, inflation adjusted index, right?
Right. Yeah. So I'm just gonna see if I can take a screenshot of this and then overlay it to the Dixie, and we're
That's
gonna
what I
see.
mean. That probably wouldn't be comparable.
Why not?
Apologies.
No problem.
I probably wouldn't be. My voice is terrible right now. God.
Yeah, I can hear that. Maybe you want to take a break.
Yeah, that probably wouldn't be 100% applicable, because if that is a inflation adjusted piece, they're going to be very different. So it'd be better off taking like the nominal broad index. As
yeah, but it shows the same here. So basically, what we're seeing here is this low. So price is, oh shit, how do I go back? All right, so oh man, okay. Just need to go back here to 2008. Right, and then full screen. So the right now we're trading up here. No, this is actually from May. Why am I only seeing May 2024 here? Is it recorded quarterly?
Can you click the 1 year?
No, that's because I don't have it set for... I'm supposed to be like an expert at technical analysis. Yeah. I don't even know how to navigate a chart.
And also just click the the 1 year rather than back to 2008. We don't need that.
But this is the channel that I have on TradingView, so I just want to compare the overall channel. But we can look at the yearly here, and what is, or at least 5 year, because what I'm interested in is the fact that this low, the dollar currency index is trading down here. So we haven't even broken the 2023 low on this one.
Yeah.
Which is
that's what I was saying before, where it's not actually that low yet.
I know, and I can see this now. This is really eye-opening, because what we see here on the dollar.
Yeah, that's where you get on the Dixie. You could come much lower, right?
Yep.
Yeah. So, hence when you look at it that way, and especially if you go out to 2000, right?
Yeah.
Can you go like max?
Yeah, this is max. This is from 2005, I believe.
Okay.
Yeah.
Well, point is, from 2000 to basically 2008, we had the dollar declining through that whole period. We had the US ripping. And so it's the question of, do we get the same situation here where the US still rips, but at the same time, we get the dollar coming right off.
Yeah, but what?
Right?
Yeah.
So it's not out of the question, put it that way.
So the question is then, the Dixie might be the wrong chart if we're talking about actual dollar weakness. The Dixie might be a good thing if you're trading currencies, like if you're actually looking for setups in the currency market. But if you're
on the
trading,
majors, at least.
Yeah, but if you're trading the fundamental value of the dollar as a currency across everything else and not just the major forex pairs, then it is not useful for that, because the Dixie is only a basket. It's only compared to its 6 other currencies, I believe.
Yeah.
Which leaves
That's
out
the primary Dixie. Yeah.
Yeah. Okay. So it has something to do with dollar weakness and strength, but it has nothing to do with the fundamental value of the dollar.
Yeah. So you have to take the tangential climate that we have right now, where typically, yes, euro dollar is a major player in the Dixie overall, and you used to have the euro dollar swap market in general being, massive, less impactful these days. And now, since we've got China very much in the pocket, you need to take a lot more of those Southeast Asian and just Southern Hemisphere currencies into account. So stuff like Korean won, the Japanese yen is in there, but other stuff like the Australian dollar, these other components, I think to get a proper view. And even the Chinese yuan itself is not in there, right? If you take a trade-weighted balance, you include Chinese trade, which the entire point right now is dependent on Chinese and US trade. So to not include that,
so why is it completely? So
Yeah.
we're basically what we're looking at is just an old, an old basket, like an old idea that has
it's almost like looking at the Dow instead of looking at the NASDAQ these days. The Dow had its
really
time.
good point.
The Dow was great, and you had the top 30 companies and whatever, and now they've got a lot of legacy companies, and all of them are very blue chip. They're not really growing. It's kind of just growth at the same rate as like GDP. Where the real growth is the NASDAQ. The NASDAQ has outperformed the S&P by almost double over the past 15 years, right? As an example. Now, everyone benchmarks the S&P. The old growth sector would have been the NASDAQ. Would have been the Dow, and that was the volatile one. The new frame of that is the NAS. No one cares about the Dow, right? Old dinosaurs care about the Dow. It's not today's measurement. Today's measurement is where the NASDAQ is.
Exactly. It's the same as when Charles Dow created the theory of confirmation, where he wanted to see like if an economy was doing well, he wanted to see an uptrend in the like the industrial average and the railroad average. But like today, who cares about the railroad? Like nobody cares about that. So today, what you look at is most likely the Russell 2000 versus S&P 500, because you want to see like the large cap in a bull run, and you want to see the rest of the market as well in an uptrend. And when they deviate, there might be problems with confirmation. But LJ, you've been here for and you've been here for hours.
I would say just go straight NASDAQ, right? NASDAQ has all the companies that are going to propel in the future.
Yeah, but if you're looking for confirmation within, if you're looking to confirm two different indices.
Yeah, so I would prefer to go NASDAQ versus the Russell as an example, rather than S&P versus.
Yeah, that's right. I guess S&P is broader.
That or else, or even NASDAQ versus S&P.
I don't think NASDAQ versus S&P is going to work though, because they're too.
They're much closer. Yes.
Yeah.
But yeah.
The idea is you want two different aspects of the economy to confirm each other, and I feel like the NASDAQ and the S&P 500 are too much alike. Actually, I think there needs to be something completely different to confirm it, and I think that might be in the in this type of data that we're watching here.
Yeah.
Like maybe labor market and PPI, CPI, jobs data, things like that might be the thing that we need to look for confirmation.
Yeah. All right, we can talk about it later. Anyway,
yeah,
see you guys tomorrow.
Stuff, man.
Ciao.
Thank you.
See you now.
Take care.
See you, bro.
All right, so you know, LJ is actually scheduled to be on here like 2 hours a day. So the guy stays all day because this guy lives and breathes the market. So I'm super thankful for having him in here. He's a super valuable asset, and I know I asked him. I asked him on WhatsApp, I'm like, can you explain this? And he has sent about like 10 voice notes just explaining a specific
That's
part
good.
of the... Yeah, and he's just...
No, when you're dedicated about something, I think it's good.
Yeah, he's very, very knowledgeable in this. So the analysis that we just did here, basically my idea, I've been analyzing the dollar currency index as a representation of the dollar, and by looking at these charts here, I might have looked at the wrong chart. So, but in a sense as well, this also tells us that yes, the dollar can come lower, but it's also in an uptrend. This is more of an uptrend than the uptrend that we have in the dollar currency index. So it confirms that yes, we can have more dollar downside, but we could potentially also add some confluence to this being a low, because
testing a trend line really good. Let's see if in future we bounce from here.
Yeah, it's
what do you think about the the fundamentals also? What are your thoughts on this?
So right now I believe that we are in a an economy where the so we're in a state of the economy where we're in like a Goldilocks condition. I think we're in a Goldilocks condition where it's not too cold, not too hot with inflation and the economies. We have a very resilient U.S. economy. The American economy is very strong. I believe it's because we have we can look at it has like strong balance sheets and stable spending. You can look at the private sector balance sheets are very strong. In the labor market, I have seen like weakness in the labor market, but I think that weakness might come from companies are holding on to workers. They're not firing workers, but they're also not employing new workers because they want to see what happens with AI and AI's effect on the market. So this might show as weakness in the labor market, but I think it's actually an underlying strength that fuels the resilient of the overall US economy. And
I think today is some kind of voting thing in the US, if I'm not wrong, about the government. Today? Is there any voting today?
Voting? I don't think so.
Yeah.
I know, maybe you guys know more about that in the comment section. There's anything on that. I know from what I know is get a lot of earnings calls today. That's about it. That's all I know. We had BlackRock. Actually, let's see. I got an alert from Bloomberg saying that the JP Morgan traders bankers beat the traders at JP Morgan, they are beating estimates, which is good, should be good for the economy. So I'm going to look into that more, but we had BlackRock and JP Morgan earnings today, which seems to be fairly strong. Gonna look at the S&P 500, see if we had a bounce on the S&P 500. Should have. Yeah, it's definitely short-lived. We also have a lot of Fed speeches today.
Yeah.
But overall, I believe that we are in a condition where dips are to... we're supposed to be buying dips in this environment. In my opinion, you know, we're in the Goldilocks.
Yeah, it's gonna be a good opportunity for some investors, you know.
Yeah, and
what do you think about that crypto crash? I believe it's only 10%, whatever it was. I think it was just a small move, in my opinion. People was, I know there were many tragedies happened, but
well, if we look at, let me see, I just gonna open the tab here where I have. Okay, so yes, we have Powell, Jeremy Powell, or Jerome Powell, not Jeremy. He's going to be speaking soon. Let's see, when exactly is he going to be speaking? See if I can look that up. But speaking of the crypto crash, it wasn't really a Bitcoin crash. Right, so I have a red news alert here on Financial News, and it says the EU considers forced tech transfer from Chinese investments, with the EU also considering enforcing joint ventures. So I'm going to show you what I mean. Basically, it's this one right here. As the EU considers forced tech transfers from Chinese investments, with the EU also considering enforcing joint ventures. So I think an example of this was the Dutch government the other day acquiring or they took over a Chinese company within the Netherlands that is producing semiconductors that is obviously very much needed in the AI race. And I think this piece of news right here is probably, you know, along those lines. It's about the same thing. And I'm thinking, you know, if the EU is going to do things like this, that's probably not going to be sitting well with China. And we'll see if China is going to ramp up the rhetoric with the talks of trade wars against the US because of this. But overall, I mean, we know that if China wants to start a trade war with the US, we're going to go in a recession. The bull market is over. No question about that. But I think what we're seeing from Trump right now is this is tactics. You know, this is his art of the deal. This is just negotiating tactics ahead of that November trade deadline. And I don't believe it's the start of a new trade war. There's going to be lots of back and forth. So there's going to be a lot of volatility in the markets as we have that back and forth negotiation between the US and China. But overall, I think where dips are to be bought. And there's also the talks about a potential restructuring at the Federal Reserve. So right now, the Federal Reserve has a target of 2% inflation. The Federal Reserve have two jobs. They want to have max employment and 2% inflation. That's their only job, really. They want to make sure that inflation is as low as possible or as close to 2% as possible, and have as many people employed and working in the economy. And that 2% target for inflation, there's a lot of people talking about how that might potentially be too low and how they might move towards a 3% target for inflation. If they restructure the Fed and they instead go towards a 3% target on inflation, that means inflation is no longer high, which leaves more room for the Fed to lower interest rates and stimulate the economy, which means more room for a bull market. Because as I see it, the only really two problematic things for this current bull market to end is inflation and Trump. Basically Trump, when I say Trump, I mean, trade wars, him going crazy and actually implementing 100% tariffs on China. If it does, then that's the end of the bull market. If inflation continues to rise without the Fed changing its target, that could potentially also be problematic for this current bull market. And if they let inflation run a little bit harder, basically raising the inflation target, that's probably also going to be supportive for gold and perhaps also Bitcoin. So it keeps liquidity high. It's going to keep liquidity even higher, which gives more liquidity for the market and also a reason to buy more gold as inflation targets are now higher. So I think that's the main thing that I see is running the markets right now, and I don't see this stopping anytime soon. I think all the dips that we're getting right now is to be buying. But you mentioned crypto, right? So if you look at Bitcoin. Now, Bitcoin is dropping today, and it has dropped quite a lot throughout the day. And we came down. We first failed to hold the 115K level here overnight, and we then dropped down to 112K, found some support here at 112K, but then eventually broke down. We then came down and tested that 100, and so we broke below 112. We then came down and tested the region around 110, which is the low of the Friday dump. And the crash on Bitcoin wasn't really that severe. I mean, it's still fairly stable. You know what they say, the bulls take the stairs and the bears jump out the window, basically. So the moves to the upside takes a while, but the move to the downside is very quick. That's why you also have, roughly you got like 3 or 4 years of a bull market and then 1 year of a bear market. Bear markets usually last much shorter because it takes much longer to rise in value than it takes to drop in value. But then if you look at the altcoin market, that's where it gets interesting. We can look at an altcoin like Solana. Solana is a major altcoin. It's one of the biggest players in the altcoin space. And if we look at Solana, now we can see that actually the drop here, it's actually not a insane drop. Let's see, maybe we have another example. Look at Atom. Yeah, this is one of those examples. This is the crash that took out a lot of people.
Now I get it. I was just seeing the major chart. Maybe this is the thing. Yeah,
because in a lot of people were. So this is the chart before the crash. So this is what it looked like before the crash. Let me just remove all of these old drawings. And I know a lot of people started accumulating Atom within this range right here. And they did so perhaps on 2 to 3 times leverage, which means they're not over leveraging. And they might have their... So a 100 times leverage means that if price moves 1% down, you get liquidated. So a 50% leverage means that basically a two times leverage means you can lose quite a lot on the
I mean 50% drop can wipe your account.
Yeah, but you can, like on Atom, if you're in with like 2 times leverage or 3 times leverage, you can easily survive this drop. Okay, so and a lot of people looked at this and were like, well, this is safe, this is pretty safe. And if we break this low, I'm just going to close the position, right? So they don't have a stop loss. They're long-term investors, but they're doing so with small leverage. And then comes the drop, and it takes out not just these guys, but they take out everyone. So everyone that had any leverage longs, could be 2 or 3 or 4 times leverage, they all get liquidated, which is a lot of people. So that's the big issue, and that was caused mostly because of mechanics within that is operating within the crypto exchanges.
These moves are just pre-planned, in my opinion.
Pre-planned?
I don't know, these big guys, they pre-plan these things. That's what I think,
I think I don't think so. I really don't think so. I think this was really I mean, sure, there might be people having very low orders waiting for a drop, but I don't think this was orchestrated. I mean, this is not like a conspiracy or anything like that. I think this is something that happened because of mechanics within the crypto industry and the ecosystem. I don't really think this was something that was planned. I think this is just it's just a major liquidation event that I believe is just simple noise. It does not affect really the long-term view of the crypto market or anything. But what it does do is definitely
many people lost quite a lot of money. Gold was a good trade for me, and euro dollar for me for today. Yesterday it was a loss. Took one loss on gold.
Yeah, I bought the breakout here on gold yesterday. It hit that TP now.
Yeah, I also bought this on my very small lot size. I was just on a personal account. I closed at close to 4,100 actually.
Right, nice. I think we could potentially see a pullback here on gold.
Yeah, the 4-hour level that you have. 1 hour, 4 hour. That's the same area that I have, waiting for a pullback there. Then definitely some rejections. I'll be interested in buys again. The speech, let's see what the speech is gonna do. It's we still have time for the speech, like 3 hours. Yeah.
Get the IMF World Economic Outlook as well.
You mentioned about the software membership or something. What kind of software it is?
It's not a software. It's just a community with fundamental analysts. They're sending out reports. It's called 42 Macro.
42 Macro. Okay, that's interesting.
Right, so it seems like the bearish developments that we're seeing right now with the global equities retreating, moving lower, is most likely because of China upping its rhetoric around the trade tension with the US. And right now, we have the International Monetary Fund's economic outlook, and they are revising Japan's 2025 economic growth forecast higher to 1.1% versus 0.7% in July. That's interesting.
What is?
Hey Victor, how are you?
Victor? Going?
How is everyone? How are you two doing today? What is interesting, Jonatan? First of all.
I'm reading the International Monetary Fund's World Economic Outlook, and they're raising the economic growth for Japan, which is pretty cool. Now that they have the new prime minister, which is set to make a lot of changes.
That's quite interesting because the yen has been moving. We had that weekend gap not long ago, and it's been moving like crazy. So what do you think will it do to yen pairs? Strengthening?
So I think did you see what LJ shared this morning from Routers?
I'm not sure. Did he share more than once? Because I did see it, but I'm not sure if it is exactly.
No, it's the one you saw, and okay. Basically that analysis from Routers and. So let me break down what that actually means. So it means that essentially they're saying that traders are rushing back into downside protection on USD JPY, looking at pricing in the option markets, meaning that there's growing demand for JPY strength or USD JPY falling. Right, so they're the options market are pricing in USD JPY to be falling, which basically means yen strength. So looking at the economic growth projection from the IMF, they're projecting Japan to grow more than what they did in their last economic outlook. But the thing is that good for yen?
Normally, whatever is bullish for the country, it's bullish for the that means strength for the currency. But of course, with fundamental news, you also have to take into consideration the expectation, right? So if was this according to their expectation, then it's a non-event. But if the revised is surprisingly, better than expected, even if it's bullish, then if it is bullish, then it's going to be double bullish for the yen as well. That's my take on it.
Yeah, because I had a short open on Euro JPY, and I closed that one, and now it did break down after I closed that one, but. It does seem like the market is pricing in USD JPY to move lower. Anyway, very interesting moves in the market today. I've taken 1% profit on the USD CAD. I have 3 positions open and running on USD CAD here.
That's a beautiful entry.
Yeah,
you're getting in shape, Jonatan. You're getting in your element.
Dude, trading has been so good. I'm gonna see if I can.
Yeah, pushing the charts lately.
Yeah, I'm gonna see if I can show you my trading journal without showing you too much information here. So,
take your time. Take your time. We don't want any leakage, right? Although I've seen your bank account. No, I haven't. What happened?
I can show you my. So this is actually. Let's see. So let me show you. This is the trade journal I have. That is my main. My main copy trading account.
Main master?
Yeah, exactly. So this is the master account. It's the 40. It's a 40k hyper growth, and this is this month. Now, as you can see, I've made first week 0.31%, last week 1.61%, and now 1.17. But if you look at the R multiples, you'll see it's 5R last week and.
Nice.
2.27 this week, and this is including. So you can see the drop in the equity curve right here. This is where I went on tilt and took a couple of trades on gold that I should not have taken. So basically, this right here is me going on tilt, which is very easily fixed. So if you remove this, win rate goes up to 100%.
Basically, you're only scratching your potential, Jonatan.
Yeah, but this is, remember guys, this is getting back into active trading. I've had my portfolio running mostly with the EAs and I have only traded manually for the last 2 months. I've taken a break for like 6 months from trading with the main account. But now I'm getting back because now I'm coming back into the market with a. So basically, what I did, I took a break and I decided that okay, I know technical analysis, I know how to trade, but I need to incorporate fundamental analysis. So I spent about 6 months trying to understand fundamental analysis and understand how can I incorporate fundamental analysis and only take swing trades that are in alignment with the overall macro conditions.
Mm-hmm.
So that's what I'm trying new, and the results are actually very, very good.
This I think this is very useful for viewers, because here you have a successful funded trader who has a lot of experience and is still working on developing. That's normal. That's completely normal. That is why it is so unrealistic for a new trader to just think, I'm gonna master this, and in 6 months I'm gonna have whatever income they dream about.
Yeah.
Because that's not the process. It's an everlasting process of development. And yes, once you hit the profitability, it many things get a little bit easier, but you never learn. You never stop learning, and there's always another challenge. Like you went Untitled, you have given talks and presentations about psychology. You know how to identify it, how to deal with it, and still you're not immune to it, and I'm not immune to it. If I don't watch out, I'll do it anytime.
Yeah.
My next error is just around the corner if I'm not disciplined. This is actually true for everyone.
I realized
that's a true reflection or depiction of reality. And I think new traders especially, need to realize this is normal, and this is likely what your journey will also look like in a year, 2 year, 3 years time. Maybe different errors, but still in an everlasting process of learning from your mistakes.
Yeah, it's so funny. I go on Instagram, right, and I see all of these videos and clips of mentors and traders, and they want us to buy their courses, or they want us to buy their mentorship, and go into the profile and you see that the Instagram account is 1 year old. They're maybe 22 years old, and they've been trading, been in the market for 2 years. And it's like, okay, so you've been trading for 2 years and now you're mentoring people. So, okay, so maybe you've been profitable for 1 year. Maybe you're just a very quick learner and you learn to trade and be profitable in 1 year. That's possible, unlikely, but possible. And then you've traded for a year and now it's like you make money on payouts and profits and everything. But it's like you haven't even been unprofitable yet. Like you have to go through cycles as a trader, and I've been profitable and I've been unprofitable. You're not going to just go. It's not going to be a straight line from like you learn to trade and then it's just going to go a straight line up to making more and more money. Like you become profitable and then you give it 3-4 years, you become unprofitable. But then what happens after 10 years? You know what I mean? It's a long journey, and your system is going to go into ups and downs. I see a lot of people, they're like, during COVID, they're like, I traded the NASDAQ long only. profitable traders. Like, no shit. You're in the biggest and best bull market the humanity has ever seen, and you're going long only on the NASDAQ and breaking retest. No shit, you're going to be profitable. Everyone's profitable in the bull market, you know? But it's like, what happens when, what happens when the system breaks down? What happens when the music stops? And exactly. It happened to me. That's what happens to me. I became unprofitable. I had the system, the RSZ slingshot. I remember the very first appearance in the 5ers Live Trading Room was before I worked for the 5ers. I did an interview on at the 5ers, and I'm like, yeah, this is the system I'm trading. This is called the RSZ slingshot. I've developed it myself. This is the system I'm trading. A couple of months after that interview, it stopped working. We entered a new market regime, or something happened, maybe with my own psychology, but I became unprofitable, and now I'm back. That's the reality of trading.
Yeah, it goes
same for me actually, as I got profitable in 2022. 23 was good. 2024 was a big disaster for me. I got unprofitable.
Same here. That's the same here. Like 2024 was just a disaster. I think something changed.
2025 is going decent.
Yeah,
so exactly. Yeah, you said it right. You said it right. You get profitable, then you get unprofitable. But you should be on a path to be better, I think I have been that trader from the day one. I just want to be better. How I can improve in this, maybe how I can improve my win rate by 1%. Okay, this thing can help me. So I have been that kind of trader. Even nowadays, if I see something, I am open to, look into that system or maybe that particular thing. I am open to it. I just want to make myself better. You said it in the right way.
Yeah, I'm actually not interested in systematic trading anymore with technical analysis. I'm interested in, okay, so this is complicated, but it's difficult to explain. But if you have a systematic trading approach, you always have the risk of, because you're relying on the results of your systematic system. You're relying on the back testing. That's all you do basically. You rely on the back testing, and you basically say, okay, the back testing result is this, and then all the Monte Carlo and walk forward testing and all of that you can do. You rely on all the data, and then you say, I'm going to trade this system, and I think the past history is going to repeat itself. And if you have, let's say, 40 years of backtesting data, yeah, probably you'll make money on that. But there is always the possibility of the system failing, going from profitability into unprofitability. But when do you notice? That's the big difference. Now, what I'm trying to do is I'm trying to align my trading with the underlying fundamentals and macro of the market, because I think, this is my reasoning, if I align myself with the overall direction of growth in the economy, I think I will be able to also quickly identify when we're going into a new cycle and a new macro theme, because that's where you have to be careful, because that's when you have the biggest danger of your systematic trading becoming unprofitable. So that's the journey I'm on right now, and I don't think a strictly technical analysis systematic system is going to be able to replace the human brain's intuitive way of thinking in terms of these cycles.
I see your point, Jonatan, and actually we do have a question which is sort of similar to this one. What you're talking about, whether you're going to systematic only, and now you're thinking systematic has its flaws as well, even though it's based on evidence, data, and everything. It's still based on something of everything that happened before, and in doing so, it has a inherent lack for adaptation for something it has never seen in the past. That's what you're saying. If something new comes, a regime that we haven't seen, or where the systematic system wasn't, your system wasn't trained on, quote unquote, it doesn't have a mind, but you know what I mean, then it can never be ready for that. It can never, because it hasn't seen it yet. However, there are things, I believe, and I think you're going the right way, Jonatan, my humble opinion, in including, fundamental news, because I think I'm missing a lot by not having, more knowledge about that aspect. Like LJ all the time shows us, how things are in a much clearer way, and I'm positive that if I had, his knowledge and his insights, and combine them with technical analysis, it will definitely improve anyone, but me specifically. So I think you're going in the right path. However, I think one thing, if I can put in, is there are things anyone can, when you're having a specific system, you're trading systematic, not discretionary. If you have enough data, you know how your system is supposed to perform in its worst and best periods. And so you can actually compare any time in the future with these ranges of what is normal for your system. And while it's still in between, it is performing as it has in the past. And anytime it goes beyond 2 standard deviation of the mean, for those statistical inclined among you, you know what I mean, when it deviates too much from the average that it has seen in the past, then you can safely say there is a good chance that something is the likelihood that this is normal is small, meaning it's quite likely maybe something has changed. Maybe there is a regime change, and I need to either stop this, or maybe lower my risk, or do something about it. So there, even though it's not prepared for the future, we can identify these moments when to stop. And that's one thing that I want to say. And the other is, I think you're completely right about the cycles. System go through cycles as well. Traders go through cycles. The cycles is a natural occurrence in everywhere, in the markets as well. And this is something we need to embrace. And that's why a limited experience as a trader as well is not very credible, because you haven't gone through the cycles yet. You haven't seen the down the period in your lifespan where your system isn't having an edge in the market, or it's not as much as you had before. How will you psychologically deal with that? It was easy when everything was going your way, but are you still able to stand facing and still not going on tilt when things are going against you consistently? And it's difficult, and that's why you need to have a much longer, and not to expect too much of, not to think too quickly that you got this figured out, because I'm pretty sure you haven't.
I think by witnessing a cycle in the market, you build some kind of intuition and gut feeling. What are your thoughts on this, Jonatan? Or you still believe this thing will not work in long run, as you have been in the market for quite a long time? So I want to know what your thoughts on gut feeling, intuition, when you have seen a lot of chart data, or maybe we have witnessed some cycles, like in a war. Now we are seeing gold going up. You have some intuition. So what are your thoughts on that?
So I believe that as a discretionary trader, so being a systematic trader and a discretionary trader, they're not they're not completely separated. Like you have to look at, if you're going to be a systematic trader without any discretionary parts, you have to be 100% systematic trader, and you're never going to get away from the discretionary part unless you have an EA and you just trade automatically. There's always going to be some parts of trading psychology if you enter trade manually. So unless you're an algorithmic trader, you are in a sense a discretionary trader, because all the decisions that you're making, they're never going to be just based on the signals. So we can have like, oh, I'm a systematic trader. No, you're not. You're just a less discretionary trader. So every trader out there, if they're not an algorithmic trader, is in a sense a type of discretionary trader, and that's why trading is so difficult, right? And the last stage of trading expertise is trading from an intuitive point of view. That's where you let your collected knowledge that you have in, be it fundamentals or technicals, but you let all of that collective knowledge process it itself in your brain, and then you make decisions based on that information without actively going through all the information and logic in your head before taking the decision. You just go on your gut feeling and intuition, and I believe that is the last stage of trading. When you reach that stage of trading, which a lot of people will never reach, that's like being it's like reaching enlightenment in if you're in Buddhism, right? It's like you get to that next level where you, yeah, exactly, where it's like you just do, like you don't think too much, you just do, and
you're being one with water.
Yeah, you're in the flow state of mind. Okay, that's the thing. You're not choosing to be a profitable trader. You just are a profitable trader. You're not trying to become profitable. You just are profitable. You're just going with the flow of the market. Basically, what you're doing is you're going into your office, you're sitting down in your chair, you look in the corner of the room, and there's a bag of money. You go over, you grab the bag of money, and then that's it. That's how you trade. So I would say that yes, trading based on gut feeling is it's the way to go, but you need to first have 10,000 hours of experience to even consider doing that in a profitable way.
By the way, as we were speaking, EU had a little push in on the 1 minute time frame. I'm gonna show it in, let's say it was 15 pips in 1 minute.
Yeah, you mentioned about that red folder, that notification you got.
I just got another one when I talked about this, and actually came out and said that the this is insane, but the French PM is proposing to suspend the French pension reform this fall. He's also planning targeted tax increases for some big companies, with the idea of saying we are asking for the creation of exceptional contribution for large fortunes to fund future investments. The French government is going like all in. Can I say socialists? But like they're going all in on taxes, right? They're like, okay, we need taxes. We're gonna be asking the biggest fortunes company within the economy to give us money.
And why is EU going up on that news?
I guess
15 pips on 1 minute candle, and it's clearly, I don't know if that's the timing, but this is clearly market responding.
The news on the tax came out at 15:17. So right here, this is where the news came out. So it's right where the news came out, and he also said at 15:24 that he proposed suspending French pension, and 24 is right here. Yeah.
Yep.
So
that's the pension announcement right there.
That's the.
It's clearly the highest probable cause for this move. But the question is, maybe it's because there's something to be done, right? Investors, they hate uncertainty, and even though they may not like the solution, at least there is a plan. Whether it's good or bad is second stage thoughts. Maybe that's the thing, because taxing more on the companies to fund V forms, that does not sound like business friendly, is it? Does it?
This is not, of course not. It's government friendly. I mean, raising taxes, and not only raising taxes, but saying like, okay, we're not going to raise taxes for everyone. Use the big companies. We're going to basically, I mean, what this is basically they're targeting certain big companies, and they're taking money from those companies. You can call it tax or whatever, but it's basically the government taking money from the biggest companies in France. Now, call it whatever you want. That's basically what it is. Yeah.
It's still tax. I mean, it doesn't have to be called tax to be tax. This money is going to the government, and you don't have a choice, then it's by definition tax. It's a way of tax. There's something I think quite interesting, because yesterday, we're not doing the full, or actually I'm not doing the full analysis. This is the daily time frame. That it is not. That's the 4 hourly. This is the daily time frame, and we identified this area earlier as a good candidate for a demand zone based on the quasi that we have to the left. This is on the daily time frame, so it's quite, it's taking into account price action all the way from July the 1st. And the close that we had on, let's see here, which was on the 9th of this month, invalidated that order block. So to me, that means that we are left with nothing to hold, at least on the daily time frame, nothing to hold price and to impede it from going lower. Doesn't mean it's gonna go in a straight line. Nothing really moves in a straight line, unless you're a rocket going, to the stratosphere. So whether we're gonna, continue quickly, or perhaps with some push up as we go down, that's a different discussion. But that we're likely to be going down is, to me, on the daily time frame for the coming, couple of days, perhaps even a week or two, it looks quite likely, very likely, I would say. So on the higher time frame, for a swing trader perspective, I expect lower prices for a week, 2 weeks from now. And on the H4, right, for our intraday or day trades, I see as we came to the, you can see how impulsive these candles, this one candle was, and that, yes, we did have another, almost equally impulsive move back, but it failed to make higher highs, right? So it's actually just within high volatility, but still within that downtrend, making a lower, it is a lower high, because that low went lower than this one. What it's telling me, at least, is that we're getting into a demand zone, yes, that swing point where buyers are coming in. But as we are getting near that, we are still creating bearish order blocks. Now, this order block can, in maybe in an hour from now, be invalidated, and then everything that I just said, goes back to the freezer. But if we hold this order block, that could be a nice, jumping pad for the next leg down, right? So, if that is the case, if you go to the daily ATR on EU is currently at 72 pips, and if we measure what we've done today, it's 51. So we still have about, on average, 20 pips to go. Now, the question is, which of the two sides will it expand its range on? It's difficult to say in advance, because we are from a demand zone. We already touched that swing point, retested it. So it could just as easily, have a little pop from here, because, we have come quite a long way already, right? It is ripe for a possible retrace. So keeping that on the back of our head, we want to be eager to short this, but not marry that trade, because if not, then it's likely going to be the beginning of a much bigger retrace. But if we do get the H4 as the area, we do have an H2 as well, so that is the area that I'm looking to short, to see if the market is ready to push for another leg down, perhaps today, perhaps, well, maybe tomorrow, who knows. But that's what I'm looking for on EU, and it is quite interesting that we have this move, and I'm looking at this order block here on the 5-minute to indicate possible trade here. Only if it reacts. I know it looks very scary to wanting to short such impulsiveness, but if the market is confirming, then it is confirming, right? So if you see that the market cannot break this order block, that's the sign, and the sellers are coming in with power. That's what you want to be seeing. And as long as it does not happen, you don't want to be stepping in front of this train, because it's quite impulsive. So if it's going to break, it's going to just continue go on and on and on. You don't want to be against that. So I think it's quite interesting. EU, that is.
Yeah, guys, I'm gonna have to leave you guys, and I will be back tomorrow, guys. Don't forget to check the giveaway that we have in the pinned comment. We're doing giveaway, and we're going to be giving away 10 evaluation accounts during the final of the trading tournament tomorrow. It's gonna be Will versus Samir. That's gonna be very, very exciting. So I hope to see you all
let's see.
during. Yeah, it's gonna be very cool. All right, see you guys
who's your
tomorrow.
favorite, Jonatan?
Samir, I think. Yeah.
Thank you.
Wow.
Yeah, I think. I think Samir got this. All right, see you guys tomorrow.
Take care,
Take care.
Jonatan.
Bye bye.
Yes, Samir, I saw your chart on NAS. Are you almost getting into a trade? We have about 25 minutes, 24 minutes.
I already took few trades today, so I'm done for the day actually.
Okay.
Are you getting the background noise?
Background noise from you?
Yeah.
I heard Jackie in the background having some very nice dreams.
Yeah. Anyway, so I took a small gold shot here, somewhere down here.
Let me
booked
show
around.
let's show your charts.
I took gold shots here. I booked around I think 100 pips. I'm not a pips guy, but just for the viewers, I'm saying, if you want to say R, I was risking, it was like 0.5 R I booked because I was already up for the day. So I just wanted, I risked a small amount of money, and I just, a win is a win. So I just secured 0.5 R. This was kind of intuition trade, because this was similar trade that I think I explained on the stream also. I expected this trend line break and this order block tap. And if you go to the 2 hour, look at the candle's exhaustion. I'm not a big fundamental guy like Jonatan and LJ, but the way I was seeing the chart, I was seeing some exhaustion happening. And this gave me the confidence to short just for the smaller move, just, till that order block, this order block. So I shorted and secured some profits here. My main trade was on euro dollar actually.
That's a nice one. Gold, because I think I took the same trade, but on GU.
Oh, okay.
An early trade
I shorted
today.
Sorry?
It was a very early trade today.
Yeah, this was a before London session actually. So my time zones.
I took the same trade, but it was on GU. I can show.
Yeah, GU was also going.
Yep.
Very good.
It worked like a charm. That was
amazing.
It's always great when it just you get in, it never looks back and just straight like an arrow. To
exactly.
Target.
And these wicks that I have mentioned a couple of times, like candles having no wicks. So these are really powerful when like price is trendy and the wick is not formed yet. So there is high chance the wick is gonna get formed. So I took 2.7% here, 2.5 I think. So somewhere around here. So
2.7.
2.4.
How much were you risking?
I was risking 1% only. Yesterday it was a losing day, lost 1%, and today I think I got 2.4 here and 0.5 on gold. So it was a good day for me today.
You're on fire.
Yeah, tomorrow we have a competition. Let's see. It feels bad, at the start it was like, okay, let's see. But now we are just moving to the finals. I don't want to lose now. In the first two competitions, I was like, okay, let's see what is gonna happen. It's a competition. I should treat it like a competition. But now the feelings are getting, the emotions are there now.
and now the better trader comes out, right? Because now there's the experienced trader is the one that can perform under pressure. Now before you didn't have pressure. You said it's just a competition. I don't really care. That's basically what you're saying. But now you're in the finals, and now you actually care. So the question is, how will you, what will your performance be? I don't want to put any more pressure on you. I'm just saying.
Yeah, exactly. I just apply this 200 EMA. It is working good actually. As I mentioned, like couple of minutes before, I'm a big believer in making myself better, like how I can make more percent, or how I can maybe improve my win rate, maybe 1%, maybe 2% in a long run. So I just added this 200 EMA, just want to share with viewers. So it is working good actually in a very
200 EMA?
trendy market. Yeah, 200 EMA.
It's not very visible though. I think it's yes. I think
I'm just gonna
there. Thank you.
So 200 EMA. You can see it on the trendy pair like gold. When it comes near 200 EMA, of course, you should do your other analysis also, like support, resistance, order block, whatever trading style you have. You can, combine this thing, like whenever it comes near 200 EMA, just, it is just doing the magic. And the shorts was also based on that only. We was away from 200 EMA. So I thought maybe price can, tap this 200 EMA. But on the 15 it tapped, on the 30 it didn't. Anyways, it seems like price tapped the order block on the 5-minute. And now we are just shooting up. And also we are trending, these fundamentals are also aligning with the gold going to the upside. So yeah, I don't see any bearish side. Yeah, we might can, get a short-term bearishness till this is also a level actually. 200 EMA, and then, then still I am bullish on this one. But I think I'm just shorting gold. I haven't really taken long on it. I just took a small chunk of long, but I'm just shorting gold. Just I'm catching small kind of pullbacks. I don't know my strategy, the way I see the charts. I think I'm a good in shorts. In long trades, I haven't really got that much profitability, that much profits. In long trades, I think I have 40% win rate. In short trades, let's say I have maybe 60%. So I have seen in past also. So shorts works good for me. And you were seeing euro dollar. I also see short side moves happening on the euro dollar. And if you go to the daily, the 4-hour, you have this fair value gap, which is not tapped. And this, we might can get a deeper pullback, but I do see downside move. Deeper pullback to maybe this fair value gap. If not this, then this order block. I think 200 EMA will also be aligning with this order block on the 2-hour chart. Yeah, these are some areas which I'm looking at, but I do see euro dollar shorts happening. If you go to the daily, we have a big kind of a fair value gap. We already tapped here. Still kind of a gap to be filled. So I do see price coming here. And even if you see, we are just making lower lows. I just see the recent price action only. That's how I, see the charts. We are just printing lower lows. So I do think we're gonna print more lower lows. Maybe till this support, or maybe we can liquidate this. Then we might can, plan longs or whatever. Let's see what is gonna happen. you took. I was having this area as a wick. this might be another block on the smaller time frame. Yeah. So I was also marking GU. So my TP was here, but I just got involved in euro dollar. But yeah, bias was on the sell side itself. HK118 changed the name.
Yes,
what is
I thought so
97
too. I thought so too. I said
You got some code.
He tried to
Code words.
to mask his name, but we found him. We identified
Yeah.
HK.
Actually, we are planning for a webinar for our Indian audience.
Really?
So viewers who know Hindi, and if you're from India, you can follow our 5ers India YouTube channel, and we have our Indian socials also. So we have support for Indian traders also. You can chat in a local language. So definitely, once everything is set up this week, I will be sharing information on the live stream itself. Tomorrow, maybe we're gonna finalize everything today. So tomorrow, I will be sharing the details about it. So make sure to follow our Indian channels if you're from India. So definitely, you can chat in your native language is gonna be good.
That's awesome. We have a lot of Indian traders here at the 5ers.
Yeah.
So that's amazing news for all of those who are from that part of the world.
Yeah, 5ers is really doing a good job. Like we have a Portugal channel, we have now we have India, and of course in future we can expand. And definitely we are for you traders only. And these live streams, I think back in the days, even in 2020 itself, when like in COVID, there was not a lot of the good streamers or the live stream happening. In this 5ers live stream, like the expectation, the traders who are sharing information with you, they all have done something, like Jonatan was mentioning, a kid, 22-year-old kid selling courses. Nowadays it is a trend, like everybody want to do this anyways, but you are at the right place. That's what I wanted to say.
Yeah, it's I think it's a natural process, right? In every market, you have everyone. When it's a new market, relatively new, I mean, prop industry is, and trading, it's not exactly new, but in the greater scheme of things, it's relatively new when you compare to that to other, options.
Yeah, exactly.
And there's always, people trying to, make the best of it, and I don't blame them for it. But if you want to get real good information, good examples, learn from, actual traders, then you want to be at the 5ers. All right.
Yeah.
Peter,
you
EU short triggered. That's a nice.
I think you are also in shorts. I have a feeling.
No comments. No.
Yeah, that's good.
No, we have we are seeing some reaction, some very nice reaction from EU. I'm gonna switch to that for you guys to see. Whether or not I'm a little bit hesitant to saying, I make a joke out of it, but it's because of I'm doing it deliberately. I don't want to be here giving out signals because I don't think I'm really helping anyone doing so.
Yeah, you are right, actually.
So I want to show you how I do it and how I come to my conclusions and what are possible, perhaps, triggers and signals, and let you decide, let you arm your own system together, because I think that's the value in these kind of situations where you're taught how to fish, not giving a fish each time.
Yeah, exactly.
So we have a H4 order block, as I mentioned. You have to be careful with this trade, of course, because we are at the end of a quite bearish leg. So it's not uncommon for price to push higher from here, even though later on, maybe tomorrow or maybe a couple of days, it might continue lower. There's enough reason for price to have a little pop and take out a structure like this one, like the H4. Even though it's an H4, that's king in day trading. But still, I mean, it's not invincible. Market do that all the time. I do expect price to eventually to reach the much lower levels, but in the short term, you just have to get these opportunities that are, you have an H4 order block, you have an H2, which are further refining the same supply area. And if you go to the 5 minutes, you have an order block here, which is, this is the quasi, right? And here you have the quasi, could be, depending on how you mark the quasi, it could be this one, it could be the other one. It depends on how you mark your quasis. But it does not matter, because it gave you enough reasons to mark it as a valid one. And it broke the neckline, either it's this one or the other one. It broke both of them, and it comes back. There's only two structures, this one and the one above us, that it could, if the market is going to reverse to continue, it could reverse from, right? It could do anything it wants, but these are the higher likelihood areas. And one of them, the market didn't didn't move at all, right? It came in, no reaction whatsoever. You gotta see it on the same time frame, obviously. No reaction whatsoever, and just went through it like a hot knife through butter. And on the other order block, this is the last one. There is a pivot point for those who use this, which is right in that order block, which gives it a little bit more, a better signal when you have multiple indicators indicating where sellers and buyers are likely to come back to the market. And the fact that we had a one engulfing here could be the first sign of a sell market going lower. But as we always say, the market doesn't go in a straight line, right? Even after giving out that little engulfing, it can still go higher, even squeeze this a little bit before it goes down. All of that is still permissible in a normal reversal, right? It's not exactly the way that you would think, like the first signal, the first sign of sellers coming in and taking over, that breaks it all. There is something here that I don't like to see, which is that you see those lows being higher. That's not a bearish sign. That's a sign of support, meaning the market is, yes, it did have a moment there where sellers took over, but it's not having followed through, because otherwise it would be making lower lows. That's one minor cue right there. And if you look at the H1, this is not looking that it's ready to move yet, right? So the whole thing that the whole process that I go through is top-down analysis, where when you're getting ready to get into the market, when you already identify the areas that the market is likely to react from, then it needs to behave a certain way, right? Price action needs to switch where sellers are taking control, and that's not making higher lows. That's one thing. So it might not be ready yet for that reversal. That's one thing. And you'll have to be patient as long as the market doesn't close on the 5 minute above this area, meaning this is the upper border. As long as it's within that area, it's still on the table, a possible reversal, right? Possible meaning, don't marry the trade. If it doesn't work, walk away and try it another time. All right. I'm gonna go over the GU trade that I was talking about. This is GU. Similarly with there wasn't anything on the daily, although the only thing we have is a order block below us, on actually an entry order block on the quasi, which I believe the market is going the same way as with EU. The market is going to go there before we have a significant reversal from where we are currently, right? We could have a little pop, but we'll likely have a much bigger move when we reach this order block. So it's not a signal, it's not a bias insofar, but it is slightly, my expectation is slightly to bearish for this move until we reach this area, which we haven't reached yet. On the H4, we had a yesterday we had, let me mark this. Yesterday we had an order block which was created on, was being retested, which is, let me see if it's, I think it's not even there anymore. There. That's not it. It's this one. No, not either. Okay, so it's this one. Yes. So we had a H1, I'm sorry, an H4 order block, which is this one, got retested early morning today, right before London, got retested, and that's the beauty of a reaction, right? And it went, that was such a beauty trade. If you go to the H2, you'll find the refinement, even though it didn't refine it as tightly as you would have, I would have wanted. There's also an H1 structure. Let me see. I marked it as an H1, and it didn't reach the H1, but nonetheless, there was this one. It was also an H1 quasi, which I didn't use. I used the H2. That's depending on everyone to decide for themselves what structures they use and what sequence and whatnot. That gave me these two areas, right? These two lines. That's the area that I want to be looking for reversal whenever we reach back to that area. And we did earlier, as I said, and that's the moment that's the same area here, right? I'm waiting for price to get in. We reached it here and created let me zoom in so you go to the lower time frame so you get an idea. We reached the area here. I'm going to extend also the line so you can see what I was seeing back then. Right here, right? So once we get to the area, that's when my radar starts popping up. That's the moment that's when I get activated to start looking for the reversal, right? So you have the left shoulder, the head on the lower time frames, the neckline. I wait for it to break the neckline here first, and then come back to the area of interest. And that's you don't have to. I'll mark it here. That's the neckline of the lower time frame quasi. This is the 3-minute quasi. Let me see, mark it right here, right there, and you can see how the market, the same way it reverses on the higher time frame, it does it on the lower time frames as well, right? It reaches this area. Remember that yellow line is the bigger area I indicated with the H4, H2, H1, which gave me my green light to start looking for the entry, the execution time frame on the lower time frame, where we have an established uptrend on the lower time frame. This time it was on the 3, but you can have it on the 1, the 2, the 4, the 5, whatever time frame, even the 15, whatever floats your boat, and you have data on. Established uptrend, it breaks that neckline, comes back for the retest, that little order block, boom, gone, never came back, and went straight to target like nothing. And that was based on, the target was based on another structure on the left side, which is, this, when we have trades like this, it looks like it's trading is easy, and this seems easy, but obviously there's a lot going in, and my win rate isn't very high either. So that's something I need to say always when I show these trades, because this is not every trade doesn't go this way, it doesn't work this way, but this is the ideal kind of situation where the market responds beautifully, picobello, to the opportunities that you saw in the market. So awesome. Let's take a look at EU to see how that played. We are at the end of our stream. How did that happen? I just started. We're at the end already. I'm just getting started.
No worries. You can continue tomorrow. Another day.
All right. So, okay. So now you see market is, making, that's no longer the case. It is having a reaction, right? You can clearly see the impulsive move here, right? And you have a sort of a deceleration. Look at the rate of climb is less sharp, and now we're actually going kind of sideways and going slightly to the downside. So there is a reaction to that structure, and you have to, each one of us need to have a structural way, or you can call them entry model, a structural way to approach when do you decide this is an entry short or not. It got to the area of interest. Now it is, you have to just have rules. What is a signal to you, and test it and apply it if you find that it is what you need to be looking for. But that's it for us for today. Any last words, Samir?
That's it. Thank you, guys. Thank you for coming. And make sure to follow our Indian channels. If you're from India, that will be great help to you guys. If you have any query, so you can just, we have Telegram and we have official Discord. In the Discord itself, we have a Hindi channel. So make sure to check that out. And thank you, guys. Thank you.
Perfect. We have a little request for everyone who's watching us. Maybe you forgot. Maybe you forgot to check if you're a subscriber or not, but please do check right now. Double check that you're a subscriber, because if you're watching, it's likely because you enjoy it. And if you enjoy it, then probably more people would enjoy it as well. So, and you help other people and us as well if you hit the subscribe button, because that will give the algorithms of YouTube, the needed signal that they need to show it to others as well. It's a suggestion so this community can grow and more people can get real market insight live from us. There's also a Discord session that I'm going to be holding in about 40 some minutes. You're all welcome to join. It's completely free. You only have to have an account with the 5ers. Go to the hub, left lower corner. That's your portal, your entrance to the Discord community. Great thing to be to join us if you have a chance. And that's it. Hit and subscribe, and join us tomorrow again for another episode of Live Trading with you. Bye-bye.